1,000 crore rupees via equity and debt. Promoters are expected to participate. Zee expands the scope of its recently constituted independent advisory committee to include an investigation to review the allegations levelled by regulators and other parties. And India's economy may surpass that of the US as well as China, according to John Chambers of Cisco. He says this in an exclusive conversation with NDTV Profit. Now, in the top international news, US consumer confidence fell in February for the first time in 4 months. That's as expectations of consumers on the outlook of the economy, the job market and financial conditions deteriorated. The confidence gauge, of course, is part of the conference board is offering, and the sentiment has decreased from 106.7 from downwardly revised 110.9. It is decreased to, rather, 106.7. That's, of course, according to data that was published yesterday. The decline in sentiment interrupts a recent upswing in optimism that has been tied to more improving inflation views and a solid job market that has seen improved consumer spending. And you see separately, of course, that there is another big story that we're tracking. Apple is cancelling its decade-long effort to build an electric car. It is abandoning one of the most ambitious projects that has been taken up by the company so far. The firm made that disclosure internally, which according to Bloomberg came as a bit of a surprise to the 2,000 employees that have been working on that project. Turning to international markets, signs of consolidation continue in global equities. US stocks ended mixed, with the Dow closing lower by about 0.25% and the other two benchmarks gaining between 0.2 and 0.4%. Dow futures right now indicating a bit of a negative start to trade today. But that might change, of course, over the course of the day. And you have the three early rises in the Asia-Pacific region that started in the red. And of course, a few more markets have opened up. Broadly, the tone and the tenor of the market breadth seems to be one of consolidation. We've got the cues from the F&O space to look forward to in the Indian markets now, and Agam is joining in to give you some perspective on that. Agam, morning. We're looking at consolidation for the first half of the week so far, the first two trading sessions. Does that continue today?
Yes, it's been a surprisingly quiet week, Alex, considering it is the final expiry week of the month as well. And we haven't seen too much traction, and the indices are largely trading where they have been and they were last week. At the moment, of course, the Nifty once again trying to test the 22,200 mark, and that has been a little bit of a resistance of sorts, at least on its way upwards. But we also have seen a significant amount of unwinding coming through. For the Bank Nifty, it was flat yesterday. The 46,000, 46,500 mark continues to be a range, even though we saw the Bank Nifty close above that yesterday, and unwinding coming through there as well on account of expiry week. But in terms of how the options are panning out, at least as far as markets yesterday were concerned, we saw a lot more writing activity around the 22,000, 22,100 and 22,200 puts. Of course, this also gives you a little bit of added support for the Nifty, at least in the near term. On the higher end, we are continuing to see a significant amount of build-up around 22,500. I reckon that may, in fact, be a resistance of sorts as we move into tomorrow's monthly expiry. Let's not forget that while the indices have remained flattish over the course of the last few days, we must remember that on an intraday basis, things have been pretty choppy, and we cannot rule that out today, nor can we rule that out tomorrow. All eyes will be on tomorrow's big expiry, Alex, because we have seen some gains come through in February, and but not ruling out volatility just yet.
Absolutely. Thanks so much, Agam, for bringing us those details. One of the stocks that will likely be in focus today is Vodafone Idea, and that's because the board has approved fundraise of 20,000 crore rupees from equity, and that is part of an overarching plan to raise over 40,000 crore rupees. And we've got Smriti joining in to give you some perspective on that. Smriti, is one thing to have board approval, and of course the next thing will be shareholder approval, which will be sought, I believe, in April. But the question is, will they be able to raise this kind of money?
Well, good morning, Alex. You rightly mentioned that the company does plan to raise these funds, and they're going to have an EGM in April to get the shareholders' approval for the same. Now, they plan to raise 20,000 crore from equity and equity-related other securities, and rest of it, that's 25,000 in debt, will be raised post that. Now, they also expect the promoter to put in some capital through this fundraise, and previously promised, the promoters had said that they are willing to put in 2,000 crores into the company if needed. So it's likely that that will be part of the fundraise as well. Now, they say that it will be used to the funds towards expansion of 4G coverage, 5G network rollout, and capacity expansion. However, if you look at the debt of the company says that their debt currently stands at less than bank debt currently stands at 4,500 crore. Out of this, 3,200 crore is due in FY25 itself, and the total debt in FY25 will be 5,400 crore, and for FY26 it will be around 30,000 crore. So it looks like if you compare the debt position versus the fundraise that's happening, it comes out to be pretty close. So about 35,000 crores in debt that will be due till FY26, and 45,000 crore that they plan to raise through equity and debt.
Absolutely. And also the dues to Indus Tower to consider, and that counter also to watch for. Thanks so much, Smriti, for getting us those details. Speaking of fundraising plans and cash-strapped companies, Byju's is expected to go ahead with its $200 million rights issue today, and that's after the NCLT reserved its judgment in the case filed by 4 investors. We've got Rishabh joining in to give you the latest details here. Rishabh, source-based information that you've picked up, and I believe this is exclusive information as well. What can you tell us?
That's right, Alex. What I'm hearing from my sources is that the Byju's $200 million rights issue will proceed as per plan. Now, this is despite a major petition that was filed by 4 of its major investors, which were Peak 15, Partners, Sofina, General Atlantic, and one more. And it will go on as per plan, despite the NCLT petition. Now, why this petition is important is also because these investors have alleged that Byju Ravindran was involved in financial mismanagement, and they deem him unfit to run the company. But what this $200 million will do for Byju's is to give it a runway and also clear a lot of its debts that it has accrued over the past few years. Investors also drew attention in their NCLT petition to a substantial reduction in Byju's market value, and also they highlighted the oppressive pricing nature of the rights issue. And though these 4 investors and these major investors are likely to skip the rights issue, sources do tell me that they will that the portion that's reserved for them will be open to other existing participating investors. So we do expect a formal statement coming in from Byju's later this day, and we will keenly track this.
Absolutely, and we'll come back to you for more details there. Now, we have to slip into a very quick break, but before we do, take a look at this. John Chambers, who is a former official at Cisco, says that India will surpass both US as well as China in the next half century. Listen in.
India's population is going to have the fastest economic growth, not just for the next 5 years, but with the plans and programs your Prime Minister is putting in place now for the next 20 to 30 years. Assuming that you have the courage to continue to take risks and be critical of yourself on it. You look at the population growth, average age 26 or younger, average age in China aging rapidly in terms of the direction. China's population going from about 1.4 billion to 800 million. With a much older population. India's going from 1.4 billion to 2 billion. The ability to do the education with the speed, the optimism, the entrepreneurship. China's issues are self-inflicted. They got away from reasonably free enterprise. They got away from startups. The government started to get involved in almost everything, put regulations in place, put a win-lose mentality versus the US and much of the rest of the world. It doesn't surprise me they've slowed down.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf
Welcome back. You're watching All You Need to Know. Let's focus in on some of the stocks you have to watch out for in trade today. And Mahima is joining in with the first list to talk about. Mahima, morning. What's on your list today?
Morning, Alex. The first one on my list is Z, where the board has constituted an independent investigation committee for the allegations that the regulatory authorities have put on the company, the key manager personals as well. The investigation committee will conduct a deep dive to safeguard the interest of the shareholders as per their press release, where the investigation committee will submit a report to the board with recommendations and actions that are required. They'll suggest this to the board. And lastly, the investigation committee can also appoint or hire any other independent agency outside for assistance. The next one is Hindustan Zinc, where it forays into mineral exploration. They formed a new subsidiary called Hind Metal Exploration Services Private Limited, and this is to upgrade the ore reserves and mineral resources. Now, this is in line with GOI's mission to make India self-reliant, and the subsidiary has an authorized capital of 10 lakh rupees. The aim is to explore, discover, develop, and tap mineral resources, and this also includes participating in auctioning of mining blocks and containing critical minerals. The next one is SJVN, where the company's wholly owned subsidiary has backed a 100 megawatt solar power project, which is awarded by GUVNL, and this with a tariff at 2.64 per unit, and the PPA has been signed for 25 years from now on with GUVNL, and the estimated cumulative energy over 25 years, they will generate approximately 5,805 million units, and the next year target would be around 252.3 million units. Moving on, we have lastly Cochin Shipyard, where the company will inaugurate a hydrogen fuel cell ferry, and this is to be inaugurated in a virtual mode, and it will be inaugurated from Thoothukudi. So these are the major stocks to watch out in trade today.
Absolutely. All right. Thanks so much, Mahima, for getting us those details. We've got more stocks to watch, and the likes of Industar Capital as well as Salasar Technologies to talk about. And Harsh is joining in to give you some perspective on those. Morning, Harsh. What do you have for us?
Morning, Alex. Let me first start off with Indostar, 450 crore capital raise. It's a pref issue, mind you, and you've got a solid set of investors, the likes of Brookfield, which has invested, Brookfield AMC, as well as Tree Capital also seems to have invested 5% higher on the stock yesterday. 450 crore to be raised. Current market cap roughly 3,000 crore, 250 crore coming in from Brookfield, 200 crore from Tree. That's the general nature of it. 184 bucks a share. Current price 220 rupees. So that's all that you need to know on that one. Let me quickly take it to GETND. That one has won an order of 370 crore. How material? Well, 800 crore is the broad quarterly revenue currently. That's the revenue run rate currently. It's a order by Power Grid. Annualized revenue of this company roughly 3,000 crore at the moment. So 370 crore looks decently significant. You're looking at shunt reactors for transmission system projects, which they need to supply to Power Grid. Last off, I have on my list Salasa Techno 200 crore order. Now this is substantial because this one's quarterly revenue is roughly 300 crore, annualized revenue of roughly 1,000 crore. So this one will be major. May see a reaction, of course, have to wait and watch on open.
Absolutely. Thanks so much, Harsh, for getting us those details. Now, we've got several bulk and block deals that took place in trade yesterday. Let's talk about some of them because some of those details have emerged. We've got Varsha joining in to give you some perspective on some of those. Varsha, what can you tell us? Morning.
Good morning, Alex. So let's start with CMS Infosystem, wherein Sion Investment Holdings sold almost 27%, that's their entire stake, which at 370 a piece. Among buyers, the key buyers were ICICI Prudential Mutual Fund, who bought almost 3.5% of stake, followed by Nomura Funds. Then even Kotak Small Cap Fund bought almost 2.75%. Then we have ICICI Lombard General Insurance, wherein Bharti Enterprises sold almost 1.27% of its stake. As of December 23, the stake was 3.7%, and ICICI Bank bought 1.27% at a price of at the same price, of course. And as on December 23, ICICI held almost 48% stake. Now, ICICI Bank said that its board has approved an increase in shareholding in the general insurance company by up to 4% in multiple tranches. Then we have BLS International Services, wherein Columbia Petrochem bought 0.5% of stake at 373 apiece. Then we have Sapphire Foods, wherein Wellington Trust sold 0.5% of stake. As of December 23, the stake was 1.95%. Lastly, we have Senco Gold, wherein SAF Partners India sold almost 0.77% of its stake. As of December 23, their stake was almost 11.6%. So these are all the bulk and block deals.
Got it. Thanks so much, Varsha, for getting us those details. Dreamfolks is a counter that we're talking about next, and this is on the back of an initiation of coverage by Motilal Oswal. They've initiated coverage with a buy rating, and in fact, the target price is quite a significant upside to the current market price. Kanika is joining in to give you the rationale as well as the target price. Kanika, what does Motilal have to say?
Good morning, Alex. So as you rightly said, Motilal Oswal has initiated coverage on Dreamfolks with a target price of Rs 650 and a buy rating. Now this implies an initial potential upside of 34%, and this valuation is based on projected FY26 PE of 30 times. It expects benefits from rapid growth in the Indian airline industry, and this growth would be driven by rising leisure travel, competitive fares, new airports and government push. The increasing adoption of bank card with lounge access as a key benefit is boosting the pay-per-use revenue model of DFS, and it expects strong 20% revenue CAGR of over FY24-26E despite the rise in airport charges. Additionally, international expansion is believed to be a multifold opportunity from the viewpoint, and there are some key concerns for investors, namely high dependence on travel industry, then potential saturation of Indian markets which could impede the company's growth prospects, and the threat of ongoing escalation in airport charges which will negatively impact the gross margins of DFS.
Right. Thanks so much, Kanika, for getting us those details. An update from the Supreme Court. Yesterday, the Apex Court restrained Patanjali Ayurved from advertising medicinal products manufactured and marketed by it that aim to address diseases or ailments specified in the Drugs and Magic Remedies Objectionable Advertisements Act. This act, by the way, prohibits misleading advertisements for drugs and also the advertisement of magic remedies for the treatment of certain diseases and disorders like obesity, asthma, diabetes and cancer. The top court served a contempt notice to Patanjali and Managing Director Acharya Balkrishna for publicly disobeying its orders, as the company had in fact continued to run its ads even after giving an undertaking that it would stop those ads. Let's very quickly take you through most of the Asian markets which have opened right now, giving you a little bit of a perspective of the direction that trade is taking today. And consolidation seems to be the name of the game even in the Asia Pacific region. You have the Nikkei 225, which is trading with cuts of about 1/3% or thereabouts, and you have the Australian benchmark that's lower by about 0.2%. But you have Shanghai and the onshore market in China, which is open in the green, but marginal gains there, just about 0.2%. In fact, at this juncture, it's trading as much, it's trading flat. You have Hang Seng that's trading with cuts of about 0.3% or thereabouts. We're likely to see a lot of economic data over the course of the remainder of the week, and that is likely to have a bearing on international markets. As things stand, you have a positive open that is likely for the Indian equity markets. Let's see if that holds true for the start of trade. Now, we've got an interview that my colleague Maitri Sheth did with the president of Marriott International, Rajiv Menon, and they spoke about religious tourism and the company's outlook going forward. Where at the end of this particular edition of All You Need to Know, we leave you with a slice of that conversation.
Marriott International, as you know, has 17 brands that we operate in India. In fact, one of the largest brands that we have is Fairfield by Marriott, which is in the upscale space. We have about 27 Fairfields open and another number of Fairfield by Marriott hotels under construction. Similarly, little higher in the upper upscale space, we have Courtyard by Marriott, 4 Points by Sheraton. We have a number of these hotels open. But specific to religious tourism or pilgrimage destinations, we see great opportunity. In fact, this year we will open the Katra Marriott that is on the way to Vaishno Devi. We have a number of hotels operating in Amritsar. We have already signed last year a Marriott hotel in Ayodhya. We have a number of other conversations going on with our partners in terms of other pilgrim destinations across the country. And as these deals get signed, we will announce those. But I remain very optimistic about the potential for growth in religious tourism over the number of years. Yeah.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by Local Circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money? Hello and welcome to India Market Open. It's midweek and we're gearing you up for trade. You've got 2 days to go before expiry. The market's, of course, aiming for it to be a good one. Yesterday, though, didn't seem too bad, guys.
Yeah, and if you were a Bitcoin watcher, it didn't seem too bad this morning as well. 57,000 and counting on that one. I'm stuck with Bitcoin somehow.
Yeah, I think you've made some very good investments at the right time.
How I wish. How I wish.
No, but you know, on that note, the fact is that global cues were not really saying much either way. In the Gen Z lingo, it's meh, as they say. But, you know, there's that wait and watch mood. Nothing too negative, nothing too positive. Consolidation phase, perhaps, when it comes to Wall Street. A tepid movement all around. Wait for you know, the kind of data that will give the next leg of direction. So you saw that cautious mood on Wall Street. Very small gains, if at all, for the S&P 500 and the Dow. Most of them flat. Nasdaq slightly up in the green. You see what the 10-year is also doing, and small slide up ahead of all of that data which is coming in. Interesting moves on crude that we saw, and you had a statement from Biden saying that he expects by March 4th there will be a ceasefire. There is an agreement that in Gaza there will be a ceasefire during the holy month of Ramadan. So that might see crude cool off a bit. There's also this anticipation that OPEC Plus will extend their production cuts for the next quarter as well. So that would be the next driver as far as crude is concerned. On the Asia front as well, not too many major cues. We should pull up though and see what the Nikkei is doing, because after hitting new highs every day, a bit of consolidation this morning, a bit of pull up, but mixed cues from Asia. So I'm not sure that there are too many cues from global markets that Indian investors will take today. Let me just pull up fund flows also while we're at it, because yesterday DIIs were buying. FPIs continue to be sellers in equities, not in debt though, as Samina will tell you in just a bit. Debt is a whole different story, but on the equity side, FPIs continue to sell. Yesterday about 1,500 crores, DIIs bought about 2,800 crores. So the big movers and shakers perhaps will not be taking global cues today, Neeraj. It will be based on the domestic stories.
Yeah, most certainly. And even on the domestic story, you know, here's some, I was just thinking, because yesterday we spoke about how the market is this narrow candles almost every single day. So I was trying to think about what's happening over the last 2 months and practically nothing. But the interesting small data point. So is it a buy on dips market? That's the question that a lot of people ask. And here's some data to kind of exemplify that. Look at the Nifty levels on the 15th of Jan, we were at 22,097 on a closing basis. We scaled down to 21,238, eventually at about 21,616. So if you take a 1 month account of Jan 15 to Feb 12, around 1 month, we dipped about 600, 650 odd points. Look at what happened in the next or the subsequent week. From Feb 12th to Feb 16th, we scaled back the entire 600 points. So it's just taking a very little time to swiftly pull back on any kind of downticks that are happening. Is that why the larger populace believes that this is a buy on dip market? Maybe so. I mean, so it's an interesting thing. It's too short a time frame, but it's something that we observed most part of the last quarter of calendar year 23 as well. It is devoid of large volatility. If you look at the VIX numbers between 14.5 to 16.5, so hardly any moves there. Even today, if PCR, for example, is at 1, exactly 1. So there is no difference between the call writers and the put writers on the Nifty sentiment. And that's why the index is fairly flat. Maybe that's why guest after guest who is coming on the platform or the channel is saying that we are not trading the index, we are trading other things. And what are they trading? Well, amongst other things, real estate certainly seems to be right up there. Was the best performing index last week, was the best performing index yesterday as well. Giving company to real estate was infrastructure. And a clutch of infrastructure stocks had a really smart move in trade yesterday. Look at a KNR Construction, PNC Infra, GR Infra, Ashoka Buildcon, 2-3-4%, the kind of moves that came into for each of these stocks. But you know, the KNR was up about 5% in trade yesterday. We have this table, if I'm not wrong, which shows KNR, PNC, GR, Ashoka, and just the kind of moves that they had yesterday. Very strong moves in the session. So maybe from an equity side, infrastructure also becomes a pocket to watch. But clearly, Samina, there is lots happening on the debt side as well.
Yeah, and you talked about infrastructure. There is an interesting INVIT that opens today. We'll talk about that in a minute. But yeah, debt markets. So while we've been talking about how FPIs have been selling out of Indian equity markets and the rupee hasn't been declining. So you might have noticed that despite foreigners selling equity markets, the rupee has actually remained fairly stable. It's only down 0.4% for the month of Feb. Now, why is that happening, right? So while there is a sell pressure coming in from equity markets, guess what FPIs or foreigners are buying? They're buying into the Indian debt market. Indian debt market record inflows coming in from foreigners stands at a 6-year high. So for the month of Jan, they bought debt, Indian paper, to the tune of $2.5 billion. Feb, we're almost at the end of Feb, they've bought about $2 billion of Indian paper already. Now, this comes in on heels of India's inclusion in the JP Morgan and Bloomberg index. Both these inclusions will draw funds to the tune of $30 to $35 billion in the Indian equity, in the Indian debt market over the next 10 months. A couple of factors that you want to keep in mind when you read all this information. Very slowly and gradually, passive funds have been buying into the Indian debt market, not just in Jan and Feb, but this really started in October, and hence it's very easy for us to collate the fact that this is happening largely on back of this inclusion. What does this do for the currency? Remember, the RBI has been very active in managing the currency historically. The rupee, like I said, has declined very marginally, and it's been the 3 least volatile currencies in 2023. And 2023 was a tough year for a lot of currency markets. What are we expecting? We're expecting that the rupee may continue to remain range bound. Even though you have $35 billion of funds coming in over the next 10 months, the rupee is not expected to appreciate too much. A stronger rupee doesn't do well for a country like India. Like Neeraj and Taman had indicated yesterday, one big reason Japanese equity markets have been doing well is because of a weaker yen. Very similarly, a stronger rupee will not garner well for Indian equity markets or Indian exporters, and that's not good news for the RBI. And hence, while you're seeing this big chunk of money coming in, the rupee will continue to remain fairly stable and may see a little bit of depreciation over the course of the next 8 to 10 months. So that's the debt market, but we've got a whole lot of stocks as well, I believe. So yeah. A quick check on implied Nifty before we move on to equities and stocks that you want to track this morning. Vodafone Idea is stop recall. We've talked about this for the last few days, but that's implied Nifty indicating to a flat start. So don't expect fireworks in trade this morning. It's been a tight range. It's been stable actually. And I think that's what investors will be taking heart from. Traders, of course, finding it hard to find opportunity in a market such as this. Well, on Vodafone Idea, the board has approved an equity fundraise of 20,000 crores. Now that's a huge sum of money coming into a company that is cash trapped and finding it hard to make ends meet. Who's giving the money, when this money is happening? Of course, we'll take you through all that and talk to an analyst to understand what this means for the telecom sector, what it means for Vodafone Idea and Indus Towers as well. They've also said that they're looking to raise 45,000 crores via a combination of equity and debt. They've also made commitments that they may be able to complete this fundraise by the coming quarter. The fundraise will be used to increase their coverage of 4G, 5G network rollout, capacity expansion, and of course, running an operational use as well. The promoter will be participating in this fundraise. Remember, the promoter has been very clear in the past that they're not looking to exit Vodafone Idea, even though things are looking tough at this stage. What will this mean for Indus Tower? Their receivables will hopefully come through, and that could garner well for the company. Just a quick word, Indus Tower has entered the NSE ban list as of yesterday. So this morning, you will not have an opportunity to trade this one in the F&O space. So just a word on that. Well, Z is back in the news. They have been in the F&O ban for the last few days. Very stable moves. You're not seeing too much happening on that stock. It trades close to 173 rupees. I guess no news could also be good news for this one, but this morning they've once again reiterated what they said yesterday, that they've approved, the board, we believe, has approved a committee to strengthen. The committee will, of course, look at it, be an independent advisory committee, which would include investigation, assessment. That is going to be the primary responsibility of the company. So now, whether or not this means anything for the stock, but it is a news point that we are highlighting for you this morning. Another smaller one, but worth a mention, because counters like these usually react to order wins such as this. GE and TD. The company has secured an order worth 370 crores from the Power Grid Corporation of India for the supply of 765 kV shunt rectifiers for various transmission system projects in India. The stock will be up and about in trade is what we're expecting on back of that pretty big order win. But I'll toss it over to you guys and then talk about the INVIT that opens this morning that I'm quite excited about.
Yeah. Clearly, and both big stories. Vodafone, of course, will be talking about in a lot more detail. That 45,000 crore target is the big one. I just wanted to point out one thing on Vodafone. From FY25, their AGR bills begin. Remember, they had a moratorium, but they still have to pay it. FY25 onwards, they have to pay 5,000 crores. In FY26, it's about 30,000 crores. So even if they do end up raising 45,000 crores through a combination of debt and equity, they are going to be presented with a bill of 35,000 crores, which will go to their largest shareholder, which is the government of India. So how does that all pan out? We'll have to see. And just a quick word on Z. We spoke about it before. It's the same advisory committee that they announced a couple of days ago. They've rebranded them as the investigation committee. The same questions emerge, that if it's your committee, your guys, are they going to really investigate allegations of wrongdoing against yourself? So I don't know if that's going to really give a lot of confidence in terms of the corporate governance issues that he is facing. But Patanjali is the other one which was in the news. So the Supreme Court has made observations and come down quite heavily on the Ayurveda business of Patanjali, saying that you're making claims which are incorrect, misleading advertisement, etc. What we want to clarify is that this will have no bearing on any kind in terms of revenue, business hit, etc. for Patanjali Foods, which is a separate listed entity. And I thought it's important to make that clarification that Patanjali Foods is a separate business altogether. I don't know if there's going to be a sentimental hit or not, but definitely a stock to watch. SJVN is the other one, and as renewables, solar continues to be the flavor of the season. SJVN is in the news because they've bagged a 100 megawatt solar power project at a tariff of 2.64 rupees per unit. This is with the Gujarat Urja Vikas Nigam, and the cost of the project is about 642 crores. So SJVN may be in focus once again. The stock was up yesterday as well. All cargo logistics is the other one I want to talk about. And, you know, we've been consistently mentioning the Red Sea crisis, the Red Sea crisis. What is it actually doing to companies? So they've come out with their monthly business update, which is definitely showing impact. It's delayed shipments for all cargo logistics. The volumes have reduced by 3% for the month, and the biggest hit in terms of volumes is in LATAM, Europe and America. India volumes, though, have increased in Jan. So you might see a further hit on all cargo logistics. They were down about 2% yesterday. But you know, a few more on your radar, Neeraj?
Yes, there are a few stocks. So for example, this one, Torrent Power could be an interesting one in the session today. So it's emerged as a successful bidder for a transmission project in Sholapur, the project to evacuate renewable energy with a capacity of about 1,500 megawatts, and that's a large one. It's also one of a kind thing that Torrent Power has gotten into because they are getting into the transmission project for the first time. It entails setting up a transmission line of approximately 44 kilometers. So this could be interesting for Torrent Power, so do watch out for this one, a key stock to monitor in the session today. From amongst the brokerage notes, and there are various notes on Vodafone Idea, Bharti Airtel, etc. But I thought the Dreamfolks note from Motilal Oswal was interesting. They've initiated coverage with a buy rating and a target price of 650 rupees per share. They expect benefits from rapid growth in the Indian airline industry, expected strong 20% revenue and 28% PAT CAGR over FY24 to 26. So this is the other interesting piece as well that they are talking about. 28% PAT CAGR is really interesting. And well, they are venturing into international markets, according to Motilal Oswal, as a lucrative long-term opportunity. So do keep a keen eye out for this one as well. So Dreamfolks is certainly something that one should keep a keen eye out for. The last one is BLS International. Columbia Petchem has bought 21 lakh shares at 373 rupees per share. It's an entity associated with Aditya Kumar Halwasia, who recently bought a large stake in TFCI, you remember, and associated with many other large investments. So it's just the name associated with this bulk deal in BLS International, which may evoke a response. So do watch out for BLS. Was up about 2% in the session yesterday. Let's see if there is more in store for BLS. And of course, there is an eye out for the delivery-based buying that we saw in a clutch of stocks like Uniparts, Railtel, Mahindra Logistics. Look at the kind of price and volume action that we saw in most of these. Ganesh Housing, interestingly, was up 10% day before yesterday and was up about 5.5% yesterday as well. So 3x the 1 month average, but up about 16-17% in the last 2 days. So do watch out for some of these stocks. Could be interesting. ICICI Lombard too. Yes, ICICI Bank bought into it. And that's why the volumes and the price activity yesterday. Could it do an encore? Remains to be seen. But an interesting move in some of these stocks.
Even some of these defense names were looking pretty good in the charts. So your BDL, HAL all had a pretty solid run in trade, and on charts they seem to be ready for a breakout. But we'll talk about that and more with our analyst in the next hour. But one interesting piece that has been around for a while, and these are infrastructure investment trusts, more popularly known as InvITs. Now, these have been around for a very long time, but they're recently gaining popularity, one with ultra HNIs and also with retail investors. So if you're looking to play the India growth story, the proxy of all these order wins, road construction, port construction that we very often talk about, the one other way to do this, besides buying an equity stock or investing in an infrastructure mutual fund, is actually investing in an investment, which is an infrastructure investment, more popularly known as InvITs. Like I said, InvITs are very similar to mutual funds. They are traded, the only difference being that you can actually buy, and they're bought in units, just like you buy mutual funds. The key difference between an infrastructure mutual fund and an infrastructure InvIT, or an infrastructure investment trust, is both of these, while a mutual fund can, of course, invest in various assets or equity companies, and InvIT can only invest in infrastructure projects. Their payouts as well are different. They pay out a dividend. They go into projects that are completed by regulation of the SEBI. So a lot more safer, a better risk-reward ratio, and also a lot more liquid. Why we are talking about this is because there is Bharat Highway Infrastructure Investment, which is an InvIT. The IPO opens today and closes on the 1st of March. They've already raised 825 crores through a bunch of very big investors, institutional investors largely. The expectation is that this one will open today, garner 2,500 crores from the public markets, and will look to list in the first week of March. Interesting, if you're looking at playing this sector, if InvITs is something that you're looking to diversify your portfolio with, this might be a good one to consider, guys.
And talking about IPOs, Juniper also debuts today. Juniper Hotels IPO. It's a tie-up between Saraf Hotels and Hyatt, and 1,800 crore IPO, 360 is the issue price. It was subscribed 2 times on its final day, so that's one to watch out for. But the stock of the day and the story this morning is definitely the telecom sector and Vodafone idea. Now, will they, won't they, how much money will the promoters put? All of this has been impacting the stock price over the last few days. And really the big question is that can Vodafone Idea get a new lease of life? Remember, it was a ventilator of sorts before the government came in and actually, kept it alive because you didn't want a duopoly in the Indian telecom sector. Now, what's happened yesterday is a board meeting where they've approved a fundraise. They're going to raise 45,000 crores in all. About 20,000 crore rupees of that is equity, and the promoters will participate. We don't know to what extent. The rest is going to be in debt. They plan to raise at least the equity portion of it in the first quarter. Can they raise that kind of money right now is the question. Kunal Bajaj, CEO and co-founder of Cloud Extel, is with us on the show to give us his perspective. Very good morning, Kunal. Great to speak with you on NDTV Profit. Let's begin with your take of the figure that has come out of the board meeting yesterday, and 45,000 crores and all 20,000 crores of that equity. Do you think it's doable right now? Is it overambitious?
Good morning. How are you guys today? And thank you so much for having me on this morning. Certainly, I think, Vodafone has been at this for quite some time now. They would have certainly spoken to all the relevant investors. And because we've been hearing this news come out in bits and pieces and drabs over the month saying that, the fundraise is right around the corner. So I think it's very positive that finally they've had a definitive board meeting where they are talking about the specific numbers, approving it. And also we've been hearing a lot of good messaging from the promoters that, they're not walking away from this. So they're ready to participate from an equity level. So it looks like the light might finally be there at the end of the tunnel.
Does it matter how much the promoters put in and how many external investors come in? Because that's the hitch, right? They've been hunting for external investors for a while. And they really haven't seen any big player come and put their might behind Vodafone. In fact, a Nomura note out this morning that have kept their rating to reduce. They've maintained a target price of 6.5 rupees and say it's positive if they're able to bring in external investors. How key is that in your view, Kunal?
Yes, so I do agree with that, because at the end of the day, even with promoter participation, we know that the promoter participation is going to be limited. So the 45,000 crores that we're talking about, of which, as you mentioned, 20,000 crores is equity, that's okay for now, but that's not enough, for what is really going to be required from a debt repayment perspective, as well as from a CapEx commitment perspective over the next 3 to 5 years. So this is not a one-time thing which we need to look at. We need to look at what is going to be the commitment to fund and strengthen and reinvest in VIL over the next 3 to 5 years. And only if we have that consistent commitment that's going to continue to be there, will we expect them to be able to really bounce back from the situation that they're in today. So I think that's why external participation is quite important.
Kunal, dues that Vodafone will owe is 5,400 crores in FY25 and 30,000 crores in FY26. That's over 35,000 crores that's payable over the next 2 years. Now, if you're looking at a fundraise of 45,000 crores, how is that math going to work out if the big push is going to be towards expansion? And that's the need of the hour as well.
Yeah, no, I completely agree with you, right? And I think that's exactly the point, that this 45,000 crores is just a start. Even if, like you said, you look at just the debt amount, 40,000 crores due in the next 2 years, of which 95% is also due to the government. So unless the government steps in and decides that they are going to further enhance the support in the package, which they have already extended to the telecom sector, or which they may specifically have to extend to Vodafone, then yes, it's certainly not going to be enough in terms of the mathematics, because in addition to this, they have vendor dues, plus they haven't yet started the 5G rollout. But I think that's exactly to the point that was being made earlier. If you have an external financial investor or strategic investor that comes and participates in this, then that will show a longer term commitment, because no financial investor is going to come in thinking that, I'm only going to put in 20 today or a certain amount today, and that's going to be it. Because I think everybody realizes that this is a long journey for Vodafone to get back out of the situation that they've gotten themselves into today.
Kunal, one quick question. I know part of the fundraise is going to be through debt and part of it is going to be through equity. Now, getting external investors may or may not be challenging. From the look of it, it doesn't seem like it's an easy task. And the timeline is next quarter, which makes it even more challenging. Assuming that they do go out and raise the equity, the rest of it is raised through debt. Is the cost of funding going to be something you want to watch out for? Because getting the money is one thing, but getting the money expensive is only going to make this tougher, looking ahead for the next couple of years.
Completely agree with you on that, because you can't raise debt in such a way that you end up making the hole bigger for yourself, right? So today, I think one of the good things is that, at least from a external financial debt perspective, i.e. non-government debt, they've been able to get a lot of things under control over the past couple of years, and they've been picking away at that and actually being quite responsible about it. It's the government debt today that's the major overhang. But yes, if you raise very expensive debt from external markets just in order to get external investors participating, then the cost of that debt, you're right, is going to create a bigger problem. So, and that's probably why I think what we're looking at is something which is going to be a combination of the debt and the equity, and potentially some kind of structured instrument that may come in as well.
Kunal, just want to understand, what this is going to do for them in real terms. So if you look at their press release and what they've sent to the exchanges, obviously, as expected, they're very optimistic. They say that, we've been improving 4G, 5G rollout, etc. But look at the industry right now, where you have very strong competitors. Essentially a duopoly with Vodafone kind of hanging on, if we're being very honest. So to what extent can those goals be achieved, even if a 45,000 crore fundraise goes out successfully?
Yeah. So I think, the fact that Vodafone has survived this long with such intense competition, and also being, almost 2 years behind the ball from a launch of 5G perspective, shows, and as well as the fact that they've been able to decrease the bleed in terms of number of subscribers which are exiting. And like you said, some of the optimism which they've displayed have come out in last quarter's numbers, where you've seen quarter-on-quarter improvement in EBITDA. So, I dare to say maybe we are sort of already at the bottom. And this is kind of the last opportunity, but also the right time for this type of investment to come in, because the customers who are still there on Vodafone are clearly very, very loyal to them, right? So you do have high levels of churn, but that's typically in the prepaid user base at the very bottom. But the postpaid subscribers that they have, the corporate customers that they have, the higher value customers who have been using 4G for a long time, the fact that many of those have still not churned out, despite the fact that 5G is available in the market and it's been available in the market for almost 2 solid years now, shows that you have some real loyalty that's left. And if Vodafone can recover from that, deliver back on its network quality, launch 5G, and really provide those same services to that loyal user base, there is an opportunity to bounce back, leveraging the spectrum assets they have, leveraging the network assets that they have, and clearly the goodwill that they have with this customer base.
And in terms, Kunal, of impact, say, on a Bharti Airtel, this Morgan Stanley note out this morning talking about, whether this impacts Bharti Airtel at all. And their take, at least, is that it's a limited upside. And all this does is prevent further consolidation in the industry as of now, so a lease of life. In your view, is there any impact on Bharti Airtel? And additionally, how do you view the government efforts to revive and grow BSNL in this bigger context?
Yeah, so I think from that perspective, the impact on Bharti Airtel and on Jio, for that matter, as well, is going to be quite limited in the sense that the market is really big enough, and we've had many more operators performing, financially very well, even in the past. And I think we're at a stage where operators realize that further competition, which is, just like unsensible type of competition where you're just randomly cutting prices and things like that, is not healthy for themselves or for the sector. So if we have a strong Vodafone back again, what we will have is a proper three-player market. It's very unlikely that we would see in the near term Vodafone get back to the type of market share that they used to have before. And therefore, they're not likely to take away substantial amounts of market share from Airtel or Jio. And at the same time, given that ARPUs have been rising for everybody, you're in a situation where the sector itself is growing and the health of the sector itself is growing, and having this third operator around is only going to help that. So yeah, I agree. I don't see too much of a negative impact or very limited potential downside on Airtel.
Just one quick last question. This is more sector related. We've moved on from 3G, 4G, 5G, and now we are talking AI and IoT. At a time like this, when we're already at the next leg, you've got Vodafone not just one, but two steps behind in that sense. How is it going to play out for the sector? I mean, how is one going to monetize, and not just Vodafone, right? Even the other players in the business, monetize 5G at this stage? Because if we've already moved to AI, I'm guessing this is a challenge unless Elon Musk gets into this business in India.
So with every launch of a new generation, the initial launch phase has by and large always disappointed, right? So if you think about when 3G was first launched and when 4G was first launched, everyone's like, hey, this is just a faster 2G when 3G came out, or when 4G was there, it's just a faster 3G. But what you notice over a period of time is as the capacity is made available and device penetration really starts to permeate across the user base, the use cases start to come out that leverage the bandwidth that's available, and that's when the monetization kicks in. So, the entire shift from 2G to 3G was the shift basically from messaging to browsing the internet. And from 3G to 4G, the entire shift was to video streaming. And now if you see where we are as a country, right, we're amongst the largest, if not the largest consumer of YouTube content in the world. You have all sorts of other types of video content on Insta and others, which are now actually being monetized, and business models have emerged, not to mention all the OTT players. So the shift to 5G, as we get that penetration, you will get new use cases and new models coming out, and then the monetization on that will finally start to happen. It just takes a little bit of time.
Right, thank you, Kunal. Great chatting with you and getting some perspective on what this approval of fundraise really means. Of course, the first leg is to get in that fundraise, and then, of course, what it could mean for Vodafone, what it could mean for Indus Towers, smaller in nature, but definitely worth the mention, and the industry as whole. We'll take a break. Implied Nifty is indicating to a flat to slightly higher start. Agam, as always, will join in at 8:30 to, of course, decode the F&O markets for us, so stay tuned.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patent.
Welcome back. Quick look at the implied open before we get to the F&O piece of it. We've had a sort of quietish kind of week, very consolidated, very range bound. You're seeming set for another day like that. A market in hunt for fresh triggers as mildly positive perhaps at best, but all the action perhaps on the derivative side of things. Agam, what's expected today?
Right, so we're going to be missing an expiry today because it's the month end, which means that the Bank Nifty expiry will come through tomorrow. That said, we have, while prima facie doesn't look like a lot of action has been taking place as far as the benchmarks go, a lot more consolidation coming through, but on an intraday basis, we've seen some pretty sharp moves for the Nifty, the Bank Nifty, as well as, of course, the Fin Nifty. But I'm going to start off with the key benchmark, which did in fact move up by around 0.3%. We've started to see a lot of unwinding coming through, which is why the February futures, of course, are seeing a decline in open interest to the tune of nearly 25%. But the March futures are now starting to pick up, and there will be a substantial amount of rollovers coming through over today and tomorrow. That said, as far as the Bank Nifty goes, that's where we did see, well, flattish moves. It was a tough expiry, at least as far as the Fin Nifty goes yesterday. And, well, based on that, a lot of banking constituents were in focus. Today, it will be the same, but Kotak Mahindra Bank, of course, not helping things out here. We've seen another dip there, and that's actually been weighing on the banking index too. We did see an open interest decline of around 8.5% in the February futures. The March futures, of course, we did see a significant increase there. As I've been mentioning, rollovers are starting to pick up. How are the things panning out for the options market? Well, yesterday, the Nifty was flattish, but considering it hung on to the level of 20,100, in fact, inched towards 20,200, well, naturally, we saw a lot of put writing around 22,000, 22,100, 22,200 as well. On the higher end, we continue to see a little more build up around 22,500, 22,700. 22,700, the probability of the Nifty going all the way till there it does seem unlikely. I never say never, but we're still a good 500 points away from that mark. And there are no, well, triggers, at least in the horizon at the moment. Which also means that for now, the maximum open interest in distribution for calls stands at around 22,500. On the lower end, we continue to mark 22,000 as the one which will provide you with some sort of a base, a support of sorts, considering there is so much accumulation of open interest inputs. So that's a 500-point range we are playing with today, going into tomorrow's expiry. As far as Bank Nifty is concerned, the mark of 46,500 is which has been a little bit of a pivot. Do remember that we closed slightly above this mark yesterday, but on the higher end, 47,000 will provide a very, very stiff support, stiff resistance going higher, considering the kind of accumulation that we've seen as far as calls are concerned. So it's a 500-point range for the Nifty, that is 22,000 to 22,500. And for the Bank Nifty, at the moment, we do see a base around 46,000, 46,500. And on the higher end, keep an eye on 47,000.
Well, that's of course the index, Agam, but it's largely been stock specific for the last couple of weeks now, and this week specifically. Any stocks that are on your radar this morning which you picked up in terms of F&O activity?
Yeah, so I've been talking to a handful of quantitative traders, who follow a cross-sectional momentum, and there are 3 stocks, in fact, which come up on their radar, and that is largely on account of the advances that we've seen through. So Tata Motors is the one which in fact made a life high yesterday. We saw a good jump in volumes, in fact the highest volumes in 2 weeks on an intraday basis, and for now we're also looking at Tata Motors making a 900 as a little bit of a base, a little bit of a support. So watch out for that. Let's take a look at what's happening in the futures side. Naturally the February futures will see significant amount of unwinding coming through, but the March futures will be interesting to watch whether or not there are in fact new long positions being built there. Remember, when a stock actually hits a new high, it would perhaps be not the best to go ahead and sell it because it's on the rising tide. So this is as far as your March futures are concerned, and we've seen a whopping 70% increase in OI there. But this is of course as we move into the next expiry. The other stock that I wanted to talk about was Sun Pharma. Now, the entire pharmaceutical space has been climbing quietly, gradually higher over the course of the last 2.5 months. Sun Pharma is no different, and this time around it has hit a life high. Yesterday it was up around 1.7%. Cash volumes again highest in 1 week, and at the moment we are looking at 1500 for Sun Pharma as a little bit of a base, so keep an eye on that one as well. These are the 2 Nifty counters which have seen significant gains, are in fact closed at life highs yesterday. And again, as far as the March futures go, we are looking at an increase of open interest. Your absolute number is not very large, but that's also because we're only starting to see a build up and a lot of those rollovers coming through for, in the case of Tata Motors as well as Sun Pharma. And the other stock that I want to talk about, which is not a part of the Nifty but which has also made a life high, and that is JK Cement. JK Cement has also moved up gradually higher, and again this is where cash volumes are the highest in 1 month on an intraday basis, and in fact it's taken out a 4-week high yesterday, so which means it's broken out of a range of sorts, and based on that we are seeing not only a significant amount of volume traction in cash but in futures as well. And as you can see, we are seeing about a substantial increase in the March futures. So these are the stocks that should be on your radar if you are looking at the F&O segment.
Okay. Thanks a lot for that, Agam. Some interesting names out there. Sun Pharma and the generic pharma stocks have done really well. And JK Cement, I reckon courtesy the Motilal Oswal note as well yesterday, was up and about. But quite clearly, the F&O build-up that we've seen in that stock has been very, very interesting. So do watch out for that. Do watch out for some of the other cement names. Not a bad move for the likes of Ambuja and the others as well. So could be an interesting one. Well, what about stocks to watch in the session today? I think first, we've spoken about a clutch of stocks on the trade setup as well. But Mahima Johnson with a list of some of the key stocks that are standing out for her. Morning, Mahima.
Morning, Neeraj. So, as you rightly mentioned, the first one is Indostar Capital Finance, which is set to raise 450 crores via preferential allotment of warrants to Brookfield AMC and Foreign Tree TechServe. Now, Brookfield will invest approximately 256 crores and Foreign Tree will invest approximately 200 crores. Brookfield will subscribe 1.4 crore warrants and Foreign Tree will subscribe approximately 1.1 crore warrants, and both of these will be subscribed at 184 per share. Now, moving on to GE and TD India, it has won an order of 370 crores from Power Grid Corporation, and the order is for supply of 765 kV shunt reactors for transmission of system projects. Then we have Salsa Technology, which gets an order of 200 crore from Zetwork Business Private Limited, and the order is for supply of 25,000 metric ton of solar structures. Moving on, Torrent Power will be in focus today because it has received an LOI for transmission system of evacuation of power from RE projects. Now this project is for 1500 megawatt in Solapur, Maharashtra, and this order is received, this letter of intent is received from PFC Consulting, and this will be a this is received on the basis of tariff-based competitive bidding, and the contract is for 35 years, and it is scheduled, commission date is from 24 months from the SPV acquisition, and the annual transmission charges are approximately rupees 500 million. So these are some of the key stocks to watch out for in trade today.
Right, thanks for that, Mahima. There's a whole bunch of stocks that we'll be tracking in today's Day of Trade. Avinash Gorashankar, Director of Research at Profit Mart Securities, and Chandan Taparia both joining. Chandan, good morning. Thanks for joining us. Chandan, before I start talking stocks, a quick word on the Nifty and Bank Nifty. Where are you eyeing tomorrow's expiry?
Good morning. Thanks for having me. We have witnessed some sort of positive to range-bound bias in the market in the entire month. If you look at the month-on-month basis, the index is up by around 2%. If you look at the expiry basis, then index is up by around 4%. So witness some recovery, but yes, some sort of consolidative move was clearly visible in the market. If I look at the volume weighted average of the entire month, that is near 21,900 zone. We are slightly higher than the VWAP, which clearly indicates the declines could be both. Overall, we are consolidating in between 21,875 to 22,300 zone. We believe that supports are intact, and with support of 22,000 slow and steady, we can head towards 22,350, 22,400 zone. So we'll look at buy on decline, have potential to again revisit the new lifetime high territory, but one need to apply buy on decline stance in the Nifty index. Now looking at the Bank Nifty index, Bank Nifty hovering near is 50-day exponential moving average. It's up by around 4% on expiry basis, up by around 1% on month basis. So as of now, the 46,300 is the major support. We are slightly higher than volume weighted average. So with support of 46,300, Bank Nifty has potential to bounce towards 47,000 marks.
Right. That's the view coming on the index. But we've also got Avinash. Avinash, we'll jump straight into stocks because fundamentally, I think the markets are also no man's land. Earnings are behind us. I think the next big trigger is only going to be, of course, the political picture and global cues, if that. Talk to me about what you made of Vodafone Idea's board approving their fundraising plans. It's a difficult space they're in. Operationally, of course, things are tight, cash flow is tight, and they are also behind the curve in terms of 5G. Do you think this fundraise brings with it some relief for Vodafone Idea investors?
Good morning. Yeah, I think my sense is that Vodafone India, this fundraising exercise was expected from a very long time. And I think sooner than later, but I think it has now fructified into something meaningful. But I think, if you look at the market share loss of Vodafone, they've lost almost 100 to 150 basis points of market share to competitors like Jio and Bharti. And most importantly, going forward in FY26, again, spectrum charges are going to come up. I think looking at their weak cash flows, this amount which they are, mentioning about the fundraising, 20,000 via equity and some amount of debt raising, is unlikely to actually give a full kind of benefit, to the company's capital structure. So I would suggest that, the stock has significantly risen in the last 1 month. This news has already been partly been discounted in the price. So I don't think, this news prima facie is going to re-rate the stock further. We'll have to see what is the kind of commitment from the promoters, because promoters had always been dilly-dally in committing their own money into the company. So if the promoters are quite confident and they allocate a larger part of the money in the company, that would install a lot of confidence in the Vodafone stock. So I think it's better to wait and watch, considering the fact that the stock has risen considerably, and the next couple of quarters are going to be very challenging. So I wouldn't suggest buying at these levels, but yes, those who have entered the stock can obviously wait for some more time, as after a long time, some positive, tailwinds on the fundraising has been announced, yesterday.
So the figure doing the rounds for the last several months on what the promoters could put in is just about 2,000 crore rupees. Will that come in? Will it be higher? All remains to be seen. Interestingly, Nuvama now has a target price of 6.5 rupees. Chandan, of course, your take on Vodafone, but also your picks for this morning.
Yeah, so to start with the idea of Vodafone, major trend was intact to positive, but yes, this stock has multiple supply at higher zone. So I believe that let it find some support near 14. It manages to hold 14 in this decline, then again it has potential to swing towards 18 to 20 marks. So we have to look at wait and watch mode on counter. Now looking at the stock wise, first it is buy on Tata Motors. We have positive stance in most of the Nifty auto companies, including Tata Motors, Mahindra and Mahindra. Tata Motors has given a consolidation breakout of last 15-16 days. It managed to hold above a key hurdle of 940. The stock is inching upwards and we are heading towards expiry, so some short covering trigger can happen. So one can buy with support of 940. We have target towards 1000 in Tata Motors. Second trading idea, one can focus on Voltas. As per the seasonality, Voltas usually performs well in the month of March as per the data of last 10 years. So chart setup is positive, major trend is intact. Slow and steady supports are shifting higher. It is holding well with built up of long position. Rollovers are turning on the long side. So recommending to buy on Voltas with support of 1095. We are expecting a rally towards 1160 to 1118 Voltas. So Tata Motors, Voltas, these two will be preferred pick for the morning trade setup.
Okay, Tata Motors and Voltas is on top of Chandan's list. And of course, Vodafone Idea is a wait and watch situation depending on how it sees. Perhaps some initial tailwind because at least a news that was expected for a while has come in. It's gone up about 7% in the last month. But the other stock which is in focus is Vedanta. They had an analyst call yesterday and then a slew of brokerage notes this morning where the management has come in and talked about their plans to pare debt. What their sort of demerger will do in terms of unlocking value. Anushi, what's the verdict in terms of what house views are?
Right, Tamanna. So if you have to look at what are the comments after this, sort of a mixed view over here. Now, Nuvama and Antique has come out with a buy rating while Kotak has a sell rating on that. But before we go on that, let's just point out some key highlights that they have mentioned. So the focus continues to remain on debt reduction, with the management guiding for a debt reduction of about $3 billion over the course of next 3 years. Then also there is the major focus remains on value unlocking on the back of the demerger and listing of its business verticals separately. The key focus over here, the key growth driver continues to be the aluminium business over here. Now, if you have to look at the positive stance of both Nuvama and Antique, so they have highlighted out that the monetization of steel and iron ore assets by the first quarter of 2025 remains as a positive watch out. Whereas even the EBITDA growth of about 40% that they are expecting remains on a positive side. Also, there is a beneficial of about most of these capex projects that had been going on over the course now start to show the benefits from Q2 the second half of H2 25 onwards. Now, while Kotak has a different view, while they are stating that the EBITDA guidance that the company has given of about $6 billion is too optimistic, whereas they see about EBITDA guidance of about $4.2 billion. Key downside risk also remains on the merger of its parent copper business at an expensive valuation. So that is another trigger that could be watched out for. But the main focus, as mentioned, remains on the value unlocking of all the demerged verticals. So that is the stance on Vedanta.
Okay, thanks a lot for that. Anushi, Avinash, you would have seen some takeaways of this analyst meet as well and the reports thereof. Are you at all inclined towards Vedanta or any other metal name for that matter?
I think, Neeraj, my sense is that, Vedanta, which has announced a 5-way split, I think clearly it would be better that, I think the investors should wait for some more clarity to come in. I think the key element for Vedanta is obviously how they manage the debt on the books, because that is one issue which the market is extremely worried about. I would not be surprised, however, that the kind of bashing the stock has got, downside from these levels seem to be capped. So I think a large part of the negative, headwinds has been factored into the price. So my sense is, somebody who wants to take a small trading bet, a short-term kind of near-term scenario could obviously look at it. But longer-term, I think opportunities could arise, once the final restructuring is over, because we really don't know how the, markets would look at each of these companies. Typically, I think we have been telling our clients to hold on. Near term, I think there could be a bounce, quite sharply. But over the medium to longer term, each of these companies would be now a unique set of businesses. So we'll take a small wait and watch here. But I think you mentioned about what looks interesting. I think one or two companies, which we met recently. I think companies, which are in the auto component space, something like Mahindra CIE, a steel strip and wheels. These are interesting bets because a lot of capex is happening here. And I think the management commentary has also been extremely solid. CIE Automotive is very large in not only in the Indian markets, but even the European markets. Although the European markets are slightly muted as of now, the management has sounded very confident that the Indian market is going to grow significantly and that should benefit them. Steel strip wheels is now looking at increasing its wheel capacity, that is alloy wheel capacity, totally from 3 million to roughly 4.8 million numbers. So I think, this is a very interesting space. Not many players here. We've got larger players like Wheels India here. So I think this could be also an interesting bet in the current scenario, considering the kind of buoyancy we are seeing in the commercial vehicle, in the passenger car sector, and where I think demand is not a problem. So I think volume growth would be assured for steel strip and wheels, at least over the next, say, 12, 18 months.
Chandan, do you have a view on Vedanta? It's pretty much done nothing in the recent past. And maybe we can extend that conversation, not just Vedanta, the rest of the metal pack. Is there any trade here, potentially on the short side also, if you think so?
Yeah, so I'm observing the mixed set of cues in most of the metal name. In fact, the sustainable move is not there, or absence of follow is clearly visible in most of the name. So first, let me talk about Vedanta. The stock is slightly making lower top, lower bottom. The good part is the breakdown is not there. Sustained selling is not there, but yes, bounce are being sold. So as of now, I'll avoid for going long. Let the stock come near 250 to 250. I think that will be the stable zone to find some bargain buying in the counter. If I need to talk about other name, then Hindalco, I have the negative view. We have seen built up of short position. Just couple of days back, we have seen sharp selling from 600 to 500 odd levels. And after that, it witnessed some recovery and again selling came. So some put writing is there at 500, but again, there are chances that with hurdle of 518, it has potential to drip down towards 500 marks. So slightly negative bias in most of the metal. Jindal Steel could be one name where some sort of buying interest could emerge. 765 is support for upside move towards 792. So Hindalco negative, Vedanta some profit booking decline, and Jindal Steel could be some recovery in the counter.
Another space that I think we should look at, which has seen a lot of ups and downs before we go to some of the bulk and block deals that are in focus, is your OMCs. Now, to add to that entire debate, a Nuvama note also out, which has downgraded BPCL, HPCL, IOC, all of them. And there is definitely, a bull and bear case over here on whether OMCs have more to give. I want to get Avinash's view first on this pack, and if there's anything that you'd pick up at these levels.
I think, Tamanna, oil marketing companies have done remarkably well in the last couple of months, and I think the markets have obviously factored in the benign crude oil prices. But I think you must understand that as now elections are nearing, clearly the markets are also sensing the fact that there could be some price cuts on petrol or diesel, and I think that could be a kind of a short-term break for these companies. My sense is, within the given pack, I would be more comfortable on a company like IOC. I think where valuations still consider, look pretty interesting. But again, one should always keep that caveat that in case there is a price cut of, say, 4 to 5 rupees for diesel or petrol, which is very much likely, then I think in the very near term, these companies could possibly, obviously not go that significantly on the upside, at least in the very near term. But I think overall, if you look at the automobile sector, the aviation sector, I think throughput from both these sectors has been very significant, and it has benefited these companies quite significantly. So prima facie, these companies look interesting. But in the near term, if these headwinds come in, probably once the election dates are finally announced, I would not be surprised that there could be a little break on the upside here. But longer term, yes, I think if crude remains benign at the current odd levels, the risk reward is definitely better in oil marketing companies rather than upstream companies.
I think rather than upstream, Chandan, any of these that you like on the charts?
So in the recent past, we have noticed good recovery and momentum in most of the oil marketing company. If you look at last almost 5 months, Hind Petro has rallied well from 250 to almost all the way to 600 zone. So now some profit booking could be there. Major trend is intact, but some profit booking cannot be ruled out because after the decent run up of more than 50%, I think some profit booking could place. So I'm just waiting near 500, 490 zone in Hind Petro to again rebuild the long positions. So don't have negative view, but expecting some profit booking decline because most of these stocks have already seen good momentum in the recent past.
Very quickly, Chandan, some of these defense names were doing quite well in trade yesterday. I mean, to name a couple, BDL and HAL. On the charts, how are these counters looking?
Quite positive on entire CPSC and defense name. HAL is our preferred name, HAL and BL. So first talking about Hindustan Aeronautic HAL, stock is all set to give a major consolidation breakout of last almost 8-9 weeks. Earlier, multiple time it took hurdle near 3100 zone. So small follow-up above 3100 could open the further upside of 5 to 8%. So we will suggest to buy on HAL with support of 3000, expecting the rally to extend to us 3250. If I talk about BDL, Bharat Dynamic, here trend is also positive. We have seen good recovery from 1550 to all the way to 1984 marks. We witnessed some profit booking from higher levels, but again, buy on decline could continue. We have measured support at 1820. With the support of 1820, we can place the target towards 2000 in BDL. We are also positive on the BL, Bharat Electronics. So positive view with support of 200, it can head towards 212 kind of level. So positive stance in most of the defense name in the market.
Okay, positive on some of these names. Some of the bulk deals could be in focus as well this morning. Varsha Johnson with the few stocks on which the bulk and block data is interesting. Varsha.
So starting with CMS Infosystem, wherein Sion Investment Holdings sold almost their entire stake, which constitute 27% at 370 apiece. The buyers were ICICI Prudential Mutual Fund, which bought almost 3.5%, Nomura Funds, which bought almost 2.7%, and Kotak Small Cap Fund. Then we have ICICI Lombard General Insurance, wherein Bharti Enterprises sold almost 1.2% of its stake. As on December 2023, their stake was 3.7%, while this stake was bought by ICICI Bank. So as on December 23, if you see, ICICI Bank held almost 47% stake in the company. Now, ICICI Bank said in its board that its board has approved an increase in shareholding in the general insurance company by up to 4% in multiple tranches. Then lastly, we have Sapphire Food, wherein Wellington Trust sold almost 0.5% stake in the company. As on December 23, the stake was 1.9%.
Okay, Varsha, thanks a lot for those. By the way, an important one is also BLS International, simply because, as we said in the trade setup, the buyer in BLS International is an interesting name. Aditya Kumar Halvasia is the entity. His entity is bought into BLS, so that stock also remains in focus. We need to slip into a break, though. As we hit the break, hear out a very important voice. According to John Chambers, India will surpass both the US and China in the next half a century. Remember, he spoke to Tamanna, my colleague on NDTV Profit exclusively. Here's a small slice of that conversation.
India's population is going to have the fastest economic growth, not just for the next 5 years, but with the plans and programs your Prime Minister is putting in place now for the next 20 to 30 years. Assuming that you have the courage to continue to take risks and be critical of yourself on it. You look at the population growth, average age 26 or younger, average age in China aging rapidly in terms of the direction. China's population going from about 1.4 billion to 800 million. With a much older population. India's going from 1.4 billion to 2 billion. The ability to do the education with the speed, the optimism, the entrepreneurship. China's issues are self-inflicted. They got away from reasonably free enterprise. They got away from startups. The government started to get involved in almost everything, put regulations in place, put a win-lose mentality versus the US and much of the rest of the world. It doesn't surprise me they've slowed down.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore was sold.
We're gearing up for trade this morning. It's going to be a flat start, but the stock of the day will be Vodafone, and that's one that's going to be on everyone's radar as we gear up this morning. Implied Nifty indicating to 15-point gap up, so it's going to be flat and fairly quiet on the street. But Avinash, a quick one. I don't know if you've been tracking the Bharat Highway investment, which is the InvIT that opens today. Would you be recommending that? It's an interesting proposition given the story and the cusp of growth that India stands at.
No, I think my guess is it's an interesting asset class, and if you're looking at the next, say, 2 to 3 years kind of time horizon, definitely I think some allocation is something which is advisable. My sense is that it may not give you some sort of a very large alpha kind of return, but yes, it's a steady kind of instrument which offers a good investment bet. But this is typically for those investors who want to look at safety of capital at the same time ensure steady returns. And I think the space is pretty interesting. I'm not surprised that once the new government comes in, infrastructure, specifically the road network, is going to be given a further boost. So I think that is definitely something which is going to benefit InvITs which operate in this space.
In fact, the past returns of some of the other ones like the IRB InvIT, Power Grid InvIT and Indie Grid InvIT have been 12 to 12.5% of dividend yield annually. So it's an opportunity. You might want to consider it if you want to add some to your portfolio. Chandan, we've talked about a bunch of stocks already, but anything else that's catching your attention this morning that you would probably look at for an intraday play or maybe up until tomorrow?
So already we talked about Tata Motors, Voltas. We can focus on HL. You ask about this defense name. So HL will be our preferred name. We are expecting a rally towards 3250. So Tata Motors, Voltas, HL, these are the couple of names we should keep on radar. I can talk about M&M, Mahindra and Mahindra. So in auto space, we like Tata Motors, and apart from that, Mahindra and Mahindra looks good. 3-4 days back, it witnessed some consolidative move. Technically, it gave a breakout from its pole and flake pattern. And after that, it is now continuously making higher tops, higher bottom. So with support of 1900, we are expecting momentum to continue towards 2013 Mahindra and Mahindra. So one can focus on Tata Motors, Mahindra and few other names in the market.
Just a quick look at what Vodafone is doing pre-open. Even as, of course, we'll wait for those rates to settle. Some of the big stocks in focus today, Vodafone will be one of them. After that fundraise, down about nearly 10% in opening trade. Of course, all of those will settle. Curious to know what Bharti Airtel is also doing this morning, as is Indus. The news of that fundraise gets digested and we see the impact. So Bharti Airtel positive as of this point. Maybe some skepticism there about whether Vodafone's fundraise will make any dent to Bharti Airtel at all. Indus up in the hopes of some sort of getting some of its dues from Vodafone back. So those are some in focus. Patanjali Foods is something that I want to pull up as well. We talked about it. The rap on the knuckles was for Patanjali Ayurved, but the stock is reacting, at least initially, it's reacting a little negatively. Avinash, I want to get your sense on banks and especially your private banks that haven't really been participating in this rally. Do you think there will be some time for that as we wait for more cues to come in, especially from the RBI?
Yeah, I think some more consolidation could happen, Tamanna, on the private sector banks. I think we have been seeing a lot of traction on the PSU banks. But I think, banks like ICICI Bank, typically HDFC Bank, banks like IndusInd Bank. Numbers for the third quarter have been pretty solid. Commentaries have been good. I think the key challenge across all the banks has been deposit growth. So I think that is one key challenge for most of the banks, and I think I would not be surprised that the kind of CASA deposits which these banks have got would definitely help these banks in retaining most of them and ensuring that they get a decent kind of competitive kind of pricing for the deposits. But it's going to be a pretty challenging kind of environment, at least for the next 6 to 8 months, because money is getting more and more difficult to get in for these banks. So I think re-rating would actually happen post the first quarter of FY25. So till that time, I think stocks like ICICI Bank, which has shown very strong numbers, may still continue to remain a market performer. But I think at these levels, there's nothing to lose, provided your time frame is at least next 12 to 15 months. Our sense is that whatever new initiatives the government announces post the election and the new government comes in, infrastructure would be a key element. And I think to finance infrastructure, I think banks are going to play a key role. So I think ICICI Bank, IndusInd Bank, or even HDFC Bank at these levels definitely look interesting. But I think the time frame has to be slightly longer.
Okay. Now, the pre-open rates will settle in a bit. One of the pockets that did reasonably okay in trade yesterday were select brokerages. Now, Motilal Oswal Financial Services as a stock was up and about in trade yesterday. We spoke about the price volume buzzers. This one was up about 5% in trade yesterday, marginally higher in trade today as well. I was just looking at some of the numbers that the stock is clocked in, or the business is clocked in. Of course, it doesn't trade too expensive as well. I think 12, 13 times, if I'm not wrong, trading 12 months P. But what it has done in the first 9 months of this calendar or this financial year is pretty remarkable to the previous year. So 9-month FY24 revenue is 14% higher than the full year FY23 revenue. 9-month FY24 PAT is 84% higher than the full year PAT of FY23. And you could argue that some of these statistics hold true for some of the other broking names as well, and which is why in some sense, some of them have gotten a bit of a leg up as well in the recent past. Since I can't ask Chandan about Motilal, I'll ask Avinash about Motilal. Avinash, Motilal Oswal, or any other broking stroke capital market play?
Well, I think you're right, Neeraj, that numbers for most of the broking companies like Motilal Oswal, Nuvama have been pretty solid. In fact, we have been very positive on the broking as well as the wealth management kind of space. And I think here, as you rightly pointed out, valuations seem to be quite reasonable. And I think the kind of growth we've seen on the capital market side and the kind of retail as well as institutional participation in the markets, I would not be surprised that the markets are just looking at maybe another 1 or 2 quarters before growth comes back again. And I think these profitability numbers are something which I think the markets would be looking at very closely, because 84% YOY growth for Motilal Oswal, I think that is one key element which the markets would be monitoring, whether it's going to be sustainable or not. But I think despite considering the fact that even if this growth peters down a bit, numbers are going to be pretty solid for FY25. We are also positive on Nuvama. Our sense is that within the wealth management space, this is one stock which got recently listed and where the opportunity for growth is quite significant. It may appear a little bit expensive on the price, but I think looking at the kind of growth which they have recorded in the December quarter and the management commentary, I would not be surprised that these are very solid franchisees with a very strong customer base and a very large AUM with them. So that is definitely going to work very well for them. Obviously, post the elections, we are expecting further markets to get further re-rated and get a sense of more buoyancy. So all that would obviously rub off on most of these broking and wealth management companies.
Go on,
no, sorry, I just interested now, since the pre-open rates are about to settle in, one of the key suspects of inclusion into Nifty, Shriram Finance. I'm just trying to understand if Shriram Finance has reacted positively today. Let's just bring that up and see what that is doing in the session. No, not really. It's just about flattened out. 2396, very active in the first couple of minutes of trade.
I think the other one that's looking really good this morning is BEML. 10% in pre-open. Chandan, you track this one. If you get an opening of that range,
no, it's not flattened out. It's flattened. Just like Shriram. BEML also flattened.
Okay, at least I'm not alone in this one.
Not at all.
Well, Chandan, would you short Vodafone Idea if you get a gap down on the counter? And at what price would you short it?
No, I won't do. Let the price stable. Because overall, I believe some sort of support will be there. If you ask me positionally, I'm not much bearish. In fact, if I get a dip towards 14 or 13.5, I'll go positionally long in the counter, looking at the major wave and the long-term picture of the chart.
Look at Patanjali this morning. Patanjali and Aavas Finance. Aavas Finance has a positive brokerage note on it. That's seeming to do well, at least in the pre-open session, about 4% up. Patanjali negative because of the Supreme Court rap. Reputational hit more than anything else, though technically has nothing much to do with Patanjali Foods. But you know, that sort of rap on the knuckles for misleading advertisement has some impact here. Chandan, any of these that you look at?
So you let me talk about Patanjali. It got stuck in a range. So follow-up is missing, but the good part is near the lower band, it takes support-based buying. So let it come near 1525, then some buying interest could emerge, because 1500 to 1680 is the broader range. So Patanjali could be one name where buy on decline could continue in this.
Well, that's some of those counters that are in focus. Vodafone is not looking too bad, actually. 2% cut is what we're expecting. Patanjali also looking at a gap down. Some of these logistic companies have also been doing quite well, and delivery in pre-open is indicating to a gap up of 2.5%. I think Z also will be in focus today. 197 may continue to see an upper circuit. Be interesting to see if that's what's going to happen. Chandan, it's after many days that Paytm is not expected to see a circuit in early trade. I know there's not too much history to go by, but if you had to trade this one on the charts, do you think if we do get a day when it doesn't hit upper circuit, it could be a good trade for a short-term trader?
It's very tough to trade Paytm because major trend is down and short-term trend is giving a bounce, and after that it locks in circuit to circuit. So it's advisable not to trade, but yeah, if someone trades, then one can look support near 415, and if bounce happens, it can go to 455 to 460.
All right, a lot of brokerage notes this morning, and we're already seeing some reaction to some of those notes in the pre-open trade. For example, Jefferies on Aavas, while Motilal Oswal has initiated a buy call on Dreamfolks. Harsh now joins us with more details of the top brokerage notes that we've picked for you this morning.
Well, absolutely, Tamanna. Let me first start off with Aavas. We have Jefferies, which has a buy call or retains its buy call on Aavas. 1940 rupees is the target price. They have a solid 30+% upside. Now, what they're suggesting is loan growth affected largely due to certain tech, or rather the new tech platform coming on stream, and that will go on stream in the next quarter, and therefore loan growth is set to pick up. They're expecting or rather they've guided for a 20 to 25% loan growth. Jefferies expects that to come in at the top end of the band. So loan growth will come in quite strong. The other piece that's been amiss with regard to Aavas has been to manage attrition. Now the diversified sourcing channels going forward should help with that. They've also improved their incentive structures as well as their hierarchy structures, and they have suggested that the branch growth will also be at 10%. All of that should therefore arrest some amount of attrition and therefore aid loan growth going forward. Productivity metrics also should improve. They are expecting the turnaround time to fall from 13 days to 9 days on loan sanctions. That's the other improvement. With regard to NIM pressure, well, the management has suggested that lower, smaller loans, which are slightly higher yielding, is also what is causing NIM pressure. So that should get offset. They've also hiked lending rates, which should therefore aid NIMs. OPEX is expected to remain stable with the tech rollout costs to fade, employee costs to remain stable, and therefore Jefferies expects an EPS CAGR on this one of 25%. ROE expansion to happen over FY 24 to 26. Very strong buy call there by Jefferies. Switching focus, Motilal on Dreamfolks. They've initiated coverage, target price 650, which is again a 30+% upside. They believe that firstly, air travel growth should boost Dreamfolks in terms of top line. They're expecting a 29% revenue CAGR on the top line of Dreamfolks all the way through FY 26. They believe that international expansion should further aid this number, and they believe that the asset light model and stronger growth would drive earnings going forward. They believe that this one has strong market control, mind you, sub 70% to above 70% in terms of market share is what this one has seen, Dreamfolks has seen. The margin impact of FY23 was due to an exceptional item, and therefore they don't expect it to recover, but that could be a risk. They're expecting gross margins to be at the top end of the 11 to 13% band, and a PAT CAGR of 28% over through FY26.
Got it.
Target price of 650 on this one.
Thanks, Harsh. Thanks for that. So 2 notes. We are a minute and a half away from market open, but this remains interesting. Chandan, Dreamfolks, I know Motilal has initiated a note, but independent of the note, have you looked at the charts on this one?
Yeah, so we came out with the note, and it looks good in terms of risk reward ratio. It has been consolidating from last couple of months and now turning from the key support zone. Even the mechanical indicators are turning from oversold territory, which also attract the buying interest. So technically speaking, 475, 480 is the support. It can head towards 540 to 550 zone.
Okay. Chandan, so that's the view on Dreamfolks. But if I had to ask you for one top recommendation, pre-open rates have settled. One stock that you would trade, quick 20 seconds. We are very close to market open.
I'll go with Tata Motors with support of 940. I'm expecting 1,000 rupees.
Tata Motors support at 940. So that could be the stop loss, if you will, viewers, maybe. If I'm not wrong, Chandan, and the target is 1,000 rupees. Remember, Tata Motors yesterday eclipsed TCS as the best performing stock on the index in late trade. So had a bit of a late surge yesterday, and that is Chandan Taparia's top call for the morning. Now, we'll just get the rates going in about 15 seconds. Remember, we'll start off maybe marginally higher, if you will, but a lot of broader market stocks, which are usual movers, are kind of lying flat. So we'll probably have a flattish start to the mid-cap index as well. But here are the first rates. This Wednesday morning, Nifty, flat as flat can be. The mid-cap and the small caps will come up, as will the Nifty IT, which was in news yesterday. Mid-caps about 0.25%. A small cap index about 0.4%. Let's see if this lasts. Nifty IT 0.2%, and Nifty Bank would be flat. Yesterday it took support at about this 46,500 level, which is where the largest concentration of the puts are, and 46,658 currently, so hardly any move there. Bring up the heat map and show you what's moving and what's not. On the gaining list, not too much. Bharti Airtel about 0.5%. That's the extent of the gain. None of the gainers have a gain of more than 1%. Bharti 0.7%. Tata Motors starts off well. There is strength in Tata Consumer, Hindalco, SBI. So it's fairly disparate. No particular sector really ruling the roost, but for the fact that FMCG, including HUL and Tata Consumer, are up there. So maybe the FMCG index starts off okay. What's losing out? Again, Power Grid, hardly any losses there. You have Wipro, BPCL, etc. Nothing too untoward really. So it's a very, very flat day. Except for Bharti, you don't see too much, at least as far as large caps go. Maybe, just maybe Tata Motors, because after a very strong day, it's starting off on a positive note. Let's see if it builds on from there. Chandan Taparia certainly believes it will. Tamanna, what are you spotting?
Yeah, I'm interested in seeing your top gainer on the Nifty chart, which is Bharti, because it seems to be reacting to the Vodafone fundraise, which is why let's begin with Vodafone and see what's happening there. It was the big stock that we discussed pre-open. As well, finally, that much awaited fundraise detail is out. They'll raise about 45,000 crores, 20,000 crores of that is in equity. The stock down about 1.5% in open trade. Indus Towers is expected to benefit because 5,700 crore rupees is what Vodafone owes them. Will they get some of that money back if funds are raised, was the question. Not really reacting this morning. Torrent Power is the other one that we're looking at. It's received an LOI for transmission system for evacuation of power from RE projects from PFC, in fact. So that's talk about 2% up in opening trade. Vedanta had an analyst call yesterday in a clutch of notes, a mixed sort of response to Vedanta from various brokerage houses, but Nuvama has retained a buy, and that stock up about 2.5% to 3%. Patanjali Foods is the other one that we're talking about this morning. The contempt notice once again was for their Ayurvedic products, but Patanjali Food also seeing a downside at about 2%, a sentimental hit perhaps over there or in the opening trade of that stock. Another set of downgrades for your OMC pack from Nuvama again this time. So HPCL, BPCL, IOCL have all seen target prices reduced, all in the red, but not massively. I'm not seeing any major moves. Samina, are you picking up anything?
No, she quite quiet this morning. You've got a few stocks and the reactions are not very sharp. So like you said, this is what a stable market usually looks like. You know, you're not going to see massive run-ups or run-downs for counters, but a few that we are catching up to. I mean, I think Tamanna and Neeraj mentioned Bharti. The reason it's gaining also is because Mr. Mittal has indicated that they are looking to sell out of the non-core business and focus and talk about their focus to the in the telecom business. That could be a reason. So it could be another reason why you're seeing a big gain on a little bit of clarity coming in from Mr. Sunil Mittal himself. Well, in terms of other stocks that are drawing our attention this morning, you've got Cochin Shipyard that's actually up 3.5%. It is your biggest gainer on the street. The company is to inaugurate its hydrogen fuel cell ferry in virtual mode today, and on back of that new plant, the stock trades the gain of 3.5%. All cargo logistics, Taman has already mentioned that the stock is lower because of the monthly sales number seeing a decline. You've also got G&T India, that's a big order win I talked about this morning. Small company, a 370 crore order is what has led to the counter hitting upper circuit. Not surprised there, right? These are companies that usually react to order wins quite significantly. Well, apart from that, Motilal, Neeraj had mentioned those numbers for 9 months. The market seemed pleased. The stock is seeing a good gain. This morning, 1.5% higher. PB Fintech continues its upward journey. It's been a gainer every single day over the last few days. And today as well, the stock not seeing a runaway rally, but a gain of 2% nevertheless on a quiet market is what we are picking up on. Apart from that, you've also got a few other names that are doing well. So MMTC, KEC International, Tanla is a mind of its own, a story of its own, continues to do well this morning. On extension of the deal with Truecaller, the stock is up 3.5% in trade. You want to come on Tanla? You're giving me that look.
No, not at all. I don't know too much about Tanla, to be very honest. So
it's up 3,000% in the last couple of years. Only
3,000. So Tanla is something which I had put on my list yesterday only for the reason that I like their business model, and I think more and more there's going to be a use case for it, which is why that tie-up with Truecaller as well, and the AI component.
Yeah, just some context. I think Tanla had become a trader's delight. You were very often getting stuck either on the downside. So these are stocks that you've got to be a little more mindful of. I think at least historically they'll go into upper circuits
change
and
their name,
lower circuits.
to
Yeah,
platforms.
it's questionable. I mean, and they're reacting to a news like
But
this,
hey,
up 5%.
if it's gained 3,000%, who are mere mortals to comment on it?
Yeah, this is one of those markets right now where the rules really depend. Everything goes out the window.
But just a couple of stocks. I'm sure we marked Dreamfolks, but that's the best performer on the A group stocks this morning on the BSE, 7% higher on that brokerage note. So keep an eye out for that. Remember, yesterday's Cello World up 5% after that Motilal Oswal coverage. Today, this one about 5.5% after that. So that one. Paisalo Digital is the other one. We highlighted it yesterday. We spoke to the management, and that one is up another 3% today. So that's to be kept in mind. And lo behold, today Vedanta is up 2.5% as well. So that analyst meet and those notes have certainly done the trick. It's after a while that I'm seeing such a sharp move on Vedanta. Opening thoughts, Chandan Taparia. Anything that stood out for you? Any trades on the index?
Yeah, so like in index again, buy on decline needs to follow because major trend is intact. But as we are at new lifetime high, so some sort of supply we need to absorb. So I'll continue to be with buy on decline stance. As of now, for intraday players, 22,100 will be support. For positional point of view, 21,900 will be support. So by looking at that support, I'll play bounce of 50 to 100 points in Nifty index. Now looking at the stock wise, in morning we talked about Tata Motors. I have two more ideas where we can focus. First is buy on HL. We have positive on most of the defense name. Already discussed with you, we are expecting a target towards 30 to 15 HL. So one can buy HL. And apart from that, positive on the Tata Consumer. We have seen a nice breakout after a long consolidative move of 30 trading session. So one can buy with support of 1180. Here we have a target towards 1240. So Tata Consumer, Tata Motors, HL, and buy on decline with support of 22,100 in Nifty index.
Right. By HAL, that one's actually looking good. In trade, it's up 1.7%, structurally looking set for a bigger move in today's trade. Well, apart from that, you've got a few other names that are catching our attention. Actually, let's pick up Bharti. That's worth talking about. Avinash, while it seems like Vodafone's got it bad, Bharti is gaining this morning and gaining quite well. It is turning out to be a top gainer on the Nifty 50. Couple of things that worked out for Bharti. You had Sunil Mittal come out and tell Mint that they are actually looking to exit their non-core business for digital growth. Airtel has clearly shifted focus. On back of that fundamental news point or the commentary of the management, would you go out and buy Bharti?
Yeah, I think, Samira, I think my sense is that, the management commentary has been very strong post the Q3 numbers. And I think this news flow about getting out of non-core business is also something which the market has obviously liked. We believe that going forward as the 5G rollout gets better and stronger, Bharti is definitely well positioned in terms of not only protecting its market share but even improving its ARPUs. So we have been telling our clients to actually accumulate the stock slowly. We could see levels of around 1275 to 1300 over the next, say, 12 to 15 months.
Okay. Avinash, before we thank you, aside of steel strips and wheels from the metal space, any other new idea or a result that has looked interesting this earnings season?
Well, I think clearly, we are quite positive on companies like Action Construction Equipment. I think
was up 7% yesterday.
I think they have got a combination of capital goods, defense, and I think the defense piece, Neeraj, is going to get more and more better in the coming 12 to 15 months. Our sense is that this is one stock which has actually outperformed the market last year very significantly. And even today, the earnings trajectory looks pretty solid. So I think, at any decline, possibly, probably around 1200 or 1230 odd levels, one could look at levels of around 1350, 1400. So I think clearly the stock is in a very positive trajectory and we continue to be positive.
Yeah. Absolutely. Thank you so much, Avinash and Chandan. Great to speak with you. We're taking a very short break, but a special interview on the other side, and one which I must say I really enjoyed doing. I got the opportunity to speak with John Chambers. He's chairman of USISPF, that's the US-India Strategic Partnership Forum. Of course, runs a very successful startup, but of course, best known in his capacity as the Cisco chairman for 20 years and is Cisco Chairman Emeritus, though he's doing this interview in his own personal capacity, and the comments should be looked at it like that. So that exclusive interview, he's in India, spoken only to the NDTV network. Slice of that interview on the other side.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and
In a world of increasing global uncertainty, what is the next big thing? Is it going to be the decade of AI? Is that a story that is being overbought right now? And what will we see in terms of India emerging as one of the largest players on the world stage? Now, rather than me speculate about all of these things, I think the best person to speak to about this is John Chambers. He's with us right now in this exclusive interview, speaking only to the NDTV network. And remember, John Chambers' 2024 outlook is something that is very well followed, very well seen by everyone, and he gets most of his predictions right. So
I try hard. I've seen every movie, and I've made every mistake there is to make, but I'm pretty good at pattern recognition.
Yeah. So having said that, your predictions on inflation being a big pain post the pandemic, on the impact of COVID, on a whole host of things, has really ticked all the boxes. So that's a great spot to start with.
Yes.
And let's begin with that. So the biggest or the number one on your list for predictions for 2024 is AI, something which half the world is scared of and the other half is excited about. Where do you stand?
Well, I'm the half that is realistic on the opportunity it will bring. It will help us cure cancer. It will make us more healthy over time. It has the benefit to benefit every citizen in the world, and to have economic strengths as well as huge productivity strengths. It's going to move very fast, though, so I worry about job creation keeping up with the jobs that it will displace. I worry about misuse, especially in cybersecurity on it. But where you're leading me, I agree with, because when you talk to a person about their views for the future, your audience is going to say, well, I've heard about John, but I don't know him that well. You were kind in the introduction. In January of 2020, we said there's some illness coming out of China that is slowing business in Southeast Asia. And I said, this is going to have a major economic impact.
Yeah.
And then by 2022, at the time everybody thought COVID, and it was a terrible thing that happened to all of us, but thought that would be the dominant force in 2022 and 23. I said, no, it will be inflation, which unfortunately turned out to be very accurate. That was when I made the big bets on AI, saying it would become mainstream in early 22, and it did toward the end of that year, as you know. I've been betting on AI companies, including several major Indian startups, for 7 years now. And I think it will not only be as big as the internet or the cloud, it'll be 3 to 5 times its size. I think its impact on society will be largely positive, but we've got to have some guide rails in place. Do I think India has a chance to lead in AI in a way it's never led in technology before? I really do.
Today, if you ran a large IT company or an internet company and you're wondering, what do I do with AI, where I make money off it, I make sure it's safe, it doesn't destroy the world as a lot of people are thinking about it, regulations are on the horizon. What do you do right now if you led, as of today, of course, you lead very successful startup venture, and we'll come to that. But today, in that position, what would you do?
Well, when I left Cisco, I made my personal commitment. I would support them, but it was their company to run. And I wouldn't want the ex-CEO saying, here's what I think of that company's future, et cetera. So I did that very smoothly, and Cisco's a great company. It's my child on it. Now, back to your bigger question, however, a large high-tech company, or a large bank, or a large insurance company, or a large retail company, or a large oil company, you've got to have the courage to reinvent yourself. You've got to have the courage to disrupt. You've got to have the courage to destroy your business models before somebody else destroys them. You've got to have the courage to get out of your comfort zone, where you don't view AI as fear. You say it has tremendous power. I've got to understand its strengths, and I've got to understand how I'm going to use it uniquely. And if you watch the companies that have moved well in the stock market, and I'll pick a couple out, in the US, they're the companies that not only said, I'm going to adapt AI, and here's what I'm going to do in my strategy, but they were able in their most recent quarters to show the business results that came from them. Companies like ServiceNow have done a great job. Companies like Microsoft have done a great job. Now, you might say as an audience, yeah, but those are all tech companies. Postal service companies, government companies, they are the slowest moving companies in the world, right? I want to pick out La Poste. That's led by an amazingly good Philippe Wall, CEO. And with 260,000 postal workers, he made a decision a decade ago to bet on AI. And he explained to his entire employee base, to his shareholders, to the unions, on what that would mean for their future. He trained 230,000 employees on AI. You're talking about people who used to deliver the mail, who now are delivering services as a trusted band throughout all of France. He acquired 7 or 8 AI companies. He works with startups all the time. So every industry has a chance to reinvent itself. Now, here's the downside. If companies who have been successful keep doing the right things too long, they're going to get into trouble. And the market sees that. So you've got to have the courage to take risks. And as you start across uncharted waters, there are going to be some bumps along the way, and you have to adjust very quickly. That's what Silicon Valley's traditionally done very well. But it used to be mainly Silicon Valley where 90% of the venture capital goes. I make a huge amount of my own bets. And I've got 9 unicorns, as we said earlier, not bad out of 20 companies. And I'm a small startup, but half my CEOs are Indian diaspora or located here in India. India has an education and democracy system. You've learned how to partner with the US, and the US has learned how to partner with India. That perhaps was the biggest bet that I made 7 years ago, in saying this should be the most important relationship in the world, not just on business to business and nice economic returns, but to the lives of every citizen, for job creation, toward the 1.2 million jobs we need to create in this country per month. The ability to look at where the market's going and say India will not only be the most successful economically, but it will be inclusive of all groups. And to do it in partnership with the US, the largest democracy, we will work together in common goals such as supply chain, manufacturing, agriculture, defense, but have the ability to dream together.
Yeah.
Is it easy to do? No. But I think this country can do it.
You know, we have an election this year, a big one in India and the US.
Yes.
I may go as far as to say maybe the one in the US will be more of a suspense and exciting than in India. The markets, etc., have factored in policy continuity here at least. Does it make a difference to the partnership whether Trump is in the White House possibly, or a Biden continuation, or someone else? As a business leader, how big a factor is it about what happens in the United States in terms of elections later this year?
Well, one of the first things that I did when I was fortunate enough to have the leadership at Cisco in the very early 90s is I formed, along with one of the top venture capitalists, John Doerr, TechNet. And that was to have influence in Washington and around the world on technology, which we never did before. And we always did it as individual companies. And we built it with the premise that we cannot be tied to one political party or another. We have to represent all of America because there's going to be lots of challenges that go with it. So I think business leaders who make the mistake of tying themselves completely to one party or another make a mistake on that. I think the business leaders can say what their opinions are and what they view in terms of economic growth growth in creation and predictability. And then you can say your views in terms of the importance that India and the U.S. play very strongly, which I have no problem doing with whichever leader the U.S. picks. I wish we had stronger leaders in the cycle, to be very candid. As you know, the majority of Americans would like to see somebody other than the two most likely candidates. First time in my lifetime that's occurred. But my parents are both doctors. You deal with the world the way it is. And so whichever one wins, I will absolutely support. And whichever one wins, I guarantee you Prime Minister Modi will find a way to build that trust and the candid relationship. But the teams now trust each other. The American-Indian diaspora is amazingly powerful. Half of our large technology companies are led by ex-Indians.
Why do you think so? I mean, that's a matter of fascination back home as well. And, Indians here like to sort of think that, oh, they're our own. Of course, a lot of them have studied.
They are your own.
I mean, they've got those opportunities. In America, they're American citizens, but, we like to appropriate all your brown CEOs. But why do you think that happens?
Well,
why do you
you're
think
going to
that
have to
works?
accept me as an Indian, too, because I love this country. But what happened is very simple. Your IITs and your education system generated 3 decades of top engineers. And the majority of successful companies, whether it's Lisa Su at AMD, or where you're going with Microsoft with Satya, Adobe with Shantanu, IBM with Arvind, etc., half of those leaders are Indian engineers. I'm the exception. I'm a business leader in a technology-driven environment. And so the reason is very simple. An education system that teaches about technology and how to build great companies is just getting stronger, but also one that learns how to partner together. So if you talk to any of the leaders I've just met, all of them believe hugely in the Indian-U.S. relationship. All of them believe in how do we benefit citizens in America and the citizens in India, inclusive, and regardless of age, geographic location, religion, etc. on it. So it's a simple answer. People try to make it too complex. When I said India will become the largest economy in the world, first leader, I think, to really say that very aggressive on a national stage in front of your prime minister and in front of Secretary of State Blinken, that was, in hindsight, a little bit scary, and it was.
I want to ask you why you made that bet, and you've spoken about Prime Minister Modi, through this interview. You've even said that I wish we had a leader like him in the US. I want to understand why. I want to understand why, and why you are saying that India will be the largest economy in the world. It's a matter of when, not if.
Yes. So you really hit at the heart of the issue, and you got there very quickly. The reason I'm very good at pattern recognition, I'm dyslexic, which means I have to go A, B, Z. I can't go A, B, C, D, E, F. I get lost in it. And for any of your audience who's dyslexic, and it's something that is a weakness on one hand, but you have to learn to balance. It's a nice way of saying, once I see pattern recognition, I look, how does that play out? And that's why people say I'm able to see around the corners. I'm able to understand the internet, the cloud, cybersecurity, voice being free. Every country becomes digital. Now every country becomes an AI company. If you look at the mathematics, India's population is going to have the fastest economic growth, not just for the next 5 years, but with the plans and programs your prime minister is putting in place now for the next 20 to 30 years, assuming that you have the courage to continue to take risks and be critical of yourself on it. You look at the population growth, average age 26 or younger, average age in China aging rapidly in terms of the direction. China's population going from about 1.4 billion to 800 million with a much older population. India's going from 1.4 billion to 2 billion. The ability to do the education with the speed, the optimism, the entrepreneurship. China's issues are how self-inflicted. They got away from reasonably free enterprise. They got away from startups. The government started to get involved in almost everything, put regulations in place, put a win-lose mentality versus the US and much of the rest of the world. Doesn't surprise me, they've slowed down.
Do you think they can recover?
No.
No?
I think the mistakes have been too dramatic. Now they've got demographics going against them on population from 1.4 to 800 million. Could they? Yes, but do I think they will? No, because it requires tremendous courage. And you've got to say, what was it that got us on top and miss? Now, remember, 3 years ago, if I'd said that, everybody would look at me like, John, what are you thinking? But I said it 3 and 5 years ago. And It's hard once you lose that entrepreneurial spirit. It's hard once you use the foreign direct investment into a country to get it going, to get trust. Do you have the track record? Do you have the relationships and trust? And China lost most of those. Now, do I think it's in India's and the U.S. best interest in China to recover and get stronger? Absolutely. Because this is one the whole world can benefit from. And do I think over time the U.S. and China will do dramatically better than we are doing today? Yes. But China came with a win-lose attitude. And so I think in that, people forgot about entrepreneurship and the empowerment. And if a government, regardless of its form of government, over-regulates, over-controls innovation, you don't move with the speed of innovation. Could they recover? Possibly, but I think if you look at the math, it's very hard. Okay. So how did I see it? Purely math. It was easy to do the math out, the education, the democracies working together, etc. Now, if India misexecutes or the US misexecutes, could China be there? Yes. Fast forward from 3 years ago, everybody said China would be number one. People said US would be number two, India number three. I actually think it's going to be India, US, and China. If I were forecasting out half century, I'd say the US will be probably 30% bigger than China. India will be maybe 90% bigger than China.
Whoa.
So we'll see if that plays out.
Yeah, that's a big
one.
Am
I an optimist? Oh, yeah. But I believe in your country. I believe in your citizens. I believe in the relationship with the U.S. You are a country of dreamers, but you have the ability now, because you've seen it work, to take dreams, inspire hope, make a difference, and drive it through.
This has been fantastic. Thank you so much, John.
It was an honor. Thank you as always.
Thank you.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by
Welcome back. You're with India Market Open. All right. The company in focus this morning is PNB Housing Finance. Morgan Stanley note recently saw 40% upside on the stock. The Q3 numbers have also been fairly decent. We're trying to understand what makes this housing finance company tick and the focus that they have kept on the HFC business, paring down the corporate business, etc. Girish Kauski, the MD and CEO at PNB Housing Finance, is joining us now for more on the story. Mr. Kauski, very good morning. Thank you for speaking with us here at NDTV Profit. Let's start by talking about your Q3 numbers and just, as a takeoff point for our conversation. Was it a tough quarter? We've seen that in the financial space, your net interest income was down about 19% year on year. Operating profits were also, squeezed about 20%. Provisions were up. How would you look at that one quarter three? Is it an aberration, or are you seeing a climate which is slightly difficult right now?
Morning. So I think quarter three was soft because there were a lot of exceptional items. I think there were a lot of one-offs in comparison. I think if you look at PNB Housing today, we are through a transformational journey, and this is in two phases. So phase one is now over. Phase one had to do a lot with raising capital, getting the corporate book right in terms of rundown, and getting the asset quality right. On corporate, we were at about, let's say about 2 years back, we were at about 35% of NPA, and now it is less than 3%. So we have just one account. We are expecting resolution in this quarter. So corporate is more or less sorted. We ran down the book from 18,000 crores to about 2,200 crores as of last quarter end. Now, and also we did a lot of work on growth because year back, if you see the growth, it used to be negative or flattish on the retail side. First 9 months, we have progressed from 0 to about 13.5% in terms of book growth and disbursement growth of 22%. So quarter three was soft because of exceptional items. Otherwise, now we are ready for phase two. Phase two, our focus is going to be in terms of growth and margins. The reason why I'm saying growth is that in spite of all those challenges, in last 1 year, we've showed a growth of 13.5% on retail. Since corporate, we have stopped doing business temporarily. The guidance for coming year on book growth is going to be 70, and disbursement growth is going to be 24% plus. So in last, by this March, we will be at 300 branches. So if you see in last 17 months, we would have opened 200 branches. Taking it to 300, that means from 100 to 300. So from coming financial year onwards, we would have 300 branches. And out of 300 branches, 200 branches will be focusing on lower end of prime and affordable business, which means these are high yield businesses. So going forward, growth and margins is a focus.
Okay, I'll come to you on details on margin and growth guidance, but just a word on your corporate book, and that's impressive, the extent to which that corporate book is run down. You're saying there's one borrower left, you're going to close that this quarter. Can you give us an idea both on timelines and the amount that you hope to recover?
No, I mentioned there's only one NPA account left.
Okay.
The book is 2,200 crores, which is down from 18,000 crores. So that one account is small account, it's about 80 odd crores. So that we are expecting resolution this quarter.
Okay, so it's not going to make a huge difference here or there. It's about 80 odd crores. And then, you've cleaned up that book completely. Talk to us about the focus as well, because your non-housing portion of your book is, relatively smaller. The focus is on the housing finance side. Is that where your focus continues, and how do you aim to grow it?
Our focus would be on both home and non-home, but both under retail. Largely, our focus will be on retail. So as we speak now, we are close to 97% on of retail book at a portfolio level, and incrementally we're doing only retail now. So our focus is going to be on retail. Within retail, we are operating in two segments now. One is prime, and the second one is affordable. We are launching a new segment from April, that is emerging markets. So out of the 300 branches, 160 branches would focus on affordable. We are seeing very good traction. We were one of the fastest to build a AUM of 1,000 crores. So we see a lot of traction there. So we will have 160 branches focusing on affordable housing. And the yields, what we are expecting for coming year is going to be about 12.5% from affordable segment. and 50 branches would be focusing on emerging markets. So here the yield should be close to about 10%, and the balance 90 branches will be focusing on prime business.
I want to understand your loan growth trajectory, Mr. Kautsky. So your loan growth in FY25 was about 15%. The following year, FY25 is expected 17%. Do you aim to bump this up? What is your outlook for your loan growth rate?
I think for next 2-3 years, we should grow the book by 17%. So this year, it's going to be between 14 to 15%. I'm talking about retail. Since we are not doing corporate now. So on retail, the growth this year is going to be between 14 to 15%. And from coming year, for next 2 to 3 years time, we will focus to grow at 17%.
In your individual housing book, which is about 2% of your loan mix, how much of it is affordable? And I'm just trying to get a sense of, how much of it is now growing because of this entire real estate housing boom that we're seeing. Are you seeing benefits of that, and going forward, do you see benefits of that sustaining?
Oh, definitely, yes. Demand is quite robust. Real estate is doing well since last 3 to 4 years time, and this cycle would last for another at least 5 to 6 years. So we see a lot of demand. Affordability has improved drastically. And also because we had changed our focus and we had started affordable vertical last year, and we're going to start emerging vertical in the coming year. So we see a lot of scope, especially on affordable and emerging in terms of profitability. And the prime pool also would grow. And overall, the growth is going to be about 17%.
Geographically, the lion's share continues to be from Maharashtra, and you think will continue to be from Maharashtra?
No, we are a national player. So we are operating in about 22 states. Our focus is on all the zones. South, north, and west, to a small extent in east. I think that focus would continue. However, within the segments, we may operate to be slightly skewed towards one of the zones.
That you are. I'm just wondering if it's going to continue in that trajectory, or you're working on new geographies and locations as well.
So we are getting deeper into each of these geographies. I think in terms of skewness, it will be slightly skewed towards south. Maybe 38, 39% incrementally, and the rest would be between west and north. So in terms of balance, it will be almost, all the 3 zones would contribute almost similar numbers.
So more focus on south. Just on your margins, I want to understand that you've had a credit upgrade recently, Mr. Kautsky. Has that helped you in terms of cost of funds, and will that flow into your margins?
Oh, definitely, yes, it has helped. And we also see that the interest rates have now peaked out. And in about 2 quarters from now, the rates would start dropping. So we will also get some benefit on the cost of borrowing because of the rating upgrade. So definitely we'll see some benefit. And this apart, focus is to increase margins, and directionally, strategically, now 2/3 of our branches would be focusing on originating business at a better yield, at a higher yield. So this would definitely, maybe after 2-3 quarters time, the margin should improve.
Where is that higher yield coming from, and what would be your margin guidance when you're saying it will improve in 2 to 3 quarters? Can you give us a sense, a direction, and a ballpark number on that?
So as of now, margin is about 3.5%. So we'll be able to maintain that for next 2-3 quarters. After that, I think with every passing quarter, the margins would improve as the mix in the book keeps changing. There is no guidance on future margin, but definitely I think after 2-3 quarters, margin should improve because most of the origination would be at a higher yield.
So 2 to 3 quarters later, you see an improvement. You can't really give us a number to where you expect that to go. But thank you so much, Mr. Girish Kautsky, for taking out the time and speaking to us today. That's a wrap on the India Market Open. But up next, we are going to be seeing Talking Point. Stay tuned.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to...
Juniper Hotels, a fresh issue of 1,800 crores. It's just getting listed or has listed. This is the Hyatt brand, remember? In fact, 9 seconds left for the listing to happen. And while hotels are a very strong subset currently within the markets, just a 2-time subscription at the end probably leaves to Juniper not necessarily having the best debut. Let's get the price up on the screen. While these are the visuals, the price up on the screen, about a 3% uptick, so nothing too dramatic. Remember, about a year ago, it might be a very different story. Though hotels have done really well, Indian hotels and the likes have actually hit life highs as well. But the hotel sector was like in a thick of a lot of action back then. Who knows, things may have been different. But for Juniper as well, I mean, it was a largish issue, and related to the financials, the subscription numbers weren't the strongest, so maybe this was anticipated. But thanks for tuning into Talking Point, and I'm your host Neeraj Shah, and the case for a chat today. Well, we will ask our guest about whether this persistent trend of DIs investing into the market at all valuations persist. And in fact, the question on valuations as well, that have valuations peaked for the period, or could there be a chance of even further valuation upsides for the Indian markets? And of course, amongst the other things, while everybody's been talking about manufacturing, we try and dwell with our guest today on the consumption side as well, and try and understand from him about what are the trends of India's consumption spends and what investing decisions can be made out of that. Our guest today is Ajay Argal. He's Senior Vice President and Portfolio Manager at Franklin Templeton. Ajay, great having you. Thanks for taking the time out. Hope all is well.
Yes, thank you, Neeraj. Thanks for having me.
The pleasure is entirely ours. Ajay, one has to admit that the market has kind of stood on the crutch of DI buying for the last innumerable number of months. Now, we've seen indices being buy on dips simply because the flow of money from the retail investor and the domestic investor has been very strong. My question to a portfolio manager like you is that with the valuations the way they are, with global markets doing what they are doing, while you're getting flows, would you be investing that money at the current valuations? Are there enough pockets available, or would you be a bit circumspect and take a bit of a cash call?
Yeah, so as you highlighted, the market valuations are definitely not cheap, but at the same time, there are pockets where it are not too expensive. So if you kind of just segregate even at the market cap level, there is a clear indication that the large caps are kind of reasonably valued. They are not on the expensive side, but whereas if you look at especially the mid caps, then the valuations are definitely on the higher side. So Nifty index, if you look there, I mean, it is trading at around 21 times 1 year forward earnings, which is around 5 or 10 year averages and medians. So it's kind of in a reasonable range. But whereas if you look at the Nifty mid cap index, then it is kind of trading at around 27 times 1 year forward earnings, and which is also kind of a 30-35% premium to the Nifty index. And we have seen in the past that typically those are the limits at which the Nifty, or at which the mid cap index trades. So mid cap on a relative basis to the large caps are on the expensive side. Can they be more expensive? Yes, they can be, like they were in the just immediately after post-COVID, though it was a bit different then because the earnings were much more depressed. So on a normalized earnings, this kind of premium for the mid caps definitely is on the higher side. So that's why we see that the pockets of opportunity which we are getting when we do our bottom-up stock picking, it's much more in the larger caps compared to the mid caps. And just as an aside, even the small caps, they are trading at 10% premium to the Nifty index, which is again close to the peak which they have traded in the past. So coming back to your questions, what do we do in this kind of market? Our objective is always been to get the better stocks within the portfolio, because as portfolio managers, our main job is to invest the money which the investors have given to us in the markets on a fundamental basis. And we generally don't take too large a cash calls, maybe 5, 6, maybe up to 7%, but not beyond that, because we are not kind of, the equity funds are not asset allocation funds. They are the funds to get the best stock ideas into the portfolio. So we still see pockets where we think that they can do relatively better. And of course, equity is a long-term investing horizon instrument. So you should not be looking at immediate short-term, maybe 6 months, 1 year. So definitely over the next 6 months to a year, the investor return expectations should be toned down. But from a longer-term perspectives, all the growth drivers which India have in terms of demographics, in terms of under-penetration, in terms of the young population, and the consumption which will keep on increasing as we go forward over the years and decades. Those kind of fundamental long-term growth drivers are there. So it remains a very attractive market, but just a bit of caution from the short term.
Got it. Caution for the short-term opportunities in the large caps, not as much in the mid-cap space. So that is first key takeaway from this conversation thus far. Where is it that you're seeing, Ajay, the best possibility of earnings growth over the course of the next 6 to 12 odd months, based on whatever assessments that you and your team have made about commentary in the first 9 months and quarter 3?
Yeah. So we are seeing pockets where the earnings growth is very strong, but you have to balance that with the kind of valuations which are there in those stocks. So obviously, some of the retail stocks, for example, have had very good visibility for the growth, but it's kind of, in our opinion, more than compensated for the valuation. So it's just not the growth which you should look at. You should look at the combination of growth versus valuations, and which is where we try to position ourselves, that we generally get into growth at a reasonable price. So from that perspective, we are finding pockets of opportunity when we combine the growth and valuations. We are finding that we are positive on the industrial sector, though our positivity has kind of reduced because the stocks have done phenomenally well. But purely from the growth visibility perspective, that is the sector where the growth visibility is the highest, because the order books have been strong and the execution by most of the companies in the sector has really picked up. So the top line growth, and then there is the operating leverage, so that improves the margins. So a lot of companies within the sector have good growth visibility, especially over the next 6 to 12 months. And the valuations, though they are on the higher side, they are not terribly expensive. So we are getting pockets of opportunity there. The other sector which has not done so well in the recent past is the banking sector, where the growth visibility is reasonable, though there is a bit of a tone down of expectations in terms of growth as well, because the RBI itself has highlighted that there are certain pockets, especially in personal and unsecured loans, where they want a bit of a lower growth. But even then, the growth possibilities look very sanguine in kind of 12, 13, 14%, that kind of band. And there the advantage is that the valuations are really reasonable. This is the only sector where the valuations are lower than the last 5 or even 10-year averages. And the margins is kind of normalizing, because we saw very high margins in the last couple of quarters, which was because of the timing mismatch between the asset pricing and the liability pricing. And now that is getting normalized. But in spite of that, we have reasonable growth. Another sector we see good growth opportunities is the real estate. So the real estate, the cycle has really turned. Because the affordability has improved substantially, especially over the last 10 years or so, when the real estate prices didn't go anywhere. If you go back 2 years, then 10-year period before that, the real estate prices actually didn't move at all, whereas the salaries kept on going up. So the affordability increased, and therefore there is a pickup in the real estate cycle. The launches, the pre-sales, everything is happening at a very fast pace. So the growth visibility is very strong there as well. And the other sector where we are positive is pharmaceuticals, and there it is actually more stock specific. So there are a few stocks where we see that the growth visibility is very high, and the growth in the domestic market is anyway quite stable, around the 10% band. But certain companies are having specific strategies with respect to the export market. So there is a company who is specializing in the specialist pharma space in the US, another company who is specializing in complex generics, where the competition is much more limited. So there, in those kind of companies, we are seeing growth visibilities with a reasonable valuation. So these are some of the pockets where we see that the growth, especially in the near term, is likely to be very strong.
Okay. Well, we will talk about some of the industrials with Ajay as well, because I remember sometime in December, if I'm not wrong, Ajay and Franklin Templeton were very constructive on power, for example, as a pocket as well. So we'll talk about that too. But just one quick broad macro question, Ajay. What has made headlines is the fact that FPI ownership in Indian stocks is at maybe decadal lows or thereabouts, and kind of is probably something that is very easy to deduce, considering the fact that DIs have been the more active investors as well. Would you brace your portfolio for better valued stocks which may find a fillip as well because of technical reasons of FII inflows coming in at some point of time if the EM inflows return? I'm just trying to understand if there is a tactical play out there in the minds of a large DI investor.
So it is there at the back of the mind, but it's not, I would say, a significant part in the decision making because we should be and we are focused on what the growth opportunities are and what the market expectations are as we can infer from the stock prices. So you can work back from the stock prices and try to figure out what is the imputed growth that the market is indicating in a particular stock given the current stock price. So we try to assess that, and then we try to see whether those growth expectations are likely to be met in our opinion or not. And if we see that they are not likely to be met, then obviously we become cautious in those kind of stocks. So on the FIs itself, then it's there are too many moving parts because it's not only India, it's how the other markets are doing. And what other opportunities they get. So it's kind of a call for them on the other opportunities.
Most certainly,
so
Ajay. Ajay,
so
but
we don't. So that's the reason we don't focus too much on what their behavior could be.
Agree completely. No, I didn't mean it that way. All I was saying was that, the common belief is that because FIIs were so over-owned in banks, right? And the FI supplies leading to the kind of subdued performance in banks, despite the fact that their quarterly performances haven't been as bad. In some cases, they've been pretty good too, for the larger ones at least. So could that trigger moving, either the selling going away or fresh buying coming in when the buying returns, be a factor that could serve as an add-on to the fundamental performance for banks? Are you invested in banks in a big way?
Yeah, so I mean, we are invested in the banks in a big way, as I highlighted that it is one of our sectors where we think that the growth versus valuation combination is the best. Purely by the very reason that the banking sector, the weightage is the highest in the market in any of the indices you look at, especially the large cap indices or the even the BSE 200, NSE 200, even that kind of diversified indices, or even if you look at the NSE 500 for that matter, the weightages are very high. So any investor, when he is selling, then perforce the banking sector will be the sector where the selling will be the maximum. So typically you will find that even in kind of NSE 500, the banking sector weightage is 30%. In a Nifty, it might be a bit more. So if there is any selling, whether it is from foreigners or whether it is from domestic, the large portion will come in the banking sector. So that is something which one has to be cognizant of. But at the same time, it works in reverse as well. When there is buying, then perforce you will have to take exposure to that. I mean, those are as far as the technical things are concerned. So we have all these things in our mind, but as I highlighted, it is not one of the critical decision factors because there are so many moving parts here. And within that, I mean, it's not a homogeneous categories. Even if you look at foreigners, there might be foreigners who have been invested in India for very long and they're sitting a lot of profits. So they might be booking profits, whereas some others might be new and getting in. So they might have a different thought process. And same goes for the DIS and the individual funds which we manage. In certain funds, we might be balancing the sector positions. In certain funds, we might be kind of having a profit booking. So it's so many moving parts there. If you try to figure out from that perspective, it gets very entangled. So we don't usually go there.
Ajay, stay on. So much more to talk about. We'll take a quick break. Be back with more conversations around specific pockets. Industrials is a thing to focus on. We try and do that on the other side.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk
Back with Talking Point in conversation with Ajay Argal, Senior Vice President and Portfolio Manager at Franklin Templeton. And we spoke about industrials and consumers as the cases for a chat. Consumption is interesting, Ajay. This whole recent data that has come in wherein the pattern of consumption has changed so dramatically for households at large India-wide. Discretionary spend so much more than basic staples, etc. How are you positioned on the consumption end? Are you at the upper end of the K curve? Are you now betting on staples because they are maybe on a valuation wise as cheap as they have been in the recent past? How is it that you're playing this theme?
Yeah, so generally over the last many months, we have been a bit underweight on the consumption side, and especially the consumer staples. So as you highlighted, there is a dichotomy, and the mass market on the rural side, the consumption is more muted, whereas on the premium side and urban, the consumption is having a better growth. So we still think that going forward, that will be the case. And we continue to remain substantially underweight on consumer staples, because we have seen that even now most of the companies are having a lot of difficulty in having volume growth, and especially the companies which cater to the mass market or more towards the rural markets. And even when they are kind of cutting prices, the volume growth is not kind of improving. So which means that maybe this will continue for maybe some more months. So we are not positive at all on the consumer staples, and this is also need to be dovetailed with the kind of valuations they have been trading at. So in spite of quite a big slowdown in the growth, the valuations have not corrected anything meaningfully. So that kind of makes our underweight position. Whereas if you look at consumer discretionary, we have been positive on the pockets of it. So we had been positive on automobiles, which have already done well. So OEMs as well as certain auto ancillaries. And then we have some positions in the online food ordering, which is part of the consumer discretionary. So there we see that there is a decent growth, both for the market as well as the market share gain from the other players in the food consumption, whether it is from the restaurants or whether it is from some of the other QSRs. So we are having substantial positions in those spaces. So there are pockets in the consumption where we see that the growth is better, and in some cases the company's profitabilities have improved and they've got back on the or rather got on the profitability path. If you look at the online food delivery, which was earlier making a lot of investments and therefore not so profitable. So these are some of the pockets where we see opportunities in the consumption space, but generally mass market we are still kind of cautious.
Okay. The other thing is industrials, and I want to focus maybe not as much on just pure play industrials, but if I can qualify power as a part of that subset. Has that had a phenomenal run, Ajay? Almost all forms of power related businesses, finance, equipment, ancillaries, etc. But that space has some tall ambitions. India has tall ambitions as a country in power. Are you still constructive here?
Yeah, so we are constructive from the opportunity from the long-term perspective. But as you have highlighted, the stocks have done phenomenally well. So which means that the kind of numbers you are showing, it shows that the expectations is very high in all these stocks. So basically, the market participants are saying that they are very sanguine about the growth opportunities, not even in, I mean, not only in the near term, but maybe even a 3 to 5 year period. They will have the kind of growth which they have not seen in the last 3 to 5 years. Whereas this sector itself, we see that it requires a lot of investments. It requires a lot of execution skills. There are many approvals required, which sometimes take a bit longer than anticipated. Whereas if you look at the stock prices, in our opinion, a lot of them are kind of priced for perfection. So they can still give you returns in line with growth if they are able to execute the opportunity which is there and the expectations which are there on a very clinical basis. Basically, they execute it perfectly, then they might be able to give you some returns. But whereas we think that that might be a difficult task to achieve. So generally, we have participated in quite a few of them. But over the last few months, we have been trying to book some profits because we think that the markets are really getting very, very optimistic on this side. And one needs to be cautious, especially considering what they've already returned and considering that there might be challenges in growth to the extent that the market is expecting. They may not be able to achieve that, and that could lead to some correction in these stocks.
Got it. Ajay, so good talking to you today. Thanks for taking the time out and giving us your sense on a few key points. Much appreciate your time.
Thank you. Thank you, Neeraj. Thanks for having me here.
The pleasure was ours. And viewers, thanks for tuning in to this edition of The Talking Point.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore was sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Markets trade flat after opening with minor cuts. Sensex trades below 73,200, while the Nifty crosses 22,200. Sectoral indices trade mixed with consumer durables and IT leading the gains. Meanwhile, media and auto companies lose out this morning. And shares of Vedanta jumped 3% in early trade. Brokerages Nuvama and Antique retain a buy call, citing a positive analyst meet. Vodafone Idea Board approves fundraise of up to 45,000 crore rupees via equity in debt. Promoters to participate. The stock is under pressure, down 3%. And India's economy may surpass that of the US and China, says John Chambers of Cisco in an exclusive conversation with NDTV Profit. Welcome to the FNO show. This is Meena Nalwala and Agam Vakil. We both will take you through all the action in the FNO markets. Agam, it is a relatively flat morning. We're eyeing expiry tomorrow, but no fireworks expected between now and then.
I guess not, but it doesn't mean that we may not have any volatility, because the way things are panned out at the moment, well, we do know that, on an intraday basis yesterday, there were very, very sharp moves towards the upside as well as the downside. And, it's not very different today either. Well, the whole idea behind the fact that there could be consolidation, it's not bereft of, well, very sharp gyrations in the middle. And that's exactly how things are panning out today as well. Of course, today is not an expiry, but we are seeing some very sharp moves on the Nifty as well as the Sensex towards the red and the green. And it's something that's going to be on a lot of traders' minds tomorrow as well. We're going to very quickly take a look at how things are panning out for the futures and options space. Let's take a look at, of course, this is the February futures. We're not going to see too much traction in terms of addition in open interest. Why? Because, well, we're in expiry week. So we will have a substantially higher traction in March now, even as we go through the rollovers coming through. And if we can, in fact, take a look at the Nifty February-March series as well, well, there you have it. We are seeing an increase in open interest there. Of course, we're going to start seeing rollovers pick up substantially towards the second half of the session, and of course tomorrow all over. But the Nifty is flat at the moment. Moving on to the Bank Nifty, that's where we are again not seeing too much traction. Unwinding in the February futures, the March futures obviously seeing considerable increase in OI. In fact, that's where the open interest has moved up around 9.5% as we speak. What potentially looks like longs, but we don't necessarily know that for sure. We're going in a bout of, well, should I say consolidation, aren't we? And well, in terms of the options market, that's where perhaps all the action is going to be. Now, in case of the Nifty, we have built a sort of a base around the 22,000 mark. We are currently at 22,200. And on the higher end, we may see some amount of resistance in the range of 22,500 to 22,700. And that's indicated by your open interest accumulation around those strikes as well as with respect to calls. Today, we are seeing a lot more traction there once again. And of course, while the Nifty is largely flattish, that's where those are the levels that we're going to keep an eye on. But the Bank Nifty, now that is a little bit harder to tell because it's been a little more volatile as compared to the Nifty of late. And the Bank Nifty, we're continuing to keep an eye on 46,500. And on the higher end, 47,000, though we're less than a percentage away from that mark. But 47,000 could perhaps be a little bit of a resistance, pardon me. And if we do surpass that in tomorrow's day of trade, that bout of short covering can trigger all sorts of reactions in the markets, and that's something that we will be keeping an eye on. But these are largely the levels that we're watching for today and tomorrow, Samina.
Right. Well, a couple of other stocks as well in the broader markets we can highlight that are trading one way or the other. Vodafone is the stock of the morning under tremendous pressure on back of those fundraising plans. The street's still not convinced that they're going to get that money, and of course once that money comes, where it's going to go. The stock is down 6.5%. Paytm this morning is seeing some pressure. It's been hitting upper circuit every single day for the last few weeks. This morning though, down and out in trade, down about 4%. You've also got IRB Infra that is seeing some weakness. Suzlon, Varun Beverages, NCC, to name a few on the sell side. On the upside, you've got V-Guard that's up 7%. Triveni is looking good. Aegis Logistics, Cochin Shipyard, Mazgaon Docks are both seeing some action. We'll of course talk about that in more detail with Ajit Mishra, who's joining in, and Ashish Kayal. Good morning, gentlemen. Thanks for joining us. Ajit, I'll come to you first. We're eyeing expiry tomorrow. It's a quiet morning on the street, and Feb has actually been a pretty good series as well. Historically, Feb has a seasonality factor where we've sold off, but this Feb is different. How would you trade expiry now?
Yeah, good morning, Simina, and good morning, Agam. So you rightly mentioned that the past data says that we usually see profit taking, but it's no different. Considering that the kind of gains that we have made so far, it's more of like consolidation. The good part is that here we are holding the record highs. We are respecting the short-term averages on every dip. So in a way, it is positive, but at the same time, we have not been observing any kind of momentum in the market. So, if somebody has to take any decisive call that whether we are going to see 20,500, 800 first or 21,900 first, that seems difficult. But as long as we are holding above these short-term averages, 21,900, the prudent approach is to stick with the market trend and look for buying opportunity on the dips. And 22,000, 22,550 is a zone basically where we have the strong base now. So that's the area basically where one should look for buying opportunity with 300, 500 being the upper targets. And for the expiry also, I feel that's going to be a muted one, considering the kind of action that we are seeing with the tussle around 22,200 in the Nifty. Yes, the outlier could be the movement in the banking, because banking is also holding the short-term averages, and at the same time, we have not seen any major participation from the banking majors. So in case if something happens on that front, then it might result in a quick move towards 22,400, 500 zone. Otherwise, it's going to be a muted session, expiry session.
Okay, well, there you have it. That's the view on the Nifty. Keeping an eye on 21,900. That is perhaps the level at which you may want to transfer your risk elsewhere. At least that's what Ajit has to say with respect to the Nifty. Ashish, good morning to you as well. How are you placed on the Nifty at the moment, keeping in mind positionally over the next perhaps week or so, as well as tomorrow's expiry?
Hi, morning to you and all the viewers. If you look at Nifty, I think it's in a consolidation phase. We saw the last momentum on 22nd of Feb, and post that we are just seeing it in a range, in a broad range with the upside hurdle around 22,290. It's not able to break that. And on the downside, the support for the index is going to be around 22,080. So that's the broad range within which the entire index is moving. But having said that, I think there is acceptance near the upper end of the range, which is a positive sign. So I'm going to look for any kind of a dips here as a buying opportunity, aiming for 22,290 again on the upside. And for maybe tomorrow expiry, we can expect some kind of a momentum to start generating. It is some nearly 2-3 days since we are moving in range. So I'm expecting the expiry to be around 22,250 odd levels, and short-term opportunity for long. From the weekly perspective, I think the overall index tone remains bullish. We can see the levels of around 22,420 on the upside, and as long as 22,080, which is around 100 points from here, is intact, and below that there can be some kind of a pressure that can build up. But I am not too pessimistic as of now. I think Bank Nifty should contribute from here on, because that's the index which is still far away from the lifetime highs, and Nifty is trading near the lifetime highs. So Bank Nifty participation becomes important. And also, if you look at the OI data, there is sufficient build-up at 22,000, both on the calls and the put side. So looks like short straddle is in play, and that's why the derivative traders are expecting a broad range. And so I will go with buy on dip strategy as long as 22,080 remains intact.
Ajit, what is your trade on Bank Nifty? I mean, it's been a couple of months since it closed above 47,000, and it's largely been an underperformance compared to the benchmark itself. Are you expecting a little bit of a catch-up here? How would you trade Bank Nifty?
Certainly, Samina. So as like you mentioned that the banking index is also holding the short-term averages, though you have rightly mentioned that the attempt to hold and sustain 47,000 mark multiple times, we have seen selling pressure coming in. But as long as we are holding above 46,300, I feel that one should continue with the buy on dips approach in the banking also. And once we manage to hold 47th, then we have a major gap to fill, that we have on the daily charts. So 47,800, 900 could be the positional targets. So yes, the risk reward is comparatively favorable if we talk about banking. But at the same time, if you see the performance of the private banking majors, Amina, so that is the challenging part, because we are not seeing the alignment. So one day we are seeing Axis and ICICI doing well, and Kotak, SDFC, IndusInd Bank, they are really under pressure. And the other day equation changes, but largely it remains the same, that 2 or 3 counters are witnessing a bit of a profit taking on every alternate day. So until we see the alignment within the private banking majors, which holds considerable weight in the index, I doubt that there will be going to be any meaningful move. So one should keep a close eye on these top 4-5 names for clues on the next probable momentum in the banking index.
Okay, so Ajit did make a mention on Kotak Mahindra Bank. Ashish, if you could come in on that one, because this one has been a perplexing one among the private sector banks. While we have seen a lot of strength, Kotak Mahindra Bank has not seen as much. How would you rate this at the moment in terms of a buy or a sell, and how would you go about strategizing here?
See, if you look at the weekly chart of Kotak, it's very, very interesting, because if you really check that, you will realize that since 2021 August, the stock has been moving in a very broad range. On the downside, the very important support is around 1660 levels, and on the upside, the stock has been managing to failing to sustain about 1980. So that's a very broad range within which the Kotak Bank is moving. I think the overall stock is now approaching back towards the lower end of the range, and that's where the support should kick in. So we have to keep a close watch if on the daily time frame chart we can start seeing some kind of a positive traction back above 1725, 1730 levels. That's the important level that we have to keep a watch on. There is some loss of momentum on downside. We can see some positive divergence, which indicates that the overall trend can possibly reverse on the upside, but we need price action confirmation about 1730. If that happens, then Kotak Bank can start moving towards the previous high of 1770 and much higher levels. So over the short term, yes, there is some pressure building up in Kotak Bank, but the momentum is less. I'm optimistic it will cross 1730 and we can aim for 1770. And the support for the stock over near term is going to be around 1690 levels.
Ajit, you've picked up HAL as a buy call this morning, and we've seen BDL move quite sharply in the last few days. BEML also tried to do that big move over the last couple of days, and HAL this morning is looking like it's higher. What is the trade? A long call there?
Yes, Amina. So within the defense basket, like, HAL, BDL, BEL, they all are like, gaining traction at the same time. And HAL is comparatively stronger structure because we have spent, considerable time around the record highs with negligible price action. So it's a tighter range. And with today's breakout, we feel that 3270 immediate target, and positionally it could, inch toward 3400 levels or maybe higher. This is one candidate that from the defense basket that one can look at, and your stop should be at 30.95 for the fresh trade.
Right. Anything else? I think Indigo as well, Ajit. You got a trade on that one too?
Yes. So Indigo, Samina, like after this recent move, the last 3, 4, 5 days indicates a kind of tussle among the bulls and bears, and but it's clearly the clear uptrend that is in place. So I feel that bulls will be able to manage a breakout this time again as well, and 3260 is something that it can retest anytime soon. So 3150 should be the stop for this position, and one can go long in Indigo as well.
All right, Ashish, how about you? What trading ideas do you have for us this morning?
I also have a pick on the HAL because of the positive strong breakout. The volumes have picked up pretty well. The stock has managed to bounce back from its 20 days average also. So HAL is on my radar as well. And long positions can be created here. I'm expecting a target of around 3380 on the upside. And one can maintain a stop loss of 3045 for HAL on the downside. And the next topic is going to be MFSL, Max Financial Services Limited. We can see the stock was underperforming over the past few days, but today it gave a very strong bullish engulfing pattern, which has broken above the important averages and sustaining there. And the volumes are also picking up with the breakout as we speak. So the overall trend for MFSL looks to be turned on the upside. A good target is around 1040. Risk reward looks appealing. Stop loss can be maintained at around 930 levels.
Okay. So those are some of your trading bets as far as your ideas are concerned from our experts, but a handful of other stocks that we want to address. Of course, one of them is Dixon. Now, what's really happened is that Dixon was on the radar of many cross-sectional momentum traders out there. It did move, and in fact, just 2 sessions ago, it made a new life high. But yesterday, we had a broken note, and because of that, we saw a little bit of weakness, and now it does seem like it's moved into a bit of consolidation, so to speak. I know it's not been a very long time, still. At the moment, the question really is, what do you do with Dixon? If you keep the fundamentals aside, how are technicals looking? Ajit, this one is for you. What's your view here?
So, we have recently made a new record high post forming a base around the previous, record high zone. So it's definitely a positive, considering that we have pivot in place and the risk to reward is still favorable. If somebody is holding long also, then 65.30 is the area basically where we have multiple supports. So as long as we are holding above this mark, I feel that the only challenging part that I see in this, recent dip is that the volume have increased substantially. So one needs to be strict with the stop losses. That's 63.50, 63.30, 65.30. But once we see a catch-up move or a day of reversal in this stock, the probable target could be much higher. So maybe 7,400, 7,600 is something that is on the card. So the risk reward is still favorable. So yes, one can continue to hold the longs. Fresh longs, one should wait for a reversal candle.
And Ajit and Ashish, thank you very much for joining us. Indigo, HAL are some of the big bets that Ajit has, and of course, even Ashish quite constructive on HAL this morning, and also Max Financial Services. We'll take a break, but thank you for joining us. On the other side, we will be talking to a PSU defense major, Midani, who joins in on the other side to talk to us about the earnings that went by a couple of weeks ago and business outlook.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change.
Welcome back. We are now taking stock of a management. Well, we have Midani, that's Mishra Dhatu Nigam, where SK Jha, the CMD of the company, who's joining us to take us through the outlook for the company. Well, Mr. Jha, good morning. Thanks so much for joining in. Let me start by asking you about the quarter gone by. Well, we didn't have a chance to have a conversation around there. While we have seen growth coming through, there have been some sort of challenges when it comes to operations. How has your assessment been for the 9 months going past? Based on the kind of orders that you have at the moment, what can we expect from the fourth quarter, that is the final quarter of this financial year, as well as FY25?
Yeah, first of all, 9 months which we have completed by Q3, we have got very good growth in the revenue, almost around 26%. And also we have seen the increase in the BOP. However, there is a dip in the PAT and EBITDA margin. And mainly because of higher cost on the raw material, as well as on some pressure on our finance cost. So these are the two factors which has led to this problem, but we are hopeful of getting it back and improving it further in the quarter four, as recently the prices also have slightly cooled off for the raw material. And also we see there is some improvement in our revenue collection and also getting our money coming from the receivable from the different customers. Regarding order book also, there is a good improvement, and this year I think so far we have almost highest ever we have order booking we have done, and I am also hopeful that by completing by the end of this Q4, we'll be adding further around 250 to 300 crores orders easily, for which already we have everything is over. Now we are expecting the order to be placed on Milani. And regarding the margin pressure, as I have told, this year there will be a pressure on the margin because of raw material and also on the finance cost. But Q4 will be slightly better, and also the performance in the Q4 has been always better for the Milani. So we expect similar type of performance again in the Q4 also. And by maintaining this 20% growth in our Q4 compared to the previous quarter of last financial year, I think we'll be ending this financial year with the revenue growth of more than 20%, and also we'll have a VOP increase also will be there. And order book also will be going almost, it will be almost highest ever the order book position which company will have.
Right, Mr. Jha, you indicated that the numbers have been hit because of higher raw material cost and finance costs. What quantum is the finance cost A? And you also said that this will improve in the next quarter. How do you plan to improve that? Will you be looking to refinance some of your debt? Are there some repayments lined up? I mean, what is the way in terms of reduction of that finance cost? And also for raw materials, have you already procured raw materials, or are you expecting the cost of raw materials to decline? And if you can guide us in terms of margin outlook for the next quarter.
Next quarter, Q4, as I told, the raw material price has come down, and most of our requirements for raw material already we have consumed for Q4. So I see that further there is no uncertainty on the as far as the raw material price is concerned on the performance of the company. Coming to the finance cost, as I told that our working capital requirements was on the higher side because of the lot of money we have to spend for getting the costly raw material, because we are now increasing our production volume for high-end products, that is for super alloys and nickel-based, titanium-based alloys. For these type of grades, we need costly raw materials. So because of that, we have to definitely put more working capital. So that was the reason for getting the more financial cost, as I have told.
Right.
Told now.
Sir, just talk to me about
those things.
Yeah.
Will have that impact will be reduced. I am saying that it will not be totally nullified. It will be reduced as far as Q4 is concerned.
Right. Sir, talk to me about exports, because I know that is the big focus of the ministry, of the government, and of your company as well. Where does your export order book stand at, and are you in conversation with any other countries to increase and, of course, guide us, give us a sense of what we can export from export contribution going in, and many conversations are underway as well?
I'll just broadly, I'll tell you that we are trying to enter in the export market for aerospace, space, and some part in the oil and gas sector also. And these sectors requires special alloys, special steel, titanium alloys. For that purpose, type of we have done now.
Right. Mr. Jha, actually, unfortunately, we have run out of time on the show. So just going to take a moment to thank you for joining us and taking us through, the outlook of the company. Of course, Mr. Jha, you've also mentioned several challenges as well as several improvements that we can expect going forward. But at the moment, we have completely run out of time. So, on that note, it's a wrap on the FNO show, but lots more lined up on the other side. Stay tuned to NDTV Profit for more news and updates.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending.
Hello and welcome. You're tuned into the Small and Mid Cap Show. I am Mahima Vachrajani and with me is Harsh Saita. Before we move on to our guests, a quick check at how the markets are panning out to be. Well, Nifty 50 is approximately 0.6% down. Nifty Bank is 0.9% down. Nifty 50 is being led by HDFC Life, Tata Consumers, TCS. Harsh, how are the broader markets doing?
Well, Brett, very, very weak, Mahima. If you can have the advanced decline, what you'll largely see is, there you go. So TCS, some spot of green there within IT, but outside of that, if we can have the breadth, and at least within the small and mid cap indices, the breadth is very shallow. There you go. You're seeing a steep divergence in terms of the advanced decline, 1600 declines to just about 350 advances, and that's how the broader markets are really playing out. Around 1% down on both the Nifty mid cap and the small cap indices. The Nifty mid cap, rather the losses on the Nifty mid cap largely led by something like a Vodafone Idea, down nearly 12% now, 5% lower on Paytm as well. You're seeing some bit of pain in the likes of a Patanjali, a Z, an IRFC, all of which are down 3.5% plus. And that's within the mid cap. Within the small cap as well, the pain is strong, just about 80 declines for 20 advances. Within the Nifty small cap, you are seeing pain, Welspun Living, IRB, NBCC, IIFL, all of which are falling over 4.5%. You're also seeing some pain in Suzlon, down 4.5% today as well. So that's within the broader markets. Of course, there are a few gainers, but far and few. Something like a Mazgon Docs, an ABFRL, a BHEL are gaining in trade within the mid cap, and within the small cap you have Triveni Turbines, KEC, some of your top gainers there. Even Tejas Networks is looking up. But that's really the flavor of the market. We have with us two managements as always. First off, we have Cello World. It's in focus because Motilal initiated a coverage, or rather initiated coverage on this counter. They've given it a target price of 1100 rupees a piece. They're seeing good growth going forward. Also lots on the expansion front that the company is doing. We have with us Gaurav Rathod, who's the Joint Managing Director at Cello World. Welcome to NDTV Profit, Gaurav.
Thank you, Harsh.
Right, Gaurav, so talk to us about two factories that you're planning to put up, one for glassware, one for opalware. Largely your margins are led by the glassware segment and the opalware segment. What does this on streaming of these capacities, so firstly, when do they come on stream? And what does it do to top line as and when they do?
So, firstly, the opalware side of things, the opalware capacities have already been put in place in December of this year. So we have already seen those capacities being added. Of course, the revenue from it, will start from the first quarter. Apart from that, the soda lime plant, which is the glassware, table glassware plant, will be commissioned in the first quarter of next financial year. And these both will significantly enhance revenue in the consumerware segment for us. Yeah, so these are the two segments that we are, expanding capacity and entering a new segment at the same time.
Right, Gaurav. So Mahima, this side, well, as you've mentioned, now where does this take your mix to? My first question to you, and where does the capacity utilization now stand at then?
So in the consumerware segment, as a whole will increase in terms of percentage points of our total revenue with the addition of these two capacities. Currently, the opalware capacity is at 60%. So we have about 40% revenue that can be generated from there. And of course, the new greenfield project is a completely greenfield project. So that's 100% capacity that will be added in the next year. In terms of revenue, we aim to generate at least half of the capacity in the next financial year.
Understood. So Q1 is when it goes on stream, right, Gaurav, to just kind of get that right? Q1 FY25.
That's right, yeah.
Right, and therefore, margins would go up from Q1 FY25. Is that how you look at it? Because in some of your other segments, in your writing, in your furniture, margins are hovering around 60-odd%, if I'm not wrong. So this is margin accretive for you, largely, this expansion?
No, I think the writing instruments are also as same as consumerware. It's only in the furniture segment where it is slightly lower.
Okay.
So other than that, all the consumerware and the writing instrument has the same margins, pretty much. So this will, of course, initially because we'll be adding so much of capital. Initially, there'll be higher depreciation next year, so that can have an effect. But EBITDA numbers will, of course, be pretty similar to what they are now.
Right. Also, your recently launched businesses are contributing approximately 35% to your revenue. Where do you see this going by FY, let's say 25-26?
I think we'll be utilizing all our capacities by then. So the glassware capacity will be completely used up. So the 40% that is left and the 60%, the 100% that's coming in will be entire used by then. So those numbers will grow accordingly. In the other segments, our plastic houseware and the steelware range also, historically, we have grown at about 15 to 18%, which we'll continue to do. Also in the writing instrument segment, there is a lot of room for growth. We're still a very new player there. So I think there is a lot of room again there for growth. So we should be growing at about 18 to 20% there too.
Yeah, so what are the levers, Gaurav? Because it seems that all of your fresh capacity will get utilized by FY26, which is, extremely solid. So is it geographic expansion? Is it through point of sales? Are you adding certain geographies, certain states to your kitty, and therefore you're projecting demand to come in from there in such a robust fashion?
So I think one is on the glassware front, it is a completely new product line for us. So that is, that will just add revenue in terms of new product mix. From the other side, we've been traditionally volumes have been growing in this segment, and the branded players definitely are growing a lot faster than the unorganized market. So about 10 to 12%, there is a constant growth in the last even 10 years, and going forth we see the same. But we will slightly be growing faster, because of the brand pull. Currently, we've pretty much covered all the geographies when it comes to our consumer wear product line. In the writing instrument side of things, there are a few geographies in India that we still have to cover. So point of sale again addition, we currently operate at about 1,20,000 counters, which we will increase to about 2 lakh in the coming years.
Right. In terms of industry as a whole, in terms of consumables, where it's shifting to a premiumization trend, what are your plans with respect to that?
So I think we've been always constantly trying to premiumize our product lines. Though we are a mass premium brand, and I think we stay there. But at the same time, the product lines that we are entering, also the value addition that we do on products is going up. So whether before we used to sell only a plastic bottle, and now we sell a plastic bottle with a steel in it. So I think the value addition is already coming in. The premiumization is already coming in, and we've seen those trends in the last few years.
Right, Gaurav. So one, premiumization. Two, you're increasing in terms of your, or rather you've enlarged your portfolio, and therefore that should contribute to revenue. Plus on top of it, your existing portfolio operating at around 70-75% capacity utilization should also give you room to grow. 20% growth, I would say, is slightly on the conservative side.
No, I think so. Our furniture segment is not growing as fast. That will be a more muted segment where we only grow at about 8 to 10%. So even this year, the volumes have been about 8 to 10, but there has been a sharp decline in raw material prices there. So it directly affects that. So that this year was only at a 3% growth in terms of revenue, in terms of pure numbers. So I guess overall that drags it a little bit down. But as the consumer segment mix changes, I think 18 to 20% is a more sustainable, growth over the next few years.
Right. Also, in terms of distributors, I'm sure you're planning to expand them as well. Is there any target that you've set for FY25?
So I think distributors is an evolving process as we add new product lines, as we go further penetrate into rural India as well. I think that keeps shaping up. As and when we need to add distributors, we do that. And we've been constantly doing that, but it grows slowly. It's a very evolving process, and even our current distributors, are growing in strength and increasing their infrastructure too.
Sure, Gaurav, capex plans FY25-26, given the fact that some of your capacity will completely get utilized by FY26.
So I think capex plans in terms of the glass plant is the biggest capex that's going to come in the next couple of months. But apart from that, it's just going to be maintenance capex. We have a lot of room to still grow. It'll just be addition of a few machines in the plastic and the houseware segments, but that's not major capex because the asset turns there are very, very high. So I guess going forward, there's minimal for the next 2 years at least.
Right, and what about ROC? Would you maintain your ROC? 30% plus is what you're doing, which is very impressive.
Right. I think more sustainable going forward with the new outlay as well. I think about 25% plus is more sustainable over the next couple of years.
Right. In terms of rural versus urban mix, where does it stand, first thing? And in terms of volume growth also, I guess your overall volume growth in Q3 was approximately 15%. Where do you see this going, like in terms of, let's say, Q4 or FY25?
So I think volume growth still, though the other sentiment was muted, but volume growth was pretty decent for us. There was a lot of deflationary pressures that were there in terms of raw material prices and energy prices that now have stabilized. So I don't see a lot of difference in terms of volume and value going forward. it'll be only a few percentage points. This year it was a lot larger. It was about 7 to 8%, the difference between value and volume. Going forward, I think there'll be a lot, definitely a lot lesser.
Sure. And Gaurav, if I can ask you, with regard to raw material prices, how much does that impact your business in terms of OPEX cost? What's the kind of gross margin that you make on some of your products, and where do raw material prices impact you the most?
So I think raw material in the consumer side is a smaller factor. On the furniture side, it's a major part. It's about 62% of the cost. So I think there it affects a lot more. On the glass side, it's not only raw material. Raw material for us is also energy when it comes to the glassware segment. So we have seen a sharp decline in natural gas prices as well there. So I guess that has also led to deflationary pressures there, where the overall GPs have also increased. So we try to maintain a gross profit margin around 50-52%. That's been traditionally what we've tried to do across most of our segments, slightly lower on the furniture side.
Right, Gaurav. So, in the consumption space, the story is always rural versus urban. Once again, if you can mention what is your rural to urban mix, and where do you see this going forward? Are you seeing some kind of recovery in rural?
So I think rural has been the worst hit over the last year. Though we are only about 40% of our revenue comes from rural, the penetration still in India is very, very low. So I guess rural demand has to come up, as more urbanization happens in these rural areas. This is where, our growth will also happen. So I think urban India is it's quite saturated. It will of course grow at a certain percentage point, but rural demand has to come in.
Sure, point taken, Gaurav. Thanks for this very comprehensive chat. We've covered several bases and it's been a pleasure speaking with you.
Thank you, Harsh. Thank you.
Right. So there we're at with regard to Cello, but let's quickly look at markets because they are in a bit of a fall over the last 15 to 20 minutes. We've seen a sharpish fall on the Nifty 50. We are just off the day's lows, which was roughly at 22,021. So we're off that around 40-50 points higher. So there's been a bit of a recovery, but outside of that, the fall was quite steep. From that 22,200 kind of mark, we've fallen from the day's high quite sharply. So that's where we're at, where markets are concerned. Let's quickly look at contributors, what's contributing to some of the fall. We're seeing Reliance and HDFC Bank, which are leading the fall at least today, around 50 points contributed by those two alone. You also have the big ones, ICICI Bank, L&T. L&T has had a good couple of days, so nothing to complain about per se, 1% lower on that one, but it's contributing to the fall of the index nonetheless. Broader markets too, if we can have the advanced decline. We started at least this show with a sharp divergence and that has sustained. There you go, 350 to 1620. That's where we had started, exactly where we are at right now as well. But it seems we are plateauing. So that could be a positive. Of course, have to wait and watch. We'll be focused on markets, but we'll slip into a very short break. More on the other side. We have the management of Lemon Tree Hotels with us. Company's future outlook. Couple of hotels signed up. We'll talk about that and more.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 19...
Welcome back. You're watching the Small and Mid Cap Show. Lemon Tree Hotels is in focus now. Recently, the company has signed 2 new properties and is expecting over 105 hotels with over 10,000 rooms by the end of FY24. We have with us the management of Lemon Tree, Mr. Patanjali Keswani, Chairman and MD of Lemon Tree. Mr. Keswani, welcome to the show.
Good morning. Thank you.
Good morning. Sir, my first question to you would be that most hotels are moving towards an asset-light model, right? So what is the mix for you, that is management contract versus franchisee versus the owned hotels?
So right now we have about 10,000 operating rooms. 60% is owned, which is about 6,000 rooms, and 40% is managed. So these are operational rooms. We're going to open, I think, 5 or 7 more hotels in the next 1 month, and about 30 hotels in the next 1 year.
Understood. And what would that add to your room count? From 10,000, where will that go? Maybe in the next year or so?
It'll go to about 12,500.
Sure. And how quickly will you get to 20,000 therefore?
Well, we've said it open. Our target is that we should have 20,000 rooms in the next 3 years, including signed. So that doesn't mean all 20,000 will be open, but including pipeline, 20,000 is very likely in the next 3 years.
Right. So adding 20,000 hotels means a lot of capex is involved, and you're also trying to reduce your debt heavily. So how do you plan to fund these? First thing, do you have some fundraising plans?
No, not at all, because firstly, all these rooms are not owned by us. They're all managed by us. So capex is 0. We are just opening 1 hotel of our own, which is Aurika in Naldera, which is about 1 hour drive from Shimla, which is owned by us. Other than that, which is an investment of 70-80 crores. Other than that, we have no capital investment. And anyway, if you look at our debt and our cash flows, we're pretty sure that in the next 4 years we'll be debt free.
4 years debt free. Understood. So what's the kind of traction with regard to your ARR continues to go up. So I'm just trying to understand how traction is building up. We're seeing, of course, very good demand. Can you see that sustained through FY25?
See, it's not a question of... I think normally how people have looked at this sector, or any sector for that matter, is you look back to see what was the kind of demand trends that you've had. So if I look at the hotel industry, typically about 10% is the rate of growth of demand in hotels in a normal year for branded hotels. And right now what we know is the next 5 years, the rate of growth of supply will be 5%. So obviously there will be a demand supply mismatch in favor of hotel owners because there will be more demand than supply. But I think that's looking at the trees. The forest, which is what I would urge you to look at, is that India is now at an inflection point. And if you look at the number of consumers in India of what we earlier considered as discretionary, these consumers in very large groups and cohorts are now moving towards non-discretionary. So a whole lot of discretionary consumption items in India will become non-discretionary for a very large number of consumers in the next 5 years. As an example, if you look at personal consumption in 2020, 64% of personal expenditure or consumption in India in the GDP was for staples, and only 36% was discretionary. And now if you look at every single report, which is published by banks and financial institutions and so on, they are saying this is going to reverse in the next 3 years. So really, staples will become 1/3 and discretionary will become 2/3, which effectively means that hotels, the consumers for branded hotel rooms will not grow at 10%. Sometime in the next 3 to 5 years, there will be a hockey stick growth in demand, and that is quite visible even now at an early stage.
Right. So since you mentioned that the demand is more than the supply, where does this take your occupancy level at? Like, where do you see this going in FY25?
Well, FY25, I would expect that India occupancy, and I'm not going to talk about Lemon Tree because that becomes some form of guidance. See, currently, I would say India occupancy is 65 to 67, somewhere in between there. I expect that it will move towards 70%.
Sure. Right. That's quite a piece there. But let me also try and understand from your sales metrics, what should one make out? So roughly 1,000 crore currently in terms of your FY numbers, in terms of revenue. Where should that go given the kind of growth or given the kind of expansion that you are embarking on?
So, that the revenue you are referring to is what is from the hotels that we own and from the hotels that we manage. So I would look at our network revenue. That's another 500 crores. So really our system revenue this year will be about 1,500 odd crores. I would expect system revenue to be about 2,000 crores next year.
Right. Also, what are your future plans with respect to Fleur hotels? I believe that this particular hotel might get listed separately. What are the future plans for it?
So, when you look at Fleur, it currently owns about 4,000 rooms. And we own nearly 60% of that company. So obviously, we will look at how do we monetize our investment there. Because if you look at our business, the hotel business, the kind of investors that normally like to own assets are quite different to the kind of investors who look at the asset light side of the business, which is really management and brand or franchise, as you call it. So in order to simplify this, I think one option that we are looking at is basically transferring all the assets that are owned in Lemon Tree itself, which is incidentally close to 2,000 rooms, in a tax-effective way, transferring it to this joint venture, Fleur. Obviously, therefore, our ownership will increase from 60% to perhaps 70%, and then we list Fleur. So we will not look at a REIT. I noticed that is you are showing that on your screen, because a REIT implies that there is a certain stability to earnings, and somebody who invests in a REIT expects a certain yield every year, dividend yield. Hotels are being a little more cyclical. I think we would look at a listing where Fleur goes public, and if Fleur goes public in the next 12 to 18 months, we will simply write off all the debt, because the entire debt of the company will be written off the day we list Fleur. And then Lemon Tree becomes a pure manager and brand owner and a digital service provider. And Fleur becomes the asset owner. And then we will constantly raise capital in Fleur and keep growing the asset side of the business, obviously with firewalls between Lemon Tree and Fleur. And that would also enable different classes of investors to invest in different aspects of the business, the hotel business.
So I take your point. So within the consolidated debt, which is roughly in the region of 15 to 1,700 crore, please correct me if I'm wrong.
It's 1950.
Correct. So, okay, so 2,000 crore. How much of that is sitting in Fleur at the moment?
More than 75%.
Understood. And all of that will probably get paid off on IPO.
That's right.
Which is...
Because we will do basically a primary issue.
Sure. And how much is the profitability at Floor, and what's the margin like in Floor? Because your overall margin is 50, which I'm reading. You are going to maintain that margin guidance at least within Lemon Tree.
Yeah. So our net EBITDA margin of 50%. Think of it this way: in Floor, if it has a 50% net EBITDA margin, actually it has a slightly higher margin, but we take about 8 to 9% of that as our fees. So if Fleur does a 50 rupee EBITDA, then Lemon Tree will take 8 rupees of that, and 42 will be the net EBITDA of Fleur. So I don't want to give a comment on or a guidance on how Fleur will do next year and the following year, but I can tell you that it will certainly be net EBITDA will certainly be north of 500 crores. So we will look at a listing, with some market multiple on that.
Right. Thank you so much, Mr. Patanjali, for speaking with us at NDTV Profit. It was a pleasure speaking with you. Well, that's all we have on the show for now. Stay tuned for more news and updates on NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Headlines you start
Good morning. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Alex Matthew. And for the next 30 minutes, we'll take all your stock-related queries. You can write to us on any of our social media channels or through the WhatsApp number that'll be flashing on your screen. You can also write to us on the YouTube live chat and we'll be tracking that as well. Now let me introduce you to the guests for today. We have Saurabh Jain, Equity Head Research, SMC Global Securities, and Swati Hodkar, Senior Equity Technical Analyst, Research, Nirmal Bang Securities. Thank you so much to both of you for joining. Now, Alex, markets have cracked a little bit at this point, but what stocks and within the broader markets as well, how is that faring?
Yeah, in fact, let's take a look at the benchmark Nifty 50. You see that a bit of a wobble after, just over the last 1 hour or so, and it's quite a sharp fall. Relatively speaking, of course, in percentage terms, we're still talking about the drop of about 0.6% for the benchmark index. For the broader markets, of course, you have a little sharper cuts. So the benchmark Nifty Mid Cap 150 index down about 1%. You have the Small Cap 250 index that's down about 1.3%. Both of them trading very close to the low point of the day, and the Nifty 50 as well. In fact, let's pull up the advanced decline ratio, and that's probably going to give you an indication of how things have turned. And there is a pretty sharp divergence, as you can see. So what we're trying to get, and we'll get to that in just a bit, is why there has been such a big deviation midway through the session so far. But let's take a look at some of the movers on the sectoral end, and you have most sectors that are underperforming at this juncture. And let's pull up the key outperformers. There's only one index that is holding out in the green. The Nifty IT index that's up about 0.2%, but everything from media to PSU banks to realty and even the banking index is down about 0.7% or thereabouts at this juncture, or 0.6% at this juncture. So it's looking just a tad weak right now. I want to go to Swati first. Swati, just to get a perspective on whether or not there are any indicators and levels that you're watching closely heading into the monthly expiry tomorrow, and any inkling as to why we're seeing a little bit of choppiness and volatility in trade today?
First of all, good morning to all of you. From the last 7 to 8 trading session, we are witnessing that the Nifty got stuck within the range of 22,000 to 22,200 levels on the higher side. On one day, we have seen that the Nifty somehow manages to show the pullback rally from 21,800, but back it got stuck within this 200-point range. A breakout on either side will decide the clear trend of the market, but from the last few trading session, on the intraday basis, we are witnessing that the Nifty somehow manages to put a tick above 22,200, but on the closing basis it doesn't. It fails to give the same. So I believe on higher levels we are witnessing a continuous selling pressures, whereas on the lower side it got stuck within the 22,000. If today we get a breakdown below 22,000 psychological mark, then more selling pressure is likely to be intensified, which might take a Nifty towards 21,800 to 21,600 levels. I believe that the market will like to face some selling pressure, whereas on higher side, as I said, 22,200 is acting as a very strong resistance levels. Unless and until we don't get a positive closing, at least for 2 to 3 trading sessions, a major pullback rally or the positive momentum cannot be seen into the market. So the view is a bit cautious. If we look towards the market breadth also, today is almost the market breadth is almost 1:5, which gives a cautious sign. The bears are just running their rise as of now. So I will suggest the view limit cautious, but any deeps towards 21,800, 600 level will act as an opportunity to take a buy call. But at the current level, one should book their profits on every rise, I would suggest, as long as Nifty trades below the mentioned resistance level.
Right, got it. Let's dive into the questions now. The first one is from Sheetal, and this is for UPL. They've bought 300 shares at 657, slightly elevated levels. If you look at the current share price, it's somewhere around 481 rupees. Now the the shares have been on a downturn. Q3 results were dismal. Brokerages have downgraded the stock. Would you suggest getting out, book losses, or would you suggest holding on for a little bit more?
I think there's no point in staying with this company because, if you look at the numbers, they were quite pathetic. And the EBITDA front also, they have posted net loss. and all their business is chemicals and their pesticides, agrochemicals. All of these segments are not doing well, and I think there is a quite huge amount of debt on the balance sheet also. It's a quite large company, certainly got mismanaged. So I don't feel like staying with this company. I'll say exit from the company.
Having said that, so if you're saying exit on the fundamentals, do you like anything from the chemical space at this juncture? I know that it's going through a little bit of a rough patch, but if you're buying, say, for the next 3-5 years, would you pick any of the counters available right now?
See, chemical company name that is coming to my mind is Aarti Industry. I think this company is doing good. They have been able to bag a large order. The existing production capacity will be able to fulfill that order. And these companies are, trying to push their capacity utilization to the maximum. And yes, there is some kind of pressure on their margins, but I think over a period of time, they will be able to handle that also. And the valuations are now on the comforting side. I mean, from the peak valuation, now the valuations have also subsided. So from that perspective, I think one can look at this company.
So switch from UPL and perhaps look at Aarti Industries as an option if you want to stay with the chemical space, which, by the way, has had a rough couple of quarters, and we don't know when the turnaround is going to take place. The next question is coming in from Sachin Marathe. He's writing in from Pune, and he's asking about Larsen & Toubro. And it's had quite the run over the last 12 months or so. The stock is currently trading quite significantly above his buy price at 3,460. He has bought at levels of 986. He's asking if he should accumulate at this point. Swati, what's the indications that you're getting on the charts right now for Larsen & Toubro?
See, the overall stock is definitely positive on the technical front. Is one of the very good stock one should be continued with in their portfolio as well. But since his buying price is at the current level, I will not suggest to average it out or buy at the current market price. If the stock continues on a deeps towards to 32, 3,300 will be the good level to take a buy call. But at the current market price, I will not suggest. But the overall overview on this particular counter is really positive. I believe that it has a strength to continue this rally up to 3,800 to 4,000 levels in a longer term horizon. So my view is definitely positive, but current market levels, I am not recommending to take a buy call. Since its buying price, it's currently trading at the CMP only. Any dips it's coming towards to 3,200, definitely one can take a long positions.
All right, got it. Next up, we have a question from Shyam Sundar on YouTube. Now they're talking about two counters, Repco Home Finance or India Bulls Housing. They want to put in, invest into this from a 1-year perspective. Swati, either of the two, which one would you suggest, and what kind of buying levels and targets do you have on these two stocks?
See, if I want to compare this particular two counter on the technical front, I will go for a Repco Home, because this particular counter on the monthly chart is on the verge of giving the breakouts. In the 2020 levels, we have seen this particular stock has just formed a high of 430, and in this month it has given the breakout after the 2 years of consolidation phase or some sideways momentums. So I believe on the monthly chart also the stock has formed the flag pattern, which is very attractive formation on the technical front, and it has given the breakout of the same with the decent volumes. Upside, I'm looking for a target of 550 to 600 level for a short term perspective. For a longer term horizon on the yearly basis, 700 levels can be seen. At the current market price, one can take a long position, but only 20 to 30% can be accumulated at the same peak, because we are witnessing some hit at the higher levels. So any dips, if the stock is countering up to 400 levels, one can add on. And I'm looking for a short-term target of 600 to 700 levels.
Got it. All right. So Sumana Mukherjee is writing in from Kolkata, and she's got the next question, and she's asking about a couple of counters. There's Latent View as well as Indian Oil, which she has bought at levels of 467 for Latent View and about 68 rupees for Indian Oil Corporation of India. Of course, IOC has seen quite the run since she bought the stock at 68 levels. So the question is, should she hold on the basis of the fundamentals? Saurabh, what's the view?
See, I think latent view business, I think this sector has been, pretty much well taken by the markets, and the valuations are not at the comforting level. I mean, the markets have already discounted forward year profits into the prices right now. So I don't feel like staying with the latent view because of the not comforting valuations. With respect to the Indian Oil Corporation, I think a lot of problems are there. I mean, the crude problem, the government can take measures on the retail price of the petrol and diesel. So there is a lot of hue and cry on this trade. So in that sense, I'll not recommend to buy again. Rather, I'll say book profits at current levels.
But what about IOC?
For the IOC, only I am saying.
Oh, sorry. And so latent view, it's already priced in. I got that. All right. Let's take the next question.
Next one's from Bhaskar on YouTube. They want to know if they should buy Canfin Homes. Now, Saurabh, from a fundamental standpoint, a good buy at this juncture?
See, rather than chipping into the home finance, I would say it is better to buy good PSU banks. For example, Canara Bank, Indian Bank, and Union Bank. All these banks are doing pretty well. If our economy has to take off from here, I think all the segments of the economy will grow, and the banks will be beneficial more than the only home financiers. So in that sense, I feel that it is better to chip in the PSU banks that I have spoken about.
Let's pull up Jio Financial Services because this is a counter that's gained quite substantially in the year-to-date period. Just over the last couple of months, this is a stock that is up as much as 32%. And we've got Tarun Agarwal, who is writing in from Ranchi, and he's asking about whether or not it can be bought at the current market price. He's also wondering about Aster DM Healthcare. What's the view on these two, Swati?
Talking about the Jio Finance, this particular counter as of now witnessing some sort of a profit booking because the stock has given a very spectacular rally from almost 250 to 348, 350 levels. So profit booking cannot be denied at the higher level. If he's interested to take a buy call, I'll be suggest to buy on deeps towards 280 because from the last 3 months, I'm witnessing a trend that the stock takes the support of 20 days moving average and again bounces back towards the new high. So I will suggest if the counter comes towards the 280 levels, one can take a long positions by keeping a stop loss of a 260. Then again, we can see some positive momentum towards to 320 to 340 levels. And another stock you was asking about Astral. Astral is definitely positive on the technical.
Let me clarify. It's not Astral. It's Aster DM Healthcare.
Okay. It's about Aster DM. This particular counter is also well placed above all the important moving averages and trading in the pattern of the high tops, higher formations, which is a very positive indication. So if you're having any long positions, they can definitely hold on. I'm looking for a target of 520 to 540 as long as this particular counter sustains the 450 levels, which is a support provided by its 50 days moving average. So one can hold the long positions, but cannot be created a long position at the current market price as long as the this particular stocks doesn't give the breakout of a 500 level. So I will suggest to hold the long positions with a stop loss of 450 for immediate target of 500 levels.
All right. Next up, we have a question from Rajiv Verma. Now, they're asking about HDFC Bank. And we've seen a bit of a downturn post the third quarter results. However, Saurabh, from a longer term perspective, would you suggest buying at dips for this counter?
Management has already suggested that they will be going at a tepid pace. I mean, they want to raise the share of the deposit, and they want to shed off the higher cost of borrowing which have come after the amalgamation of the HDFC. So I think it will take a while. I don't feel like chipping in at this time. I think wait for 2-3 more quarters, see how things shape up, how the CASA goes up and the high borrowing gets reduced, and what sort of advance growth comes in. I think it may take some 2-3 quarters. So for at this point in time, I think it is better to avoid.
HDFC Bank is a call from Saurabh. We have to slip into a quick break, Saurabh, as well as Swati. Do stay with us, and viewers, we'll be back on the other side to take more of your questions. So do stay tuned.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore was sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to
Welcome back. You're watching Ask Profit. And in the break, we were having quite the interesting discussion here because one of our queries today, we've got Vimal from New Delhi who's asking quite the interesting question. He's asking whether or not you would pick or whether you would pick Devyani International over Restaurant Brand Asia. And in case you were not aware, this is basically a fight between KFC and Burger King. Smriti here says that she would pick KFC.
For sure.
KFC. So KFC. Why don't you guys tell us in the comment section what you would pick? And meanwhile, let me go to Saurabh to ask him about the companies themselves, right? Saurabh, not a question of which tastes better, but which would you pick?
I think KFC is coming with the novel ideas. They are coming with the new things, new restaurant that if I remember correctly. So I think in that sense, I think it makes more sense to chip in that cup.
But then would you buy, look, there are some people who say, I will buy KFC during the week and then I'll pick Burger King over the weekend. So why not pick both?
I think out of the two, KFC is much better.
Okay, fair point.
All right, next up, we have a question from Yash from YouTube. He's talking about this MSME lender, Ugrow Capital. Now, he wants to know, he wants a short-term and a longer-term view. So, Saurabh, do you have coverage on this stock, and would you suggest holding out onto it from a longer-term perspective?
I think Ugrow is in the finance, but it is a kind of a fintech company giving loans on the basis of some parameters, and by checking the credentials of the borrower through systems. I feel that these companies have grown quite rapidly, and the takedown that recently the RBI has taken on fintechs and something like that may not bode well for the future growth. So in that sense, I'll say better to avoid.
I believe we have a comment on YouTube, Smriti.
Yes, Sid also prefers KFC over Burger King. So
all right, so there you go.
That's the pick.
That's the pick. That seems
stock-wise as well.
I haven't got lunch today, so maybe that's where I should look at ordering from. We've got the next question coming in from Shrikant, and he's asking about BGR Energy, and he's asking why the stock is falling. Swati, on the technicals, is there any thing to suggest why the stock is under pressure?
From on the technical front, on the weekly chart, the stock has given a signal of the negative divergence in the last month itself. So that is the reason, and we have seen a multiple cluster resistance at around 120 levels. From the thrice, we have seen that the stock has tested a 120 but fails to give the breakout of the same levels. From there onwards, we are witnessing a selling pressure. I believe when this selling pressure is likely to be continued towards at least 45 levels, because that is the previous swing lows which has formed in the year 2023 in the month of the Feb, I guess. So till that level, we are likely to witness a selling pressures, but from there onwards, we will witness some sort of a pullback, because that time, because over that period of time, stock will enter into the oversold zone. So long positions should be avoided at the current market price. If anyone is interested, wait for a dips towards 245 levels.
Okay. Next up, we have a question from Anitya Pal Kaur on YouTube. They're talking about the counter Trident. They bought at 40 rupees a share. It's currently around 42 rupees. From a technical perspective, Swati, how does it look? The holding period is 6 to 8 months. And I'm looking at 6 months performance. It's up about 15%.
Definitely, the stock has given a very good rally in the month of the Jan itself. Once it manages to give a breakout of 40 levels, non-stop it has performed up to 52 levels within a very short span of a time. As of now, the structure really looks very cautious, because from there onwards, we have seen that the stock has entered into the downward sloping channel. Interesting fact that it is trading in the formation of the low tops and low bottom, and it has also given the breakdown of a 20 days moving average. So there are the few technical parameters which are not in the favor of a buy side, but definitely we are witnessing a selling pressure on every rise towards 247 to 48 levels. I will suggest, if we are getting any pullback rally towards 247, 48 levels, one should exit their long positions. We might attract more selling pressure, which might take a stocks towards 235 to 38 levels. So avoid the long positions or exit the longs whenever you get any rise on the high side.
All right. Let's turn to a question on the healthcare space, and this is on Fortis Healthcare. We've got Mohit, who's tuning in from Ludhiana, who's asking about a stock that he has bought. He's bought at levels of 270. His time horizon is as much as 2 years. Sort of the question is for you, would you suggest holding on at these levels?
See, I think if the horizon is more than 2 years, I think there's no point. I think he can stick with the company. Fortis is doing pretty well. And all the if you look at the hospital space, be it Apollo or Narayana Dhane or more of like that, all are gaining traction in the market. And I think this space is going to grow at a good pace.
All right, next up we have a question on Vodafone Idea. The stock is cracking today, even though we late night we got an announcement that they're going to raise 45,000, 20,000 through equity. Saurabh, people who are holding on to the stock, and this one, Raman here, is holding 50,000 shares currently. What should they do with the stock? 16 rupees. At 16 rupees a share, yes.
See, I have always said in my show, in all the shows, that it is no point in investing in company like this. There is a huge debt in the balance sheet, and the company is consistently making EBITDA losses. Even in the history also, when they come up with the right issue, that money got burnt in a matter of few quarters only. So they have lowest ARPUs in the industry. They are losing out their customer base. They have lowest ARPUs. So I think even if the yesterday announcement has come that company is going to raise 40,000 crore, but I don't think so. The fortunes will get changed. So in my sense, I think it is a sell.
Okay, Sri Kishore is writing in from Motihari in Bihar, and he's asking about Prince Pipes, which he's bought at levels of 600, and he's got 350 shares. He's thinking of holding this for the next 3 years. Now, Saurabh, this is another company from the allied industry to the real estate space, right? Correct me if I'm wrong. Building materials. It's a stock that has done well on the back of that play. Would you suggest that he can add on to his holdings, or do you think he should just hold on to what he has?
I think he can hold on this company. This company has proven track record, and things are pretty in their favor. I mean, if you look at the macros, the real estate, government spending, and all things, I think all the things are in the right tick box. So I think in that sense, I think it is better to stay with the company.
All right. Next up, we have a question from Abhinav Singh on YouTube. They're talking about Gujarat Pipavav. They say they're in notional profit of 30% on this stock. I don't know the buy price here. Should they stay invested for more upside, Swati?
Yes, definitely. This particular counter is really doing very well from the last 3 to 4 months as such. As of now, it's well placed above the important moving averages. The only concern is that it has entered into the overbought zone. So small profit booking cannot be denied at the higher levels. But if he's looking for a larger degree or for a long-term horizon, definitely this counter looks very positive on the monthly as well as on the weekly chart. So they can hold on the long positions for a target of 250 to 260 levels or on a higher sides. If they want to keep a stop loss, they can maintain the long positions by maintaining a stop loss of 185 levels and hold their long positions.
All right, Swati, thanks so much for that view, and indeed for all of the answers that you gave us today. Saurabh as well, thanks so much for joining in and for answering all the questions. Viewers, we're completely out of time on this particular edition of Ask Profit. It's been a pleasure as always to bring the show to you from Smriti and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices
Hello and welcome. This is Hot Money. I'm Agam Vakil, and this show we take you through all the stocks which are buzzing in trade. But right at the top, we have a conversation going on for you. And we have Sudipta Mukherjee, MD of Texmaco Rail and Engineering, joining us on the show. Mr. Mukherjee, good afternoon. Thank you so much for joining in. We didn't get a chance to speak to you during the earnings. So, I'm taking this opportunity to speak to you about the business outlook going forward. First and foremost, if you could give us an idea about how things are panning out on the ground. We are aware that you have a significantly large order book coming through, and a lot of that will be executed not only in the final quarter of this financial year, but a lot of that will come through in FY25. Well, could you give us and apprise us of your ongoing operations and what that holds?
Good afternoon. Thank you for having me in the show. Coming back to your question on the operation part, if you have seen that it's not only the large orders, Texmaco has actually executed those, and in the if you see from the Q1 of 24-25, it has been a 30% growth in each quarter, which we have achieved in terms of the wagon delivery numbers as well as in the top line.
Right. So, Mr. Mukherjee, we are looking at revenue growth of around 40% for the quarter gone by. Your margins have sustained at around 9.2%, and consequently, your profitability has also risen substantially. And the question, I guess, the next one would be on your current capacities. What is it stand at in terms of production, and with all the expansion plans that you may have, what could your number of wagons go to in terms of production per the quarter going into this upcoming financial year?
So if you see that, what has happened, the journey in Texmaco is that what we have achieved in Q1, we have achieved those in the almost in initial 2 months of Q2, and we have surpassed the Q1 thing. Similar thing has happened in Q3 also. And in Q4, whatever we have achieved in Q2, we have crossed already in first 2 months of the Q4. So the wagon per month as on date stands as we are in the range of around 800 wagons. And we believe that on a consistent basis, we can achieve around 1,000 wagons by middle of next year, and there will be a continuous growth month-to-month basis.
Okay, I see. So in terms of the latest QIP, I believe you have raised about 750 odd crores. Where will the proceeds of these funds go towards?
So the majority was, of course, 250 crores. If I have to give you a specific breakup, that was for the working capital. 250 crores was for the high cost debt, which we wanted to retire. 100 crores was related to capex, and of course around 150 was for the general corporate purposes. So that's how out of the 1,000 which we had the approval, we raised 750 about, and that was our spend.
And so where does that current debt leave you all right now? I reckon that considering you will have substantial internal accruals and a lot of cash flow, I don't suppose that you will need to raise any more debt in the near future. Am I correct?
So if you see, it depends on that. Yes, if you stand still, there may not be any requirement. But we are part of you have to see Texmaco from a perspective of the India growth story and the railway, around railway, what is happening. And we are continuously trying to have a larger share and a significant role, and to take the company to a sphere of an admired technology company in this sphere. So there will be a lot of things which will be coming up. Ideally saying, if we stand still, as I said, that yes, we may become a zero debt company from the internal accruals, but there will be many growth initiatives which are on the cards. So let's see what we can, how it shapes up.
So can you also give us your updates when it comes to your new facility in Sodepur in Kolkata? Some timelines, some targets that you guys are working with. I believe that this is in partnership with a Czech company?
Yeah. We have one joint venture which we have done with a Czech Republic company called Nimod. They are a significant player in the European market. If you see Texmaco, while we are one of the largest supplier to Indian Railways, we also significantly export. And we have the markets per se, almost the all continents in Africa, Europe, and US. And we have all the required credentials to do that from our manufacturing facilities. So this is more of a relationship which is a vendor-vendor relationship where we have wagon component orders. Recently, we have backed from the European market, which will be manufacturing, as well as, of course, we want to significantly have a pie in the coming days for modern developed wagons in India from that facility.
Right.
And we miss that over a period of next 24 months, it should be in place to be ready to supply.
Sure. So the other question that I had for you was with respect to the government's target on Vande Bharat and passenger mobility in general. Where does Texmaco fall into this place? And well, what kind of initiatives are you working with when it comes to government plans with respect to this particular initiative?
So, to be specific, it will be difficult for me to mention today. But as I have mentioned that we are significantly eyeing at making Texmaco foray into railway per se. Let's not only look at from the optics of Vande Bharat. Today, Indian Railway offers so many things in terms of technology, safety, and all this. And as you say that with the theme, which the Honorable Prime Minister is driving, that we have to be self-reliant. And the Honorable Railway Minister has always mentions that we have to be technologically ahead and self-reliant and, of course, agile. So you will find more and more Texmaco in those spheres in the coming days, and we are working towards that.
All right. So, and a final question then. This is about the revenue outlook as well as margins. Can we expect the same run rate that you have maintained for this particular financial year moving into FY25 based on the kind of orders that you are tracking?
Yes, if not better. We will look to better that much more because we are working hard, we are agile.
Sure.
And we have our plans and programs and inputs in place.
All right, Mr. Mukherjee, we leave it at that. Thank you so much for joining us and taking us through, well, the outlook of the company. We wish you the best for the future.
Thank you so much. Thank you.
Right, so that's the management of Texmaco Rail telling us about all the plans that they have, and of course we do know that a lot of that has already been factored into the staggering stock price up move that we've seen for this particular company over the course of the last 12 months. We'll continue to give you updates on this sector as a whole. But from there on, let's move on and talk to Ashish Maheshwari. He's the director of Arihant Capital Markets, who's joining us on the show right now, who's going to take us through a handful of stocks that we want to address. And Ashish, good afternoon. Thanks for joining in. Ashish, before I come to you, I just want to address the first stock that we have on our list, and that is Vodafone Idea. Now, we do understand that the company is looking to raise as much as 20,000 crores. There are still a lot of questions around who the potential investors may be, but for now, well, the stock is certainly taking a hit, right? And we've seen a little bit of a correction, not just today, but over the past couple of days. In fact, it's come off quite substantially from the mark of well over 15 rupees per share, if I'm not mistaken. And at the moment, it is seeing that kind of traction, which perhaps a lot of investors were not expecting, especially considering the company is looking to raise those funds. The challenges with respect to raising these funds, of course, will be one, that considering it's a relatively larger amount, who are these investors going to put in? The promoters have not been ruled out from they themselves putting in some funds, but we don't have any details on that just yet. And of course, the authorities will look to appoint intermediaries to execute this fundraise as well. We'll continue to get you more updates there. But Ashish, at the moment, fundraising plans are good, but there may be a lot of challenges with respect to this raise of funds as well. How are you reading this into things as far as Vodafone Idea is concerned? What's your stance now?
I'm very bearish now on the stock. If you see in the last few days from 17.85 now, the stock is at 13.85. So 4 rupees fall is there from the high. Because again, the market was expecting that in this board meeting they are going to announce some concrete plan for the fundraise and at least some name of the investors. But I think the broader talk is that they are going for FPO. So if FPO will come, then you need to sell the stock at a discount to current market price, and this is something like market is not liking. So this is the reason we have seen a correction in the stock. Besides this, Vodafone is already having a mammoth equity size. If you see 48,000 crore is equity capital. So how much is the scope for raising money at lower price is also a challenge which market is not liking. I think my stock will remain under pressure, and now I don't see that the stock will touch 16, 17 in a jiffy.
Okay, Ashish, stay with us. We'll stay with us. We slip into a short break, but on the other side, we get you more on the Magnificent 7 series that we are doing, as well as a lot of the other themes and stocks that we also want to address with Ashish. Stay with us. We'll be back in just a bit.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business...
Welcome back. US tech stocks have rallied, and how? We at NDTV Profit bring you a special series called the Magnificent 7, where we tell you all about the top 7 tech stocks that have rattled the Wall Street. The stock that is on my colleague Tushar's radar today happens to have a market cap of $2.8 trillion. Any guesses what this is? It's Apple. Tushar.
So Apple may just be the crown jewel as far as the Magnificent Seven is concerned. It has a market cap of $2.8 trillion, which is about 17.5 times that of RL, India's most valued company. So first, let's take a look at the brass tacks about this company. So that should come up in your... Stock is up 22% over 52 weeks. Stock is flat over 6 months, down 5% YTD. It trades at about $180 per share right now. So let's take a look at the valuation figures or the numbers or the metrics that define the stock. The trailing P is 28.17, forward P is 27.78, EV upon revenue is 7.34, an operating margin of 33.76. All these metrics actually put Apple at a very favorable valuation as compared to its peers. If you look at the valuations of these companies among the Magnificent Seven, that is the most expensive stock at this point of time is NVIDIA at 66.28. Apple is fairly valued at about 28.06. Microsoft is 36.67, and even Tesla has actually pared down its valuations to about 46.24 times its PE ratio. So even from the valuation picture, Apple looks pretty lucrative if you want to invest in the stock. Also remember, the company does undergo stock split regularly, so the gains can be accrued over time. But there is a special pain point that Apple has faced over the years, and that's how it is making money. So remember, iPhone sales, the breadwinner for Apple, so to say, the sales have actually plateaued over the last few years. That's because people are holding onto the devices longer as compared to earlier, because the repeat cycle or the replacement cycle has actually gotten longer. So Apple has increasingly over the years moved to bolstering its services business that is centered on the Apple One subscription plan or the iCloud subscription plans. So if you look at their Q1 revenue numbers, we see that the company made a total revenue of $119.58 billion. That was up 2.1%. The product's revenue was almost $100 billion. And the services revenue is about $20 billion. But what we have to see, the problematic part for Apple here is, again, slowing sales of iPhones. And the second is the China challenge, where it's facing some regulatory issues, despite in the greater China region, about 4 out of 6 handsets are still iPhones. What is the revenue picture looking like over the last few fiscals? So if you look at the table, actually Apple has avoided revenue decline for a 5th straight quarter in the October-December period. Remember, Apple follows the October to September fiscal. The holiday period, that's the October-December period, is actually its first quarter, always the quarter where it delivers the highest revenue. So if you see those numbers, year on year, you can see 4 straight quarters of declines, and only 119 is actually an increase in the last 4 quarters compared to the previous year. So a little bit of positive news as far as revenue is concerned, but Apple in its latest quarterly earnings also said that it's expecting muted earnings going forward. So if you take a look back at what Apple is saying, it has avoided 5 quarters of revenue decline, as what we have said. Sales in Greater China have actually missed estimates by about $3 billion. That is a pain point. Apple wants to offset that by double-digit growth in emerging markets like India, but that is too big a bridge to actually pass through. So in the India angle, about 1 crore iPhones were shipped in 2023. India now accounts for about 4% of iPhone shipments as well as revenue. That as compared to about 5 years ago, in 2017, it was about only 1% of total shipments as well as revenue for that company. Now, what does Apple look like going ahead? First of all, it's a conservative guidance for January-March. Services revenue is key to valuations of this company. This is the place where actually Apple can make money, when iPhone sales are actually slowing down and the China market is also not showing enough growth, so to speak. In this quarter, that's the January-March quarter, the company has also pulled its Apple Watch Ultra from the US markets because of a patent issue, though the device is back into the market. During the quarter, Apple also launched its Vision Pro augmented reality glasses, which comes in at $3,500 a piece. But even if the company manages to sell 1 million of these, it's still going to add only about $3 billion to its annual revenue. Again, a minuscule amount given the larger picture of things. So what else we can look forward to? Tim Cook in the earnings had said about AI. Finally, the company has talked about AI, where we can anticipate the next iOS or the next mobile operating system to be powered by AI. So AI is something that the company has steadfastly avoided so far. This is the first time Tim Cook has said. Also remember, today's news, Apple has quashed its plans to make an electric car, and instead the entire team from the electric car development team will actually move to the generative AI team. So essentially, we can say that Apple is doubling down on that front as well. So we may see an iOS device, iOS that is powered by AI. But Apple has still differing views. So Dan Ives of Wedbush Securities, after the earnings, had said that this is the start of a renaissance of Apple's growth. Services growth is key to valuations, and AI-powered iOS 18 can bring about a much-awaited refresh cycle. A contrarian view was by Anurag Rana of Bloomberg Intelligence, where he said Apple's Q1 print indicated very little growth this year. The Vision Pro is not the needle mover in terms of sales. The big factor is China, where we see nothing but disappointment. So these opposing views there. But you also have to remember, as far as investors is concerned, how much are you willing to pay for a stock that may grow at just about 5% this year? But again, you have to remember that Berkshire Hathaway, perhaps led by perhaps the most famous investor in the world, has about 50% of its holdings in Apple stock. So it's something. It is not the flavor at this point of time, Apple, so to speak, because of the muted growth, but it is sort of an evergreen stock in the tech space.
Well, there is no doubt about that. Tushar, thank you so much for getting us a whole lot of insights on Apple and what's going on right now and what the future holds in store. Of course, we'll continue to give you an update on not only Apple, but a whole host of other stocks, which form, of course, the part of the Magnificent Seven series. For now, of course, today was a day for Apple. And as Tushar has given you a lot to think about with respect to that particular company. But we shift focus back to stocks that we are addressing on our radar, and we'll bring in Ashish Maheshwari back into the conversation. The next stock we want to address is Vedanta. Now, we've had an earnings call come through, and we've also had a handful of broking companies come out with their own versions of what's happened with Vedanta. And among them, we're looking at mixed views as far as Vedanta is concerned. That's not to say that we don't have an upside from a lot of these broking companies. For example, we do have Nuvama, who suggests a buy and a target of 394 with a positive rating, and they are looking at, they're seeing that value unlocking happens on the back of demerger and listing of all the other business verticals. We also have Antique, who once again retains a buy and does have a target of around 318 rupees per share, which is once again a lot higher as compared to its current market price of around 265 rupees. And Kotak as well, that's where we are looking at a price target of 255. So that's where the target is below its current market price. So mixed views coming in. But Ashish, what is your view on Vedanta and how would you address this one?
Yes, after the analyst call, there's some ray of hope is there, because what they are talking is retiring $3 billion kind of debt from the books soon. So this is something positive, and they have shown the way also that whatever the dividends are coming, royalties are coming, and non-core assets they are going to liquidate. So in next few years, almost $7.5 billion kind of EBITDA they are going to generate. So at least a roadmap is there that they are going to curtail the debt which is having overhang on Vedanta. So in my view, this is something like positive for the stock, because otherwise also we have seen some rally in metal stocks across the globe also, and Vedanta has also appreciated. If you see last quarter, almost stock is up by 12%. So not very skyrocketing return, but still Vedanta, in spite of all odds, has delivered. So my suggestion will be to look at the stock now. The stock has given already 50 rupees dividend, interim dividend which they give every quarter over quarter. And this quarter also I'm expecting handsome dividend because numbers are pretty good. So it's a buy at any decline in.
Okay, it's a buy on any decline. Of course, let's not forget that Vedanta does have a reasonably good dividend payout as well. But Ashish, unfortunately, we've run completely out of time on this show. So I'm going to take a moment to thank you for joining us and taking us through your views on the two themes that we spoke about today. But before we wrap on this edition of Hot Money, there's a new kid on the Last Street. That's Juniper Hotels. And of course, it runs hotels which would include something like Hyatt, which is a brand. And well, we spoke to the management of the company, and this is what they had to say. Listen in.
Q3 for this year has been much better than what we were anticipating, and we are looking forward to a very, very robust numbers that will come out in next 2 to 3 weeks time. And I'm hopeful that we will be able to give you better results than what we had predicted.
What kind of occupancy rates have you seen during this quarter?
Occupancy rates have been closer to 80, 79 and 80% overall amongst the 7 hotels, where our larger hotels have done better than 80%.
A large part of your fundraising will be used to prepay or repay some of the borrowings. By when do you expect that to be completed?
We intend to pay back most of our debt this week. So first debts will be getting released in next couple of days. And we are hopeful that 1,500 crore rupees would be paid back within the next 1 week to 10.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
In a world of increasing global uncertainty, what is the next big thing? Is it going to be the decade of AI? Is that a story that is being overbought right now? And what will we see in terms of India emerging as one of the largest players on the world stage? Now, rather than me speculate about all of these things, I think the best person to speak to about this is John Chambers. He's with us right now in this exclusive interview, speaking only to the NDTV network. And remember, John Chambers' 2024 outlook is something that is very well followed, very well, seen by everyone, and he gets most of his predictions right. So
I try hard. I've seen every movie, Joanna, and I've made every mistake there is to make, but I'm pretty good at pattern recognition.
Yeah. So having said that, your predictions on inflation being a big pain post the pandemic, on the impact of COVID, on a whole host of things, has really ticked all the boxes. So that's a great spot to start with.
Yes.
And let's begin with that. So the biggest or the number one on your list for predictions for 2024 is AI, something which half the world is scared of and the other half is excited about. Where do you stand?
Well, I'm the half that is realistic on the opportunity it will bring. It will help us cure cancer. It will make us more healthy over time. It has the benefit to benefit every citizen in the world, and to have economic strengths as well as huge productivity strengths. It's going to move very fast, though, so I worry about job creation keeping up with the jobs that it will displace. I worry about misuse of spatial and cybersecurity on it. But where you're leading me, I agree with, because when you talk to a person about their views for the future, your audience is going to say, well, I've heard about John, but I don't know him that well. You were kind in the introduction. In January of 2020, we said there's some illness coming out of China that is slowing business in Southeast Asia. And I said, this is going to have a major economic impact.
Yeah.
And then by 2022, at the time everybody thought COVID, and it was a terrible thing that happened to all of us, but thought that would be the dominant force in 2022 and 23. I said, no, it will be inflation, which unfortunately turned out to be very accurate. That was when I made the big bets on AI, saying it would become mainstream in early 22, and it did toward the end of that year, as you know. I've been betting on AI companies, including several major Indian startups, for 7 years now. And I think it will not only be as big as the internet or the cloud, it'll be 3 to 5 times its size. I think its impact on society will be largely positive, but we've got to have some guide rails in place. Do I think India has a chance to lead in AI in a way it's never led in technology before? I really do.
Yeah. So right now, the biggest AI story from the market's perspective, I suppose, is NVIDIA.
Yes, it is.
Everyone's wondering what's happening there. And when you say that India is well positioned to lead in AI, why so? Because the question also emerges whether some of our largest tech companies have done enough, or are they going to be playing catch up?
3 or 4 questions. Let me take them in the sequence that you raised them. For your audience, when you really want to keep your fingers on the pulse of AI, you want to look at the infrastructure players for AI. So to draw the parallel, if you wanted to keep your pulse on what was occurring in the internet in the 1990s, you just watch Cisco and our earnings, where we grew at an average of 65% a year for 10 years, never missed a quarter, created 10,000 millionaires among our employees, and won every corporate social responsibility award there was to win. And that's also when I bet on India in a big way. But we were the infrastructure player for everything the internet represented. The infrastructure players for AI are NVIDIA and starting to be a new challenger, AMD. So if you look at the NASDAQ over the last 12 months, it's up 39%. If you look at the Dow, it's up 19%. NVIDIA is up 225%, and AMD is up 125%. So you follow the infrastructure players. When they are going full bore, it means all the related areas that use that infrastructure are also going very aggressively. I have 20 startups, 9 unicorns, which is pretty good for a small company on it. And it used to be 5 of them were AI companies. I then strongly encouraged and then pushed really hard for every one of my startups to become an AI company first, who measures in supply chain or cybersecurity or the capabilities to really provide call centers with AI capabilities. So I think it will go across all industries. Now back to the question, what India's advantages are. India, going back to just 7 or 8 years ago, it was a wonderful country. I love the people here. I put my second world headquarters here 20 years ago. Always believed in its future, but we were always the slow follower. We were not risk takers. We did not really have a good startup community, and the established companies were very comfortable just continuing to do what they did very well in the industry. Fast forward to today, and I think Prime Minister Modi has had a huge amount to do with this, a vision that inspired dreaming what India could be and inspired hope, and then began to show the outcomes toward that and get the results. The results have been dramatic. India has moved to the fastest growing unicorn generator in the world. And even though many of the unicorns may fall from grace over time, the ones who grow will be the next major players in high tech. And the fastest growth for 2 years in a row has occurred out of India. And it's challenging the rest of the world. Within that also, India has partnered very closely with the US for the most strategic partnership between any two countries in history. And so we watched Prime Minister Modi and President Biden say that last summer. It was near and dear to my heart because that was our dream 7 years ago. Back to the Indian tech companies. Large companies in technology traditionally do not make the next generation of leadership. So there was the IBM in mainframes, the DEC, Wang, Data General, and mini computers. I was at Wang also. Then there were the servers like Compaq and HPE, et cetera, and Dell. And then there was the internet players, then the cloud players, and now AI. Where I'm leading your audience is never before has the leader in one category had the courage to reinvent themselves for another.
Right.
This time might be the exception. And you see the large players, the Microsoft racing to that direction. You see the Googles, the Meta, the Apples going toward it. However, normally speed favors the small player.
So where's our OpenAI?
Well, OpenAI isn't going to be the one that necessarily makes money here. It's who builds on top of that infrastructure capability. The large language model, large language capabilities, modules are going to be players, but the real players are going to be those that say, how do you turn this into business results? So I would look at who is your players business to business, who is your players business to consumer, who are your players in supply chain, who are your players in cybersecurity. That's where you get the tremendous leverage, and that's where the growth happens. Different than just a decade ago, you've got an amazingly vibrant startup community, largely around your IITs, but you have a capability to bring that across all 29 states. You have an ability to dream. You create 1 million engineers a year. The US only creates 60,000. And so you have a youngest population in the world, one that is, in my opinion, destined to have the fastest growth in standard of living in the world and become the #1 economy, as I said last summer in front of Prime Minister Modi at the Kennedy Center in Washington, D.C. when I introduced him. You will be the largest economy. The only question is, does that happen in 35 years or in 60 years? And we'll see which one it is based upon your growth. So there's a window here. But the companies have to have the courage to move. Government has to create the right advantages and opportunities for the companies to move. Are you positioned uniquely to lead in areas of manufacturing versus China? Absolutely. Absolutely, in a big way. But you're positioned to do that in almost all industries, from agriculture to defense to high tech, et cetera. Does that make sense?
Yeah. So I'll come back to the AI bit, and we'll talk about the India piece in more details, because so John Chambers wears many hats, and we're trying to get him on all of it. This part of the interview is about US Chairman Emeritus Cisco, as someone who's led and made sure Cisco survived a huge amount of change very successfully for 20 years. So my question to you is...
You're going to ask a tough one, because when you say that many words, nice words in the introduction, I'm ready. I got my seatbelt fastened.
It's not a tough one. It's an easy one. Today, if you ran a large IT company or an internet company, and you're wondering, what do I do with AI, where I make money off it, I make sure it's safe, it doesn't destroy the world, as a lot of people are thinking about it, regulations are on the horizon. What do you do right now if you led, as of today, of course, you lead very successful startup venture, and we'll come to that. But today, in that position, what would you do?
Well, when I left Cisco, I made my personal commitment. I would support them, but it was their company to run. And I wouldn't want the ex-CEO saying, here's what I think of that company's future, et cetera. So I did that very smoothly, and Cisco's a great company. It's my child on it. Now, back to your bigger question, however, a large high-tech company, or a large bank, or a large insurance company, or a large retail company, or a large oil company, you've got to have the courage to reinvent yourself. You've got to have the courage to disrupt. You've got to have the courage to destroy your business models before somebody else destroys them. You've got to have the courage to get out of your comfort zone, where you don't view AI as fear. You say it has tremendous power. I've got to understand its strengths, and I've got to understand how I'm going to use it uniquely.
Okay, so you were chairman of the United States-India Strategic Partnership Forum.
Yes.
And that is an exciting place to be right now, because you have the vantage point of seeing what's working in this partnership. A lot obviously is.
Yes.
And where the challenges also lie, where sometimes it depends on who's in the White House. It sometimes depends on, what the point of view is in terms of America first, India first, but you want to have a market that works for both sides.
Yes.
So you've talked about everything that works in the partnership, and we'll come to more on that.
Okay.
But where do you see the challenges?
Okay, and you know me well enough by now, for your audience, when you ask me a tough question, I'm going to answer it only partially, hit the positives first, then I'll hit the direct question, if that's all right. So just so your audience knows just what I just did. I always start with what is working. India and the US are joined at the hip. And I don't see that ever coming apart. If so, both sides will not benefit. The relationships are no longer about one leader to another leader. It's deeply embedded into the country's fabric on both sides. We see all of your government leaders of all your parties coming to the US, and we get to know each other. Same thing is true in reverse. And it's not just at the national level. Even my home state of West Virginia, very small state, only 2 million people. They're spending the delegation over from their universities, from their Senate, from their House, the governor, to talk about what we could do together with India. So I think that confidence is now deeply inbred into the fabric. So 5 years ago, if there was a break between our two leaders, regardless of who they were, it had been hard to hold it back. Now we are so intertwined. Now, what could cause it to come apart is people need to always think in a partnership. How does your partner win? So if we become selfish and look internally, that'll be a problem. What is China's biggest mistake over the last decade? They looked internally. And remember, I bet on China in 1995 when almost no other high-tech company did, and I benefited hugely from that at Cisco, and it's been very good. But as you know, you've done your homework remarkably well, I pulled away from China in 2017. And I encouraged all my startups not even to do business in China, because it was win-lose. So I think both sides have to think about, how do you win? We did that in COVID. We do it in defense. Are we going to have differences along the way? Of course. But you've got to have the ability to have that give and take in terms of how you manage to it. And you've got to build relationships at all levels of government, business, and startups. One thing about your prime minister, and obviously I'm a huge fan, I think he's the best leader in the world today, and I wish we had somebody like that in the US. We haven't got a political leader who has over a 50% approval rating, and Prime Minister Modi has 76%. But he has the ability to build trust. If you think about a leader, it's about their track record, it's about the relationships and trust. He's formed a relationship with every political leader we've had in the US. People trust him. So I think India and the US will be fine regardless of which way our election goes in terms of the direction. Now, what do we need to do better? I think we've got to make sure this is inclusive for all our citizens. We need to think, how do we take advantage of the opportunity? Use supply chain, working together. US needs a very secure supply chain from a democracy we trust. That is China's Achilles heel, if you will. And there's an opportunity for China and the U.S. to get even closer together. And when I said that India would come on the global scene 6-7 years ago, people said, no, you watch now, India is front and center on the global hierarchy in terms of what can be done. So I think working through the challenges, how do we make sure this is inclusive? How do we do the job creation, not just economic growth, but job creation? How do we make sure that the citizens benefit from this across all the states in the U.S. and across all the states here in India? Those are the challenges. And the other thing that will surprise you, we've got to move a lot faster. Everybody's saying we're running 100 miles an hour and they get all excited. No, we're not. We have to move even faster. AI operates at 3 times the speed of the internet. Internet operated at 3 times the speed of the traditional market. That's a factor of 9. That is really fast movement.
Okay. So,
did I answer your question okay?
In part.
Okay.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on D&D working?
We have an election this year, a big one in India and the US.
Yes.
I may go as far as to say maybe the one in the US will be more of a suspense and exciting than in India. The markets, etc., have factored in policy continuity here at least. Does it make a difference to the partnership whether Trump is in the White House possibly, or a Biden continuation, or someone else? As a business leader, how big a factor is it about what happens in the United States in terms of elections later this year?
Well, one of the first things that I did when I was fortunate enough to have the leadership at Cisco in the very early 90s is I formed, along with one of the top venture capitalists, John Doerr, TechNet. And that was to have influence in Washington and around the world on technology, which we never did before. And we always did it as individual companies. And we built it with the premise that we cannot be tied to one political party or another. We have to represent all of America because there's going to be lots of challenges that go with it. So I think business leaders who make the mistake of tying themselves completely to one party or another make a mistake on that. I think the business leaders can say what their opinions are and what they view in terms of economic growth and creation and predictability. And then you can say your views in terms of the importance that India and the U.S. play very strongly, which I have no problem doing with whichever leader the U.S. picks. I wish we had stronger leaders in the cycle, to be very candid. As you know, the majority of Americans would like to see somebody other than the 2 most likely candidates. First time in my lifetime that's occurred. But my parents are both doctors. You deal with the world the way it is. And so whichever one wins, I will absolutely support. And whichever one wins, I guarantee you Prime Minister Modi will find a way to build that trust and the candid relationship. But the teams now trust each other. The American-Indian diaspora is amazingly powerful. Half of our large technology companies are led by ex-Indians.
Why do you think so? I mean, that's a matter of fascination back home as well. And, Indians here like to sort of think that, oh, they're our own. Of course, a lot of them have studied.
They are your own.
I mean, they've got those opportunities. In America, they're American citizens, but, we like to appropriate all your brown CEOs. But why do you think that happens?
Well,
why do you think that
have
works?
to accept me as an Indian, too, because I love this country. But what happened is very simple. Your IITs and your education system generated 3 decades of top engineers. And the majority of successful companies, whether it's Lisa Su at AMD, or where you're going with Microsoft with Satya, Adobe with Shantanu, IBM with Arvind, etc., half of those leaders are Indian engineers. I'm the exception. I'm a business leader in a technology-driven environment. And so the reason is very simple. An education system that teaches about technology and how to build great companies is just getting stronger, but also one that learns how to partner together. So if you talk to any of the leaders I've just met, all of them believe hugely in the Indian-US relationship. Yeah. All of them believe in how do we benefit citizens in America and the citizens in India, inclusive, and regardless of age, geographic location, religion, etc. on it. So it's a simple answer. People try to make it too complex. When I said India will become the largest economy in the world, first leader, I think, to really say that very aggressive on a national stage in front of your prime minister and in front of Secretary of State Blinken, that was, in hindsight, a little bit scary, and it was.
I want to ask you why you made that bet, and you've spoken about Prime Minister Modi, through this interview. Yes. You've even said that I wish we had a leader like him in the US. Yes. I want to understand why. I want to understand why, and why you are saying that India will be the largest economy in the world. It's a matter of when, not if. Yet.
Yes. So you really hit at the heart of the issue, and you got there very quickly. The reason I'm very good at pattern recognition, I'm dyslexic, which means I have to go A, B, Z. I can't go A, B, C, D, E, F. I get lost in it. And for any of your audience who's dyslexic, and it's something that is a weakness on one hand, but you have to learn to balance. It's a nice way of saying, once I see pattern recognition, I look, how does that play out? And that's why people say I'm able to see around the corners. I'm able to understand the internet, the cloud, cybersecurity, voice being free. Every country becomes digital. Now every country becomes an AI company. If you look at the mathematics, India's population is going to have the fastest economic growth, not just for the next 5 years, but with the plans and programs your prime minister is putting in place now, for the next 20 to 30 years, assuming that you have the courage to continue to take risks and be critical of yourself on it. You look at the population growth, average age 26 or younger, average age in China aging rapidly in terms of the direction. China's population going from about 1.4 billion to 800 million with a much older population. India's going from 1.4 billion to 2 billion. The ability to do the education with the speed, the optimism, the entrepreneurship. China's issues are self-inflicted. They got away from reasonably free enterprise. They got away from startups. The government started to get involved in almost everything, put regulations in place, put a win-lose mentality versus the US and much of the rest of the world. It doesn't surprise me they've slowed down.
Do you think they can recover?
No.
No?
I think the mistakes have been too dramatic. Now they've got demographics going against them on population from 1.4 to 800 million. Could they? Yes, but do I think they will? No, because it requires tremendous courage. And you've got to say, what was it that got us on top and miss? Now, remember, 3 years ago, if I'd said that, everybody would look at me like, John, what are you thinking? But I said it 3 and 5 years ago. And it's hard once you lose that entrepreneurial spirit. It's hard once you use the foreign direct investment into a country to get it going again. Trust. Do you have the track record? Do you have the relationships and trust? And China lost most of those. Now, do I think it's in India's and the US interest in China to recover and get stronger? Absolutely. Because this is one the whole world can benefit from. And do I think over time the US and China will do dramatically better than we are doing today? Yes. But China came with a win-lose attitude. And so I think in that people forgot about entrepreneurship and the empowerment. And if a government, regardless of its form of government, over-regulates, over-controls innovation, you don't move with the speed of innovation. Could they recover? Possibly, but I think if you look at the math, it's very hard. So how did I see it? Purely math. It was easy to do the math out, the education, the democracies working together, etc. Now, if India misexecutes or the US misexecutes, could China be there? Yes. Fast forward from 3 years ago, everybody said China would be number 1. People said US would be number 2, India number 3. I actually think it's going to be India, US, and China. If I were forecasting out half century, I'd say the US will be probably 30% bigger than China. India will be maybe 90% bigger than China.
Whoa.
So we'll see if that plays out.
Yeah, that's a big
one. Am I an
one.
optimist? Oh, yeah. But I believe in your country. I believe in your citizens. I believe in the relationship with the U.S. You are a country of dreamers, but you have the ability now, because you've seen it work, to take dreams, inspire hope, make a difference, and drive it through.
All right, so let's get a couple of questions from you on the startup side of it. And like you said, 9 unicorns. You know how to spot the winners.
Yes.
What is the best and worst startup pitch you have heard recently? And if it's to do with AI, that's fine, but otherwise also.
Okay, so this time I'm going to reverse. I usually like to lead with the best first and the area to improve on second on it. The thing that is frustrating to me as a VC, but also I sponsor these young companies. The young CEOs, I almost make them part of my extended family. When they get bought, and several of my companies will get bought this year, and several will probably go public, I'm there like a proud father, saying, how do you go forward? What a number of them make the mistake on is they come in, they pitch you on their company, and after 20 minutes, I still don't know what they do. I don't understand what the differentiation is. Everybody's going to use the word, say I'm in an AI now, but I don't care. You better be an AI now. I want to know how you're going to use it differently, et cetera. They don't connect with their person they're pitching to. So those are the classic mistakes, and those are the things I like to coach with young people on, and I often in my podcasts get leaders on to talk about how do you present properly, how do you drive it. The best ones have moved from getting all excited about technology and talking about it vertically to talking about the outcomes you can get and how do you build platforms that have architectures which allow your customers to achieve those goals. And they approach it from a customer perspective. One of the toughest pitches I ever saw was a person presented to me to bet on crickets 8 years ago. Crickets is the next form of protein. And
crickets as in the insect?
The insect, yes.
Okay.
Growing billions of crickets in factories. And when I heard this, I went, I don't think so. And then I watched him win the Clinton Global Initiative, top startup of the year, with 25,000 companies applying to it, to an independent third party. And I said, Mohammed, tell me again what you do. And he said, crickets. And he explained to me how he was doing this and how he's using big data to go after it. And he said, will you invest? I said, no. And he came back again, and I invested with him. And today, he's the #1 player in this industry. Crickets have the capability to produce the majority of protein that much of this world needs. Majority of our protein for animals will be from crickets on it. They build $25 million plants where you harvest the crickets, you put them in a container, billions of crickets per month. You bring it all the way through, no human introduction. And instead of doing tremendous damage to the environment, you produce protein both for our pets and for people that can't be done another way. So the worst one was me not being comfortable getting outside my comfort zone.
So maybe
this is what your listeners have to do.
The strangest idea, perhaps. I'm still wrapping my head around.
Oh yeah, it's one that you have to listen to.
The cricket protein take. But this has been fantastic. Thank you so much, John.
It was an honor. Thank you as always.
Thank you.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will...
Hello and welcome. You're watching Market IQ on NDTV Profit. I'm Smriti Chaudhary. Let's quickly look at where the markets are currently at. Well, the markets are at the lowest point of the day as we speak. It's been a range-bound day for the markets. It's been trading only between 200 points or thereabouts. If you look at the benchmark index, Nifty is down about 1% in trade as we talk. All the sectors are in red. There's not one spot of green among any of the sectoral indices. If you look at the broader end of the market, that's even weaker. The mid-cap index is down about 1.5%, while the small cap is down close to 2% in trade. Let's quickly look at the Nifty 50 contributors and see what's pulling the index down. We have the likes of RIL, ICICI Bank, L&T that are quite weak today. Only most of the constituents are in fact on the weaker end as well, including HDFC Bank. There are a couple of counters like TCS, Infosys that are in the green. Well, the IT sector was in the green a couple of minutes ago, but that tide has also turned. Let's quickly talk about the breadth of the market as well. Clearly should be in favor of declines. If you can pull that up. Yes, we started off with advances, but somewhere in the morning that changed and now it's highly in the favor of the declines. But let's talk about one counter that's in focus today, which is Vodafone Idea. If you can pull up the chart, yes, it's down about 14%, really cracking there. Now, this comes after a fundraise announcement that came last evening. The company plans to raise about 45,000 crores in total, out of which 20,000 crore will be through equity. But clearly the market hasn't taken positive cues from it. There's going to be an EGM on 2nd April where they're going to ask for shareholders for their approval on the fundraising. While it's unclear what mode will be used for this fundraising, and that we're yet to see. But there are some key questions about Vodafone Idea here. First of all, it's expected that the promoters will participate in the fundraising and will infuse 2,000 crores that they had promised earlier. But they need more than that. So our external investors going to come in, and which ones? Are we going to see a big backer for Vodafone Idea? The next key question is about their debt position. Now, if you look at the debt, they have a gross debt of over 2 lakh crores. However, if you look at the immediate debt, that's FY25 and FY26, that's somewhere around 5,400 in FY25 and 30,000 crores in FY26. That makes up 35,000 crore itself, and the fundraise is pegged at 45,000 crores. So we're going to get to see how this plays out with debt versus the fundraise that's going to happen. However, the company has said that the proceeds from the fundraise will be used for 5G and capacity expansion. But it seems like there's a lot of debt hangover on the stock, and that's taking the stock down. So that's pretty much where we're at in terms of Vodafone Idea. But let's talk about another stock, which is Vedanta. Now, all eyes are on Vedanta today. A slew of brokerage notes on the stock with mixed view. Anushi Vakaria joins in to tell us more about that.
Right, so Smriti, as you mentioned, a bunch of mixed reviews for Vedanta Limited. Now, over here, if you have to specifically see, Nuvama sees about 49% upside, while Antique sees about 18%. But on the flip side, we also have BOFA, which maintains a neutral rating, while the likes of Kotak sees a sell rating, citing that the EBITDA guidance that they have given is comparatively too optimistic. Some of the key highlights that should be mentioned is the expected proposed demerger, which is expected to unlock value for the business going forward. They have also outlined an EBITDA guidance of about $7.5 billion by FY27 and of $6 billion by the end of FY25 through various cost-saving initiatives. Now, the main focus continues to remain on the company's debt level at its parent level, wherein they expect about $3 billion of reduction over the course of these next 3 years. What our focus should be also going forward is the company's share of value-added product mix, which is expected to increase to about 20% compared to 16% that they had last fiscal. Another theme that should be in focus is the steel and iron ore assets monetization by the first half of FY25. And while the ramp up of its volumes are going to take place in the first half of 25, the key focus remains on the execution. So these are a couple of key highlights on basis of which we have seen the ratings discussed above.
Well, thank you, Anushi, for that. Vedanta share is pretty much flat in trade today. But there's one another stock that's moving, which is Paytm. It's down 5%, and I believe it's logged in lower circuit. We have certain news flow around this. Users can continue to use, withdraw or transfer to another wallet or bank account up to the balance available in the wallet even after March 15. This is as per the RBI. However, NDTV Profit spoke to 9 wallet users who were unable to do so. And we have Pragati joining in to tell us more about that.
Right, Smriti, you're absolutely right. So we spoke to a couple of wallet users and we ourselves tried this experiment. Now, the RBI guidelines do say that Paytm users or Paytm Payments Bank users who have that wallet, because the branding has also now changed, they are allowed to transfer the funds from the wallet to another person's bank account. But in reality, this thing is not happening. Now, while RBI guidelines say that a person-to-person transaction in this case can happen, only those wallets with a minimum KYC can't happen. But let me be very clear, the people we spoke to and the experiment that we tried ourselves was on the full KYC wallets, and we realized that the wallet to bank account transactions are not taking place, just wallet to wallet transactions are taking place. In fact, for the benefit of our viewers, we'll also show a couple of images on our screen showing that when a person or when we are trying to do a transaction from our wallet to another person's bank account, the option of sending the money is not coming. In fact, the only options we are getting is sending the money from the bank account, which is ideally in violation of the RBI FAQs or the guidelines that were put out on Paytm Payment Bank thing. Now, the interesting bit here is also that the problem is not just restricted to the Paytm Payments Bank wallet, but it is also being faced by users who are trying to deactivate their FASTag accounts with Paytm. Now, a lot of users took to X, and we also checked with a lot of them that whenever they were trying to deactivate their FASTag, because it needed a minimum balance of $150, they were not able to withdraw or get a refund of that amount. While Paytm or Paytm's Care has replied to these queries on social media saying that the refund should come in 7 to 10 days, some users are complaining that it's been over 20-25 odd days that they are not able to generate the refund. So clearly a lot of mismatch happening there in terms of the FAQs and the guidelines coming out and what exactly is happening on ground. So let's see what happens on that. And Paytm Payments Bank also spoke to NDTV Profit on this, and they reiterated and reassured the same thing, that ideally a person should be able to transfer the amount from the wallet to a person's bank account, but in reality it is not happening.
Thank you, Pragati, for that. We'll be following on that and we'll bring you more updates as we get them. Now, let's talk about a couple of other stocks that are buzzing in trade today. My colleague Mihika is joining in. One of the stocks that we're going to talk about is JP Associates. That's down about 5% in trade as we speak. Mihika, what are you picking up and why is the stock down 5%?
Yeah. So the company has executed a non-binding term sheet, and this is for a proposed restructuring for their Series A and Series B bonds. Now, the nature of these bonds are they are foreign currency convertibles and non-convertible bonds, and there's the significant bondholder participation is expected to enhance the financial position. Now, for the Series A bonds, the outstanding principal is at $29.3 million, and Series B is $46.04 million. Now, in the primary terms of the proposed restructuring, the bondholders have the option to convert this outstanding principal amount into equity shares. The conversion now will result in an issuance of shares of face value ₹2 at a price of 25 rupees a share, and the conversion will occur before a specific date as per the term sheet. Now, assuming full conversion, the expected issuance is of 25.11 crore equity shares, which will lead to a 9.28% rise in the expanded equity share capital. Now, this capital contribution, the conversion will add around 50.23 crores towards the paid up capital and 577.65 crores towards the share premium account. Then we have Tanla Platforms, which is up in trade today, and this was after two news flows. One is that the exclusive partnership with Truecaller, the company has extended this partnership, which delivers customized solutions to enterprises, and this partnership started back in 2022. And the company has also launched a new product which is called Wisely ATP Spotlight. Now, this is a citizen protection bot which will help users from phishing, which is spam calls and spam messages. It will help identify these online scams, and the users can now directly investigate the suspicious messages and then receive a clear verdict on whether the messages that they're receiving are a spam or not.
All right, thank you, Mihika, for that. Let's quickly talk about the markets as well. They're cracking today. If you look at the benchmark indices, they're down in trade at the lowest point of the day as we speak, down over 2%. But let's look at what's causing this fall. If you're able to see the heat map here, we're seeing the likes of Apollo Hospital that's down over 3.5%, Bajaj Auto, Power Grid all down over 3% in trade, Adani Enterprises, Maruti, Eicher, all auto names specifically down in trade today. Only a couple of gainers. We have the likes of TCS, SBI Life, Infi, HUL and Bharti that's gaining in trade today. Now, let's quickly look at the advanced decline ratio as well. There's a lot of weakness in the market as we speak. Let's pull that up, and as you can see, it's favoring the declines clearly. That changed at some point in the morning. However, we started off on a positive note. Let's also quickly look at some of the mid cap and where the broader markets are currently at. If you look at the mid cap index, it's down 1.5%, and Nifty small cap down 2% in trade. So even further weakness in the broader markets. If you can look at some of the stocks that are kind of drawing the index down. If you look at the Nifty mid-cap index, if you can pull up the declines there in that index, Nifty mid-cap. Okay, we have the likes of MRF, 3M India that are down in trade. We have Page Industries, PNG as well. There's Vodafone Idea, a lot of weakness there, 14%. There's Godrej Properties down 4%, Oberoi Realty, Indian Hotels. So across sectors, this is more of a broad-based declines that we're seeing across sectors, across even broader markets. So some sort of weakness that has caused that, and as I said, we're at the lowest point of day, and the broader markets seem to be even behind the benchmark indices. Nifty mid-cap down about 1.8% in trade today. So that's where we're currently at, clearly the low point of the day. But we have lots more lined up on the other side of the break. We'll come back in a short while. Stay tuned.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this date.
Welcome back. You're watching Market IQ on NDTV Profit. Time for an exclusive conversation with John Chambers, Chairman USISPF, where he talks about the role of leader and their impact on the capital markets. Listen in.
One thing about your Prime Minister, and obviously I'm a huge fan, I think he's the best leader in the world today, and I wish we had somebody like that in the U.S. We haven't got a political leader who has over a 50% approval rating, and Prime Minister Modi has 76%. But he has the ability to build trust. If you think about a leader, it's about their track record, it's about the relationships and trust. He's formed relationship with every political leader we've had in the U.S., people trusting. So I think India and the U.S. will be fine regardless of which way our election goes in terms of the direction.
Moving on, the telecom sector is in focus today. Like we mentioned about Vodafone Idea, Bharti Airtel is among the few gainers on the Nifty 50. Now, there's another development that has happened in the sector, and there's a relief for telecom companies. The Supreme Court has set aside Calcutta High Court's order on taxing SIM card sale discounts. My colleague Varun Gakkar is joining in with more on this.
Yeah, hi Smriti, thanks. So yeah, and what will come as a big relief for these telecom companies, the Supreme Court has held that these telcos are not liable to deduct TDS for selling prepaid SIM cards to its distributors at a rate below the market price. In doing so, the top court has rejected the stance taken by the Delhi High Court and the Calcutta High Court in this matter. Now, the dispute involved telecom giants such as Bharti Airtel and Vodafone Idea, so it is bound to have a huge impact. A quick primer on how the dispute sprang up. As we all know that these telecom companies are engaged in the business of providing SIM card services to its customers. At a time, this was achieved by selling SIM card starter packs to distributors at a rate below the market price, which was in turn sold to the retailers, by whom they were ultimately sold to the customers. Now, at the center of this controversy lay the issue of classifying the relationship between these telcos and the distributors as either a principal to agent one or a principal to principal one. the revenue had been maintaining that the relationship is that of a principal to agent one, and that the lower price at which the distributors get the SIM card starter pack is to be treated as a commission for the purposes of the Income Tax Act. However, to the contrary, the telcos maintained that this relationship is a principal to principal one, and that the lower price offered should be treated as a discount and not a commission. It must be noted that under Section 194H of the Income Tax Act, tax is supposed to be deducted at source if a transaction is categorized as being in the nature of a commission. These cases reached the top court in an appeal against a Calcutta High Court ruling that it held that providing starter packs at a price below the market rate is an indirect payment in the form of a commission, which is therefore leviable to tax. We don't have a detailed order yet, but we'll get you more details as soon as it comes out.
All right, thank you, Varun, for that. Another breaking news coming in on Byju's. The insolvency petition filed by BCCI has been deferred to March 12. So now the petition hearing will be on March 12, and there's some investors who have taken Byju's to court for mismanagement of the company, and we'll see how that'll play out. But this is the day 2 of Indian Digital Summit, which is underway here in Mumbai. My colleague Rishabh Bhatnagar continues to bring top voices from the sidelines of the event. He spoke to Mayank Kumar, the co-founder of Upgrad, earlier today, and he started by asking him about the company's path to profitability as well as growth and expansion plan. Here's what he had to say.
Where our enterprise business is profitable, consumer business this quarter is turning profitable. So I think that's the point on path to profitability. And on the consumer front, we believe that there has to be an investment done to take it to a particular scale. And while B2B and enterprise segment is always predictable at a steady state margin level, so I think our focus in the coming year is going to be go deeper and expand the B2C segment along with consolidating the B2B space. And that's what we'll focus on in the coming sort of financial year.
Interesting. Mayank, you've also expanded geographically, and it's been rather interesting because you've, especially with the medical colleges that you've sort of opened up in Oceania, if I'm not wrong, in very small island nations. What's the plan there, and what exactly do you also do in terms of geographies going ahead?
Yeah. So just like maybe on record or off record, but the plan for the medical college that we had started, there was a political turbulence because of which we have backed out, and therefore we took a call of not proceeding with it. But internationally, roughly about 80% of our revenue is India-based and 20% is international. And going forward, we expect international to grow significantly, partly by M&As or partly by sort of organic growth that we will see. But once that happens, the focus is going to expand and go much deeper in India. Our larger focus of geographies have been in the US, Southeast Asia and Middle East. Those are the 3 geographical areas.
Well, it's good news for the Indian pharma companies. You've heard of the carrot and the stick approach. Well, the Department of Pharmaceuticals is choosing the carrot. It's looking up to announce subsidies to boost quality. Here's Monal with exclusive details on this.
So the Deputy Drug Controller of India, Mr. Chandrasekhar Ranga, at a recent conference which was exclusive to NDTV Profit, did say that they are planning to subsidize or offer some subsidies to manufacturing companies that want to up their quality system. So an official announcement is pending yet, but this comes after the revised Schedule M, which was implemented in December this year, which would up the quality standards or require manufacturing facilities in India to up their quality manufacturing processes at par with global standards, especially the WHO recommended standards. So the idea is that if a lot of investment will go into upgradation of the existing systems, so any subsidies on that front would be a great help. Of course, this adoption is yet to be seen. He said that around 42% units today are compliant to the WHO standards, while the remaining 3,000 they have no sight of. They're on an ongoing basis conducting risk-based inspections. Now, he said that the risk-based inspections that have already been conducted, 70% of those units have already started an upgradation with regards to their facilities. So a lot more work on that front. The official recommended timeline was 6 to 12 months for large to medium and small sized enterprises. While there could be some issues in terms of adoption and a clear path needs to be charted out, subsidies I think would be a big boost.
Well, moving on, Knight Frank has released its wealth report for 2024, which says that the India's ultra high net worth individuals will double in the next 5 years. We spoke to Ghulam Zia on the Knight Frank Wealth Report 2024. Here's a slice of that conversation.
Well, we define the UHNIs as someone who has a wealth of $30 million US, including the primary home that they stay in. So that's something which is a global definition, and when we are keeping this number at par all over the world, these are the numbers that we are focusing on. And our survey actually then goes into in-depth of where are they spending, how are they growing in that number, etc. So that's exactly how the definition of UHNIs for us is.
Right. So, Mrs. Zia, the $30 million, including your primary home, and this also includes not just financial assets. I'm assuming it's assets across the board, right? So real estate, art, however you would like to define the net worth.
Yes, it includes even investment of passion, which, as you rightly mentioned, it goes into art, it goes into even wines, it goes into luxury cars, and so on and so forth. So anything which qualifies as investment of passion is also included over and above your real estate or the typical investments in various financial instruments, etc. All that, and above that is the investment of passion also included in it.
Mrs. Zia, where is that money coming from? So where are these ultra HNIs? Are they largely from tier 1 cities? And you're also expecting a pretty big growth in this segment. Where is that growth going to come from? Let's start by geography. Then we'll talk about, of course, professions and where that money is really getting spent.
Well, to start with, the old wealth has been, largely in the top 2 cities, which is Mumbai and Delhi. But in last couple of years, about 7, 8 years, 9 years, a huge number of tech investors have also come into UHNI bracket, which means even Bangalore, Hyderabad, Chennai, Pune, a lot of these cities have also added to the numbers of UHNIs in India. So overall, as I said, it's a mix of old wealth as well as the new tech-backed wealth, which has been generated in a few years. But that said, still, the largest numbers are still focused or coming from Mumbai and Delhi.
Mrs. Zia, where are these Mumbaiites and Delhiites spending this money is what I want to know. Are they buying more homes? Are they buying bigger homes? Let's start with real estate because that is largely consumable asset class.
Indeed, you are absolutely right. And the way we are doing our survey, we are finding out that the ownership of homes is also increasing. Almost about 2.5 is the number of homes that these UHNIs have. That means minimum 2 to 3 homes each of them have. Well, many of them do rent out that additional home, but then they are also looking at buying more homes in times to come. And perhaps that's one of the reasons why in recent past, when you're talking about the super luxury homes selling like hotcakes, especially in Mumbai and now even in Delhi. Even in Delhi today, homes are selling at 95 to 100 crore a piece, which means that the super luxury homes are actually selling like hotcakes. As I said, both in Mumbai as well as Delhi.
Well, that's all that we have on this edition of Market IQ, but stay tuned. Lots more coming up on NDTV Profit.
Brought to you by बनेगा तो बढ़ेगा इंडिया अल्ट्राटेक देश का नंबर 1 सीमेंट.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the spurge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending upon one's work and creativity with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced
Welcome, you're watching the Mutual Fund Show on NDTV Profit. I'm Tamanna Inamdar. This is the show which helps you make the right decisions on your mutual fund investments. Well, today we're talking about that one stock, that one sector and that one focus that the whole world is talking about, and that's NVIDIA. Now, if you're sitting and wondering, well, it was good luck, or the lucky investors on Wall Street who can invest in NVIDIA, that's not really the case. There are quite a few mutual funds that have exposure to NVIDIA and other AI stocks, to FANG stocks as well in India, at least two directly and a clutch of them through passive investments. We're going to tell you a bit about that on the Mutual Fund Show today. We're also going to tell you whether this is the right time to hop on to that AI bandwagon. Does it make sense? How do you make that decision? So let's speak now with Ronak Onkar. He is fund manager and head of research at Parag Parekh Mutual Fund. I'm also speaking with Santosh Joseph. He is founder of Germinate Investor Services and is going to be our advisor for the day. Welcome to both of you. Ronak, let me begin with you. And the reason we were keen to speak with you is because Parag Parekh Mutual Fund is one of the early ones that have had an exposure to FANG stocks that have given Indian investors that opportunity. Let's start by getting a sense of how well that has paid off for Indian investors, why Parag Parekh first decided to go into funds like this, and right now, what is the kind of interest you're seeing for funds which have exposure to tech stocks on Wall Street, especially to do with AI?
Hey, thank you for inviting me. So we only have one scheme, the Parag Parekh Flexi Cap scheme fund, which is the one that invests in international stocks. And in that scheme, we have exposure to companies like Alphabet, which is the parent company of Google, Microsoft, Amazon, and also Meta, which used to be called Facebook earlier. So these companies were invested in our fund a while ago, essentially because they don't have equivalent companies in the Indian listed market. So if you wanted to find an equivalent of a Google-like company in India, we don't have an option, number one. even in the unlisted space. And in the listed space, we don't have equivalent technology companies here. Same applies to companies like Microsoft or e-commerce retailer like Amazon, or even a social networking company like Meta. So we wanted to invest and get exposure to these companies, and also diversify from having a country-specific exposure to only Indian stocks. So at the moment, we have 15% of our portfolio invested in the global stocks that we own. And the idea was to geographically diversify and also participate in a unique business opportunity, which also is a good business to participate in.
Can you give us a sense? I know, Ronak, you don't want to perhaps talk specifically about any stock, but can you give us a sense of how some of these, or this fund has performed over a period of time?
The fund has done reasonably well, and it's also on the back of the domestic stocks. So it's not just the international holdings that have helped us do well. If you see the history of the past 10 plus years of Flexi Cap Fund, we have had international investments right since inception. So sometimes when the international stocks would do well, the domestics will not do well. Sometimes domestic will do well, international will not do well. Sometimes both will do well or worse at the same time. So on an average, the performance has been the performance of the NAV that has been in the fund over the past 10 plus years that the scheme has been operational. And I don't mind talking about the specific stocks we own, because these businesses we have discussed in public in the past as well. These are very unique businesses, like I said, and they have different buckets of exposure to the segment that you are describing, the AI segment you are describing. So we can discuss that further.
Okay, great. No, so then let's do that. I was under the impression you might not want to, because frankly, all anyone wants to know about is NVIDIA right now. And is this a way to get exposure to NVIDIA? Do you think it's too late? As a fund manager, have people missed the bus, or is there more to come, considering that their revenues have quadrupled and they have very strong projections ahead?
So since we don't own NVIDIA, I won't be able to directly give you an answer to that. But what I can tell you is, and your audience, is the idea to understand the AI market. I hope you have some time for that. Number one is there are three layers to it. One is the infrastructure or the hardware layer, where NVIDIA rests, and even the companies like Google or even AWS or Microsoft, they provide cloud computing infrastructure, which is required for running these AI businesses. The second layer, which is on top of that, is the actual models, which we hear from OpenAI or Google's Gemini or even AWS Titan. So these kind of models, which require a lot of computing resources, they are built on top of the infrastructure layer. And the third layer, which is the layer which we are exposed to as users, is the application layer. So it can be an enterprise software that we are using, or even a personal device or software which has AI components built into it, like a recommendation engine or a customer service support that we are seeing. So all these things are on the application layer. At the moment, what we are seeing is there's a huge buildup in the bottom of the pyramid of this, where infrastructure is considered. So you can see capex from all these cloud players going and benefiting companies like NVIDIA, who have the specific hardware that they can sell for scaling up the infrastructure capacity. On top of that, when companies like OpenAI or even Google invest in creating their own models, they will have to consume this infrastructure on their own. And right now, you will only see a few plans which they are offering to customers to buy, where they can expose them to the APIs of the underlying models. And these APIs essentially become the usable part of the application layer. So we are not even seeing the application layer grow yet. And of course, in any technology, we can see the progression going up. So right now, we are in the curve where we are seeing the hardware and the models driving the demand right now, whereas the application layer is being built out slowly and steadily. So here we are. So if you ask about missing the bus, it's very hard to say, because we don't know how much hardware will be required in the future. We don't know how much investments will be sustained in the future. That is something we have to monitor.
What is your outlook for your fund?
So companies we are positioned with, they have exposure to both the layers, even all three layers. So we are okay. We are diversified across different players. So we are not betting our hopes on only one player doing.
All right. So that's a good sort of segue to talk about the next leg of this. And Santosh, let me come to you on that. Of course, Ronak, stay on with us. The question is now, how do you make the most of it? Is this the approach, a flexi cap kind of fund? There are some active funds available. I think only a couple really, and more passive funds available. Is that in a sense a good idea to go for? And your take on the NVIDIA rush. Do you think enough Indian investors would have also participated in that?
Well, the first thing is that thanks to the sharp move that we saw last week, everybody wanted to check their portfolios to see, do I have NVIDIA in my portfolio? And, if you actually watch some of the NAVs which had the potential to have US equities, you did see a couple of schemes which did have NVIDIA, whether directly or indirectly, have a 3 to 3.5% blip in the NAV just on one day. The NAV just shot up about 3% in just one day, thanks to the 15% move. Now, the way an Indian investor can benefit from investing in NVIDIA or Meta or the Microsoft business is, number one, in funds like which Ronak is running, where it's a domestic Indian equity fund, where they use the 35% limit that they have to take exposure to equities beyond the domestic market, which adds great value to the fund. Largely depends on the scheme objective and also the investor choosing them. The second is the fund of funds which have exposure to global equity, both diversified as well as thematic. Now, a classic example here is that Franklin Templeton has got a US opportunities fund where one of the top holding there is NVIDIA, and therefore you see that NAV is giving you the highest return on a 3 days or a 7-day basis. Now, you also have a lot of passive funds, whether it's the FANG funds or even simply put by the NASDAQ ETF. So I think an investor need not fret or worry about missing out. Number one, NVIDIA or any other fund. For example, over the last few months and almost a year plus, we have a lot of funds coming out of the innovation funds. Now, at the core of innovation, there is so much of AI and innovation-led technologies which are abundantly available in the US, where it's becoming critical part of the portfolio. So one, don't worry about missing the bus as far as NVIDIA is concerned. Number two, it's easier than you think to get access to this. And number three, when you are in a good portfolio which has got access to these kind of technologies and strategies, you will benefit from NVIDIA or the next NVIDIA that's going to unfold.
All right. My question is, should we get on to some of these funds now? Because like you said, the 7-day NAVs are looking great. And this question for Santosh. And which of these would be the right pick as of this point?
Whether it is this fund or any fund, chasing returns is the wrong way to start by selecting the fund to begin with. Now, if an investor so desires that his portfolio construct requires international equity exposure, or the client knows what the international equity as a perspective can add to his overall portfolio, then I don't think time is a constraint. You can add it even now. But when you add that, you have to be aware of the risk. Simply put, that the market risk at one, like Ronak was just explaining, Indian markets perform differently, global markets perform differently. Within that, technology performs very differently. Over and above that, you also have the currency risk, which is at play now and then. There is no hard and fast rule that just because of big returns you can't add or you should add. I think it has to be done more so with the portfolio construct in view. I don't see a reason why you shouldn't add even now, though it's run up so much, as long as your portfolio can fit, as long as the fund can fit into your portfolio.
I asked you this question earlier, Ronak, but I'm just curious to know, are you recently seeing more excitement about your fund with FANG exposure? Or if you can give me a sense in the last few weeks, maybe since the beginning of the year, as this trend has picked up, are you seeing more interest coming in?
The interest has more or less been the same. We have mostly long-term investors. We have been communicating to them what our strategy is and why we are making our picks. So most of them are long-term investors with SIPs running for a while. So it's not a particularly different kind of interest that we are seeing today that we haven't seen before.
So you're seeing the same interest. Maybe it's because you don't have NVIDIA in your portfolio. That could be one of the reasons. It's all about NVIDIA. I know you explained the layers, but frankly, people are just, seeing that one stock. We're going to take a very short break. On the other side, we discuss what your options are. If you are a new investor, at what stage and in which profile should you look at some of these funds? And also, we'll be taking your queries.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk.
Welcome back to watching the Mutual Fund Show. Now, this is the section of the show where we take your queries that you have sent in to us. Those numbers on your screen in case you want to write into us. And Santosh Joseph today is answering them. He's founder of Germinate Investor Services. Santosh, thank you for staying with us. Now, our first query today is from Braj Kishore. He's 44 and he says, I've invested 5,000 as an SIP in the Axis Blue Chip Fund for the last 3 years. The total fund value is 1.5 lakh rupees. Since this fund has underperformed, I have decided to exit and start SIP in a new fund. How should I invest the 1.5 lakh corpus created from the previous fund, and what large cap fund would you suggest to start an SIP in? Is Canara Robeco Blue Chip Fund a good option? So very interesting query there, Santosh. I wonder what you'd think of it, because yes, people would go fund shopping. How long should you give a fund that you feel after a point is not making the mark?
Yeah, that's one of the most trickiest questions as far as staying a patient investor is concerned. But let me just address something over here. Having been in a good fund like an Axis Blue Chip Fund for 3 years, and especially in a good format like an SIP, I think he shouldn't have redeemed the fund, he should have kept it. Now, after having withdrawn the funds, going back to another large cap fund may not make great sense, because you see the last 2 or 3 years, the markets did well, but large caps have kind of been laggards in performance. Now, if you're going to remove money from large cap, which you've accumulated through a SIP, and go back to a large cap fund, you might experience a similar experience all over again. So maybe it's better to tweak your investment objective a little bit and possibly start looking at a flexi cap or a multi-cap fund where you have predominant portion as large cap, but you also have a little bit of exposure to small cap and mid cap. Therefore, you will not experience what happened the last 2 to 3 years where large caps underperform, whereas mid cap and small caps outperform the markets. Being in a little more homogeneous scheme objective like a multi-cap or a flexi-cap will avoid the lack of patience that you just experienced in Axis Blue Chip, and therefore give you a better return over a 3 to 5 year period. So if you're considering the Canara Robeco large cap fund, I mean, within their stable, I think it's better you can look at their multi-cap or flexi-cap fund. I think you will do better for yourself considering you're making this as a lump sum investment.
Okay, just overview here, Santosh, on large cap funds, and obviously there are different parameters to check if something is underperformed, but in a sense, people are also going to look at how small cap and mid cap funds have performed, at least in the last year or so, and in comparison, large caps are perhaps lagging. Do you think that now is the time to give some kind of faith or put some kind of faith in large cap funds?
Well, you're right in that. When you look at performance, and relative performance is the most impactful one. So you have large caps, mid cap, and small caps, and you have an average small and mid cap deliver in excess of 40% return as far as the last 1 year is concerned, whereas you see large caps underperforming even the index, some of them. Now, in this scenario, it is looking really good from a 3-year perspective that large caps have not done well, and one could look at a fresh exposure to large caps, considering that there's a valuation gap in large caps. It's also important to note that the rally in small and mid cap, which has been so robust, may not always sustain. At some level, the rotation will happen. Large caps will come back, mid caps maybe take a back seat. So while we feel that because of non-performance of large caps as yet so far, there is a value opportunity out there. But I think one should also be aware that these things tend to rotate, and in both cases, in terms of a rotation case and even in terms of performance, large caps seem to be a lot more lucrative right now.
Let me take one more question. This is from Mr. Nair, who's 63 years. I found this question quite interesting, frankly. He says, I'm retired and would like to know which is the best hybrid or debt fund to get monthly or quarterly income of around 30 to 90,000. So quite a range there. And what amount do I need to invest as a lump sum or SIP, and for what period? Now, this is, I think, a good question because it's talking about something which gives you a consistent return. He also says, I also do options weekly for monthly income and have invested approximately 10.5 lakhs in the SCSS scheme. What would be your advice, Santosh, for Mr. Nair?
So for Mr. Nair, let's begin from the second half of the question. He should continue senior citizen savings scheme because it's a good scheme for senior citizens, and you have a kind of a defined yield coming in on a monthly basis, since the most important aspect of this query is that they like the month-on-month income to be coming. Now, as far as investment into the other fund concerns, whether it's a debt fund or a hybrid fund, I think today the choice is clearly between maybe an equity savings or a slightly conservatively managed balance advantage fund, and then choose to initiate an SWP to ensure you get that income. Now, here you optimize on taxes because both equity savings and balance advantage as a category give you equity taxation, and when you do SWP, even the withdrawal also is optimized for taxes. So as far as Mr. Nair is concerned, keep the senior citizen savings scheme, let that income come, make the rest of the investment into either a BAF, conservatively managed, or a good equity savings scheme. Ensure that the money is, the withdrawal rate or even the amount of money that you want to withdraw on a month-on-month basis is within that 5 to 6% annualized percentage of the overall investment, to ensure that you let your investments also grow and also meet your income requirements on a monthly basis.
Okay, so we have a few minutes left of the show and I want to pack in as many questions as I can. So Chinna is our next query, who's 32 years of age, says, for the last 1 year, I've had an SIP of 2,000 rupees each in 3 funds, the Canara Robeco ELSS Tax Saver Fund, the Mirai Asset ELSS Tax Saver Fund, and the Quant ELSS Tax Saver Fund. Should I invest in 2 to 3 funds from the same category, or should I invest in only one fund with good returns? Good question, Chinna. 3 ELSS tax saver funds. Santosh, do you think that makes sense?
Well, it is a bit much. One could have solved the problem, but I think I can see where Chinna is going. He's going with diversifying within the ELSS category, because whether you do 1 fund, 2 fund, or 3 fund, the objective of the tax saving category is to save taxes and optimize on return. But here I think he's done a bit of a smart thing by going in 2-3 selection. Now, also what I see interesting over here is these are very divergent styles. From Canara Robeco to Mirai to Quant, all the 3 are quite broadly placed in the spectrum. So I think, Chinna, you've done a good job for yourself, though you could have just done with 1 or maybe 2 schemes. You've diversified well. So as your portfolio grows, it's nice to keep it diversified, and this learning will be valuable for you.
Okay. I think there was a bit of self-awareness as far as Chinna is concerned, because they also asked, should I invest in only one fund with good returns? Just an overview on tax saver schemes. Do they make sense? as are mutual funds the right way to look at tax saving?
I think for this, the answer is an absolute resounding yes. Now, the first things first, you have to keep in mind that you have to use the old tax regime for this so that you can get the benefit of Section 80C. There are very simple points that help us figure out why this is the best. Number one, this has got the lowest amount of lock-in, which is only 3 years. You can do an SIP over here. You can diversify like how China has done into multiple schemes, because if you think the styles are different. And number four, when you compare all the available tax saving scheme on a 5, 10, 15, 20-year basis, again, a resounding answer that ELSS schemes have just outperformed every other avenue left. In fact, ELSS schemes are actually on par with some of the best performing funds across categories, even in mutual funds. So as far as China's thought process is, I think he's done a good job for both saving tax and for also optimizing growth of his portfolio.
All right. So it is a good idea in certain cases. Thank you so much, Santosh, for joining us today. Do send in your queries as well to us on the Mutual Fund Show. Those numbers, the WhatsApp numbers on the bottom of your screen. The more detail you can send about yourself will always help us get a more detailed answer for you, which could help you. So please do try and add all of that in your query. That's all the time we have today, but thank you so much for watching. Stay tuned. A lot more coming up on the other side on NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards,
just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
Hello and welcome. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and every kind of volume buzzers. I'm your host Mika Barve and with me is Agam Vakil. Before we go on to the buzzing stocks, let's take a look at how the markets have fared today. The Nifty is trading lower 0.79% with the benchmark index is also trading low with Nifty mid-cap 150 down 1.5%, with the Nifty small-cap 250 also down 1.5%. Let's take a look at first what's driving Nifty 50s, the top, what's dragging the Nifty 50 down. We have, can we get the constituents? Yes, so we have Maruti that is dragging it down with Power Grid and ICICI Bank, and Reliance Industries, which is the top loser right now. The IT stocks are showing some strength. We have Infosys, TCS and HUL among the stocks that are in the positive. When talking about key indices, indices like the Nifty Bank, Nifty Media and the Nifty Oil and Gas are all showing weakness, just like the benchmark. Nifty Oil and Gas is down 1.5% and Nifty Media is down 3%, which is the top sectoral index of the day, followed by Realty. Agam, what else are you seeing?
Right. So, well, I want to very quickly talk about what's happening in the broader markets. And of course, the broader markets are falling in tandem with the benchmarks. That's first. But there is a little bit more of an underperformance in the mid-cap 150 and the small-cap 250 comparatively as compared to the benchmarks right now. In fact, a 1.5% cut, naturally, there is going to be a lot of pressure when it comes to a whole host of these broader market stocks which have gone up of late. But in that, we do have a considerable amount of weakness in something like a Vodafone Idea, which is down as much as 12.3%. And we're going to talk about in just a bit. I'm going to very quickly take a look at all the other stocks which are also declining. So Z Entertainment down around 5.2%. That's also under a tad bit of pressure. And Paytm, for a change, now it is at a lower circuit of 5%. So I reckon a lot of traders out there would want to perhaps look to book profits. And that's booked there in Torrent Power, the other one, which is down around 4%. Max Financial Services and Shriram Finance, on the other hand, advancing in trade, but clearly not doing enough to keep the broader markets in check. Now, coming back to Vodafone Idea, which is in focus, as the board approves equity fundraise of up to 20,000 crores and a lot more, which is in focus. But there will be some key considerations here. Let's get in my colleague Smriti to tell us a little more about that. Smriti, good afternoon.
Good afternoon, Agam. Yes, the stock is on a downturn today. It's down about 12.5% as we speak. Now, last evening, Vodafone Idea came out with an announcement talking about that they're going to raise 45,000 crore rupees, out of which 20,000 crores will be through equity. Now, the promoters, likely Aditya Birla Group, had previously committed 2,000 crores that they will infuse, and time and again they've said it that will happen when a fundraise happens. So that's what is likely to happen. But the question is, are they gonna stick to that 2,000 crore figure, or are they gonna pitch in more than what they had previously committed? Now, there's going to be an EGM on 2nd April where they're going to ask for shareholders' approval for this. However, the mode of funding is not clarified yet by the company. Will it be through a rights issue, a preference issue, or something else? But there are certain key monitorables that we should watch out for. One is, will there be a big investor that's going to be backing the company? Second is, will the network get better? And with the 5G launch, the company has said that they're going to use the money raised from the equity fundraise and the debt to roll out 5G and enhance capacity expansion. But the key question is about the debt. Now, if you look at the FY25 and FY26 debt alone, the FY25 debt stands at 5,400 crore, while FY26 debt stands at 30,000 crore. That makes up 35,000 crores for the next 2 years itself. And the fundraise is at 45,000 crores. So how much of it can actually go to capex? The next thing that should be monitored is the cost of funds. Now, if they're going to raise, because only 20,000 part of it is in equity, rest 25,000 is in debt. Is it a refinancing of debt that's going to happen? They're going to take up this debt to repay the previous debt. Is that something that's going to use the proceeds for, is a question right now. The last thing is, will the government agree to extend timelines on AGR and spectrum dues? Now, from FY26, the moratorium will be lifted, and which is why the payment is, as I mentioned, 30,000 crore. Out of that, 28,000 is towards the government itself. But if the government comes forward and delays that, then that might be a relief to the company as well. But no chatter around that as we speak, and we'll see how that kind of pans out.
Yeah, absolutely. Smriti, thank you so much for joining us. We must remember that Vodafone Idea has come off from the levels of around 18.4 to currently just shy of the 14 mark, which means it's seen a correction of about 25% in just 4 sessions. And that, of course, is going to be very taxing for a lot of traders who had, in fact, hopped on to the bandwagon and gone ahead and went long. And do remember that when it did make that high of around 18.4, that was also made on considerable volume. So at the moment, well, things are looking a bit rocky, at least as far as the stock price is concerned. But we're going to keep an eye on a lot of these factors that Smriti has mentioned when it comes to this fundraising plans. That said, let's also take a look at all the stocks that we want to address in today's day of trade on the back of large deals. So we will be talking about Thyrocare, where we have largely, but besides that, Rainbow, Children Medicare, V-Guard is something that we're going to talk about, DreamFox, as well as, well, Jindal Worldwide. That's something that we will also address in today's day of trade. But let's start by taking a look at what's happening with Thyrocare. And well, I have Mika right here with us. Mika, what are you spotting in terms of volumes as well as fundamentals here?
Yes, so it is a diagnostic company. It's almost, key things to know, it's almost debt-free and it's maintaining a 10% dividend payout. Now, stock has pared a little bit, it's down, it's about 7% up today, but it did reach an intraday high of 12.7%, and it's shown strength in the past month, up about 10%, and it's up 52% in the past year. Now, volumes were 24 times its 30-day average. While there were no bulk or block deals, the total volumes did stand at 14.95 lakh equity shares, where sellers did outnumber the buyers by two and a half times. Now, this was mainly on the back of the latest acquisition. They executed a share purchase agreement with Think Health Diagnostic Private Limited. They've acquired 100% stake in the company, and now the company is a wholly owned subsidiary of Thyrocare. And the acquisition cost is undisclosed, but we did have management speak about it in the release. The acquisition is to allow Thyrocare to help provide ECG services at home, which will help expand its footprint in the pre-policy medical checkups in the insurance segment. They also had a cess amount that was due, where the Navi Mumbai Municipal Corporation rectified the previous assessment. The previous cess due was at 2.06 crores. However, the identified amount now stood at 12.8 crores, which the company has paid off. In terms of Q3 earnings that did come out a few days ago, revenues were up 5.5% on an annual basis, and on a sequential basis it was lower, but this was mainly due to festivity. But on an annual basis, franchisee and their radiology segment led the growth with 11 and 9% growth. EBITDA was up 13% and margins did expand 168 basis points, and this was mainly due to price hikes that the company did undertake, and net profit was up marginally at 0.3%. In terms of company strategy, the expected EBITDA margin, they expect it to be around 29 to 30%, and since the India geographical expansion is complete, according to the company, they're going to focus on Africa next. So that's what we had on Thyrocare. But moving on, and let's stick to the medical and pharma theme. While the Nifty Pharma is down 0.6%, we do have a company which is Rainbow Children's Medicare, and it's saw last 6 months high and an intraday high of 10.1%. And we have our colleague Varsha joining in to give us more details.
So hi Mika, as you rightly said, so Rainbow Children Medicare, if you see, company saw intraday high of almost 10%. In last 6 months, the stock price is up almost 35%, while in last 1 year, stock price is up 88%. Now, if you see volumes are trading at over 16x. Let's look what's actually buzzing over here. So if you see, just look at the background. So this is a pediatric hospital chain with 17 hospitals across 6 cities. If you see, the total bed capacity is almost 1,715 beds. Now, how was the Q3 FY24? If you see, we did see a weaker performance. Now, this weak performance was led by delayed onset of monsoon and inconsistent rainfall. Also, effect of cyclone has also led to slower performance, and lower average length of stay and superior case mix has actually pushed up their ARPOB. If you see the expansion plans for the company, they've commenced operations at 8th hospital in Hyderabad with 60 beds, and with this addition, if you see, company has a total bed strength of almost 890. This will further strengthen their hub and spoke network in Hyderabad. Also, they're on a course to add 280 beds in FY24. They also have a greenfield project of 100 beds in Andhra Pradesh to commence operation in FY25. Also, the second greenfield project they've signed in Coimbatore with 125 beds. Now, if you see, in their international business, that is also doing quite well. They've done MOU with Tanzania, and also they've got some government tie-ups with Oman and African countries. So company is actively working on international business as well. If you see analyst recommendation, out of 9 analysts, 6 had a buy call, 2 had a hold call, and 1 has a sell call. So this is all we have got on this stock. Yeah.
All right, Varsha, thank you so much for getting us those updates on Rainbow Children's Medicare. But we move on to V-Guard Industries. Now, this is a very interesting one as well. What's really happened is that its intraday volumes are highest in the last 6 months. And from what we understand, there has been an offloading of shares by the company's promoter entity. But I'm going to say no more and get in Mahima to tell us more about this one. Mahima, good afternoon.
Good afternoon, Agam. So as you rightly mentioned, V-Guard is buzzing in volumes today, where there were 6 large trades that have taken place of approximately 4.8 lakh shares, and this forms approximately 1.4% of its total paid up share capital. The total volumes that traded hands today are approximately 59 lakh shares. Now, average traded price was at 338 rupees, and the volumes are 8 times its 30-day average. Now, recently in December, as you rightly mentioned, the promoters did offload a lot of this a lot of their stake. Well, V-Guard Industries around 129 crores worth net stake was offloaded by the promoter, and this forms approximately 1.04% of the total stake that was held by them. Now, if we talk about how the quarter has gone by for V-Guard Industries, where revenues have grown over 18% year on year, and net profit has literally grown by 48% year on year. So the numbers for Q3 were pretty good. And if we talk about the key highlights, where the southern markets witnessed a year on year growth of 10%, north-south market grew by 11.2%. And their ad and spends, they've been doing a lot of spending in terms of their advertisements, and they've spent approximately 2.7% of the revenues in terms of ad and promotional spends. If we talk about the stock performance, well, it touched an intraday high of 8.9% in trades today, and 1 month the stock has been up 16.5%, and 1 year the stock has been up 37.8%.
Thank you, Mahima, for those details. But it's time to slip into a short break. But do stay tuned as we have lots more lined up on the other side.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore was sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous...
on Dream Folks, and we have Anushi standing by to give us more on this one. Anushi.
Right, so an intraday high of about 7% for Dream Folks, while its volumes were buzzing at about 6 to 7 times its 30-day average. Now over here, this was on the back of an initiating coverage that Motilal Oswal came out, wherein they have cited a couple of reasons as to why they are seeing a target price of rupees 650, which does imply a 34% an upside. So first is the airline industry, the rapid growth that we are seeing. First is the industrial kind of growth they are expecting. That is one of the reasons. Then is the asset-light business model that the company follows, along with the kind of market positioning they have. Like if you had to look at its market share, about 95% market share in its card-based lounge access in India, while overall volume-wise, if it lounge access market share, if you look at that, is about 68%. So they have a strong hold over here through which they are expecting that the ongoing capex or ongoing expenditure that the company is going to be making towards customer acquisition is going to be minimal. Based on this, they are seeing about a 20% revenue growth and 28% of PAT growth over the period between FY24 to 26. Also, the company expects its gross margins to scale up in the upper end of its margins that they have given of about 11 to 13% for FY25. So that is another factor that we should be watching out for. And the company's entry into international markets is another key focus area on how it performs going forward is to be seen. Now, on to the Q3 results, if you have to look back at it again. So, overall 8% revenue growth over here, while margins remained flat in the 8% range, and the net profit was about 13% up. Now, if you have to look at the stock performance of the company, if you have to compare it with the IPO, when the company's IPO came out in 2022, not much of a up move from here. Even if you have to look at the last 3 periods, that is 1 month return of about 8%, 6 months the stock performance remained flat, and 1 year about 16% gains. So this is definitely one stock that we should be watching out for, seeing its kind of market positioning it has.
Thank you so much, Anushi. Up next, we have a textile company that's been buzzing since midday. It's up about 14%, and that is Jindal Worldwide. I have Agam here who's going to give us a bit of detail about what's, been surging the stock.
Yeah, so, this is a very interesting one. It's also been a relatively quieter one, which has gone under the radar for a lot of investors and traders out there. Today, of course, it's making a new high. At the moment, it's up as much as 14%. Buzzing on volumes. In fact, volumes currently in today's day of trade on an intraday basis, they're the highest at about nearly 4 times as compared to its 30-day average. That said, it has run up significantly, and the question really is on what basis? Because I was looking at this particular, weaving, manufacturing and textile company. It's 9 months. Well, earnings were not amazing. In fact, we've seen a decline as far as the revenues are concerned to the tune of nearly 18%. This is 9 months, mind you. We have seen a top-line growth in terms of the quarter gone by year-on-year, and a decline of 47% for the 9 months in terms of its profitability. There certainly has been some amount of contraction, but there are also, one-offs here and there which have also contributed to that sharper than revenue decline there as far as profits are concerned. But if you consider the stock and the way it has moved, it seems like at least the investors are factoring in a turnaround of sorts, which is very evident in not only its price but also volumes. So this is the other one that you can keep an eye on. And I reckon we have a last-minute addition, and that's Aegis Logistics, which is also, once again, rearing up. Megha, what's happening with this one?
Yeah, so it's up 6.5%, and total volumes for the day did stand at 15.38 lakh shares, where sellers do outnumber the buyers. Now, Aegis Logistics is primarily, it's in the oil and gas field, and it's in the business of import and distribution of liquefied petroleum gas. In terms of the Q3 highlights, it did report a record high EBITDA in the 9-month period ending quarter 3. Profit after tax increased 24% on a year-on-year basis, and the company also has major expansion in place. It has a major expansion program with anticipated capex of 1,750 crores, and it has some progress in various projects, including the new LPG bottling plant, liquid tankage expansions, and cryogenic LPG projects. But that's it when it comes to buzzing stocks. It's day 2 of the Indian Digital Summit, which is underway here in Mumbai itself. My colleague Rishabh continues to bring top voices from the sidelines of the summit. He spoke to Mayank Kumar, who is the CEO, co-founder of Upgrad, earlier today, and he started by asking about the company's path to profitability as well as growth and expansion plans. Let's listen in.
Where our enterprise business is profitable, consumer business this quarter is turning profitable. So I think that's the point on path to profitability. And on the consumer front, we believe that there has to be an investment done to take it to a particular scale. And while B2B and enterprise segment is always predictable at a steady state margin level, so I think our focus in the coming year is going to be go deeper and expand the B2C segment along with consolidating the B2B space. And that's what we'll focus on in the coming sort of financial year.
Interesting. Mayank, you've also expanded geographically, and it's been rather interesting because you've, especially with the medical colleges that you've sort of opened up in Oceania, if I'm not wrong, in very small island nations. What's the plan there, and what exactly do you also do in terms of geographies going ahead?
Yeah. So just like maybe on record or off record, but the plan for the medical college that we had started, there was a political turbulence because of which we have backed out, and therefore we took a call of not proceeding with it. But internationally, roughly about 80% of our revenue is India-based and 20% is international. And going forward, we expect international to grow significantly, partly by M&As or partly by sort of organic growth that we will see. But once that happens, the focus is going to expand and go much deeper in India. Our larger focus of geographies have been in the US, Southeast Asia and Middle East. Those are the 3 geographical areas.
Right, and moving on, India will surpass both the US and China in the next half a century. That's the word coming in from John Chambers, who spoke to NDTV TV Profit exclusively. Here's a slice of that conversation.
Where our enterprise business is profitable, consumer business this quarter is turning profitable. So I think our focus in the coming year is going to be go deeper and expand the B2C segment along with consolidating the B2B space. And that's it when it comes to buzzing stocks. It's day 2 of the Indian Digital Summit, which is very evident in not only its price but also volumes. So this is the other one that you can keep an eye on. And that's it when it comes to buzzing stocks.
I think the mistakes have been too dramatic. Now they've got demographics going against them on population from 1.4 to 800 million. Could they? Yes, but do I think they will? No, because it requires tremendous courage. And you've got to say, what was it that got us on top and miss? Now, remember, 3 years ago, if I had said that, everybody would look at me like, John, what are you thinking? But I said it 3 and 5 years ago. And it's hard once you lose that entrepreneurial spirit. It's hard once you use the foreign direct investment into a country to get it going again. Trust. Do you have the track record? Do you have the relationships and trust? And China lost most of those. Now, do I think it's in India's and the U.S. best interest in China to recover and get stronger? Absolutely. Because this is one the whole world can benefit from. And do I think over time the U.S. and China will do dramatically better than we are doing today? Yes. But China came with a win-lose attitude. And so I think in that, people forgot about entrepreneurship and the empowerment. And if a government, regardless of its form of government, over-regulates, over-controls innovation, you don't move with the speed of innovation. Could they recover? Possibly, but I think if you look at the math, it's very hard. So how did I see it? Purely math. It was easy to do the math out, the education, the democracies working together, etc. Now, if India misexecutes or the US misexecutes, could China be there? Yes. Fast forward from 3 years ago, everybody said China would be number one. People said US would be number two, India number three. I actually think it's going to be India, US, and China. If I were forecasting out a half century, I'd say the US will be probably 30% bigger than China. India will be maybe 90% bigger than China.
Whoa.
So we'll see if that plays out.
Yeah, that's a big
one. Am I an
one.
optimist? Oh, yeah. But I believe in your country. I believe in your citizens. I believe in the relationship with the U.S. You are a country of dreamers, but you have the ability now, because you've seen it work, to take dreams, inspire hope, make a difference, and drive it through.
All right, so let's get a couple of questions from you on
Sure.
the startup side of it. And like you said, 9 unicorns, you know how to spot the winners.
Yes.
What is the best and worst startup pitch you have heard recently?
And with that, it's a wrap on large trades, but lots more lined up on the other side. Stay tuned to NDTV Profit. India markets close, up next.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which has severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and
Just the kind of the data bulls didn't want, just the kind of the data that I did not predict on the trade setup, but we have had a bit of a pullback today. Though you have to argue that on the index wide, it is still just about 0.75%. So it's not like it's dramatically fallen off the cliff or anything. Just that select pockets have had slightly vicious pullback, if you will. Pull up the bank Nifty and just show you what's happening there as well, because there too about 0.75%. The mid cap and the small caps, wherein the volumes were a bit higher today. So 1.5% down for the mid cap index and the small cap index too about 1.5%. The volumes are a bit high at the broader end of the spectrum on specific stocks, and that's the worry. Now Harsh will highlight all of that, but let me pull up the large caps first and show you what's moving and what's not. Remember, it was even Stevens at the start. Now it's a large envelope of red, and across the board, from a Power Grid to Apollo to a Bajaj Auto, clearly auto is under pressure. Asian Paints is down, Tata Steel is down, so it's varied, and on a day like this you would probably expect that to be the case. What's kind of withstood the pressure? Hardly anything. A bit of a defensive bet there. Insurance, which was active yesterday, to an extent HUL and IT. So that's about it. But a classic day when there is some serious selling that's happening, more so at the broader end of the spectrum, but the large caps are kind of exemplifying the flavor of the mood of the market. But mid caps being taken to the cleaners.
Absolutely. Let's look at the advanced decline, Neeraj, because it's been interesting all the way since morning. We saw a sharp reversal in advanced decline, and that has plateaued after that reversal early on in the day. This is what I'm talking about, roughly, around 11ish. And post that, it's been pretty much flat. So the advanced decline firmly in favor of the declines. The breadth of the market very, very weak amongst all indices, mid, large. Nobody's really been spared there. Let me quickly point out to a few names. A few names have been in focus over the last few weeks, in fact. Let me first start off with something like a Vodafone Idea. It's probably stock of the day. And along with it, let me also pull up something like a Z and a Paytm. All three of them languishing in trade, 12% lower for Vodafone, 5% lower for both Z as well as Paytm. Those have been in focus since a while. On a poor day of trade, those are doing relatively even worse. Let's look at something like a Torrent Power on the back of news. That one also has slipped 4+%. Looking at a Texmaco Rail, which is also sharply lower. But outside of that, I want to quickly point out to the OMC pack, HPCL, BPCL, IOCL. Those three also not doing so well. A Nuvama note suggesting some amount of bearishness, some amount of or indicating that probably some of these stocks have now reached their fair valuations. Also, the other one, Indostar, GTND, we did have those. Those are among the gainers in a very, very tough day of trade. There you go, 1% and 2.8% high. Indostar Capital, obviously, all the way to my left. What you're largely seeing on Indostar is because of the QIP and rather the private placement, and what you're seeing is 450 odd crore being raised, and that's why the stock is a buzz. You have the likes of a Dreamfolks and an Avas, both of those buzzing on the back of favorable brokerage notes. Avas not really buzzing, but 1% high on a tough day of trade. Not something that you would want to complain about, right, Neeraj?
Not at all, yeah. Buzzing seemed to be a rare word today for sure. Let's get in our experts to try and understand what to do in a scenario like this. Akshay Bhagwat, Senior VP JM Financial on the derivatives and the charts, and on the fundamentals, Hemang Jani joining in as well. Gentlemen, thanks so much for taking the time out and being with us, both of you. Akshay, can I start off with the trade pattern today? Is this more so the selling at the broader end of the spectrum, because that was the more resilient part the last few days? How are you looking at the charts for the basic indices, and then couple that up with your stock recommendations as well?
Good afternoon, Neeraj.
Very good afternoon.
Today there has been a good sell-off in the market, but my belief is this is more to do with the expiry-related action. Now, 22,000 is the pivotal zone. This is the point where a lot of positioning was seen a day prior in the puts. So this is more about shaking off the put writers for the time being, as I see it. Currently, there is a lot of open interest still both in calls and puts now. And considering the fact that tomorrow is the expiry for the Nifty, all this volatility and momentum is about the battle as to whether 22K holds or not. As I see, both the calls and puts are sold together to play tomorrow's expiry. So things are likely to be volatile. But if you're seeing from a directional perspective, then minimum criteria I would give is that 22,100 now stands out as a key resistance if you are placing a trade for tomorrow or today. Till 22,100, the index trades below it, there is a good chance that market might try to get below the 22K and head for the recent lows, which was 21,850. So a slight negative tinge on the index, but it's more about the options action for tomorrow's weekly expiry. As far as the couple of trades which I have for recommending to the viewers, first would be Tata Motors, which has a very strong setup here. And my belief is that longs have been rolled to the next March series. The broader chart setup is positive on the charts. So I would be a buyer in Tata Motors on dips if I get around 955, 950 odd levels. So Tata Motors I would recommend to buy at the current rates. Keep a stop loss of roughly around 942 on this trade, and around 1000 odd levels can be the target if the momentum resumes. And the second trade here is in Asian Paints, which has a negative or a bearish setup, clearly broken down the supports of 2900, heading for 2700. So a very strong negative build up on short side, and I believe 2700 is where you should target Asian Paints from the short term perspective with a stop loss of around 2910 on the upside.
Well, a short call on Asian Paints, and remember the last few days it's had a bit of a rough ride as well, so that's to be kept in mind. Opening thoughts from Hemang Jani before we address the stock of the day. Hemang, a rough ride. Akshay reckons that this is probably due to expiry led issues. How are you on the markets currently? Constructive, or would you believe lower levels coming?
Good afternoon, Neeraj. Two things. One is that, of course, expiry will have its own bearing, and you know, on days you've seen the index holding out with the broader market going through a bit of a correction. But today is a day where both the large caps and index as well as the broader market is going through a bit of a correction. Also, we have to reckon that since we will be approaching March, you know, a lot of HNIs and you know, many people try to you know, do less of activity and do a little bit of you know, accounting related stuff. So that also can have some impact. My sense is that the market may go through a little bit of a dull phase for maybe some more time. But I do not see a reason for a deeper correction given the global setup, given the fact that earnings season by and large has been quite good. So there is a lot of appetite, a lot of interest in the market, but maybe this is just a phase where you will see a little bit of correction and consolidation.
Okay. Well, stay on, gentlemen. We need to get your views on what is arguably the stock of the day, and that is Vodafone Idea, or the event of the last 24 hours, because the company's approved a fundraise of up to 20,000 crores via equity, additional maybe 25,000 crores via debt. But this brings into the picture Vodafone Idea, as well as some of the other allied players like Airtel and Indus Tower. Smithy is waiting by to tell us the highlights of this and the longer term implications, if you will, of what the eventual outcome could be. Smithy, good afternoon.
Good afternoon. Well, yes, late last evening, Vodafone Idea announced a fundraise. So in total, they're going to raise 45,000 crores, out of which 20,000 crores will be through equity. Now, that's the announcement that happened last night. They're going to complete the fundraising in the first quarter of FY25. That's the timeline that the company has given itself. The funds will be invested towards expansion of 4G and rollout of 5G. In the earnings call, in the third quarter earnings call, they mentioned that they'll take 7 to 8 months to roll out 5G from the fundraise. So probably by the end of FY25, we can see 5G with Vodafone Idea if all goes well. Next, the promoter is going to participate in the fundraise. Now, the promoter has previously committed 2,000 crores that they will put in the company if need be. So, they will participate. It is highly likely that Aditya Birla Group will put in that money through this fundraise into the company. But the question is, are they going to go higher? So that's something we'll have to watch out for. Other than that, there's going to be an EGM on 2nd April where they'll ask shareholders to approve this fundraising that's going to happen. While it's unclear how this fundraising will happen, they haven't mentioned the mode by which they're going to go through with this. Is it going to be a QIP, a preference allotment, or anything else? But there are certain key monitorables that we should watch out for. First is, will there be a big investor coming in and that'll back the company, because they really need it. Out of that 20,000 crore, we know that 20,000 will be pitched by Aditya Birla Group, but what about the rest of it? The next is, will the network get better plus 5G launch help retain subscribers? Will that be the case? Now, that will happen only if they're able to launch 5G. So the timelines are need to be pretty strictly done. If that happens, then only they're going to see 5G subscribers. Let's also talk about what will be the cost of funds. Now, this is the important part. If you look at the debt of the company, it has a gross debt of over 2.14 lakh crores. In FY25, they are due to pay 5,400 crores, and in FY26, they're due to pay 30,000 crores. So in total, that's a 35,000 crore debt that needs to be paid in the next 2 years itself. And if you compare it with the raise, 45,000 crores, out of which 25,000 is debt, are we saying that debt refinancing is what's going to happen with the company? So the cost of funds is likely to be high in this case. The last is, will the government agree to extend timelines in AGR? Now, from FY26, the moratorium on these AGR dues will be lifted, and the company will have to shell out 28,000 crores towards the government. However, will the government step in and extend those timelines is the question that we need to watch out for.
I think that question, Smriti, around the big investor, because if the promoter is going to put in 2,000 crores, there's a large equity raise that needs to come in from other investors.
Yes, definitely. It needs to be much, much bigger. So is it going to be multiple investors that they have identified? That we're going to see in the next couple of months.
Okay, we'll wait and watch. Thanks a lot for that, Smriti. So, well, that's Vodafone Idea. Hemang, coming on this one, I mean, it's not just on Vodafone Idea, but the implications of a successful fundraise on Indus Tower, on Bharti Airtel, and on Vodafone Idea itself.
Yeah, so Neeraj, I think for the last about 4 to 6 quarters, we've been hearing about the fundraising plans, and finally board approval has come through, and we just need to see what kind of structure do they come up with. If they are able to raise a meaningful amount of money by way of both equity and debt, about 450 billion rupees, surely there is going to be some sort of rub-off in terms of the perception that people have about the company, and you could definitely see a bit of a re-rating. However, given the balance sheet structure of the company and post-moratorium, the gap between the EBITDA and the obligation that they have will be quite steep. So should not get too excited. Maybe it will give you a little bit of a, maybe 10, 12, 15% kind of an uptick, but not looking at this as a permanent kind of a solution for the woes that Vodafone has.
Hemang, if I can also come in, try and understand, you expect a larger investor to participate in a big way in this, because without that, seems like a tricky one to be in.
Only given the size of the requirement that they have, both equity and debt component would be somewhere around 450 billion, which is not a small amount. So in what composition, they are able to do it, whether promoter is able to do X and you have a large investor, because if you do a small fundraise or, other people are not able to contribute to the extent of the overall requirement, surely it's going to be a tough, tall order for them.
Sure, point taken, Hemang. I also want to try and understand from our technical analyst, Akshay, give us your views with regard to how this one looks on charts, because we've seen plenty of volatility on this counter.
Well, see, Vodafone Idea today, as it trades right now, is at its support zone. The support is the recent swing low, which we saw a few trading sessions back somewhere in the first week of February. That's around 13.7. So a crucial support. But one thing is clear, that the entire momentum build-up, which we were seeing in momentum in Vodafone Idea, has been out today. So it will take time to regain its lost glory again. It will consolidate maybe if it's hold on to the support. So if anyone has a position, you need to keep a strict stop loss of around 12.5, because the momentum is killed. To regain this, it's going to take a lot of time. The broader chart structure is getting into a sideways consolidative action now. The lower end of the range being 13 and upper end of the range possibly being around 17. So more of a no trading zone action in Vodafone. And honestly, I would not advise anyone to go for a fresh buying bet here. It's about keeping a stop loss and to try to take an exit at the best possible rate.
What about Indus Towers, Akshay?
Indus Tower comparatively is better placed than the chart of Vodafone Idea here. It has given a strong breakout a couple of days back. The weekly charts have seen a breakout at 228, and that's a very strong development in the stock. Today also, the day trading parameters are very positive. The support is 233, and the expectation is that from the short-term scenario, you might see the stock heading for upside levels till around 260 to 265. So that's a trading target. If it resumes its upside journey, then positional targets can go as high as 290. So a positive view on Indus Towers, continue to hold or buy, and the view continues positive till it trades about 225.
Sure. Hemang, any views you have within telecom? Bharti Airtel, there have been a couple of favorable notes coming through. There's some bit of positivity on that counter even today, despite all that's happening in the market. As well as an Indus Towers. Anything in telecom that you're liking at this point? Not too many options.
Yeah, I agree. Surely from a, let's say if you really want to commit a serious sum of money and large allocation is what you're looking at, then Bharti is a go-to stock without any doubt. And, given the trend on the ARPUs and the way company has kind of given indication of what could be the trajectory for ARPU and overall earnings, surely that will be the favorite stock that one can really look at. Indus Tower has done pretty well. To some extent, there's a little bit of correlation between the Idea, Vodafone and Indus Tower because of the current structure. And we do think that if, Idea is able to raise money and there is a comfort that people get, it will also reflect in the sentiment towards Indus Tower. And the stock has done so very well in the last, let's say, few months. I think maybe a case of another maybe 12-15% kind of an upside given the traction and the momentum which is there. But I would not get too aggressive on Indus Tower in terms of new money, because the stock has already run up and this event of fundraise is known to everybody. So don't expect much of a move. But yes, some more upside is pretty much possible on Indus Tower.
Okay, we'll watch out for some of these as well. Hemang, thanks for taking the time out and being with us today on the show. Really appreciate your time this afternoon. That's the view from Hemang Jani. Just before we take that break, look at the Nifty 500, and that while stocks on both ends are there, but just the list of losers on the NSE 500 is just so large, with Vodafone being the top draw, yes, but everything from a PNC, Infratech, which was up yesterday, to a Motilal Oswal, which was up yesterday, have taken a sharp knock in the session. On the flip side, Jindal Saw at 18% is really packing a serious punch. We're back from a break. Talk to transformers and rectifiers as they win an order and guide to some fairly strong growth for the next 2 years.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a
Well, thanks for joining back on India Market Close. We are going to be in conversation with Mr. Jitendra Mamtora. He's Chairman and Whole-Time Director of Transformers and Rectifiers. They have recently gotten an order worth slightly over 200 crores or 225 crores, but the 232 crores to be precise from Power Grid, the contract to be executed within the next 21 months. But what is interesting about Transformers and Rectifiers is the growth targets that they've laid out for themselves. Mr. Mamtora, thanks so much for taking the time out and speaking with us, sir. Give us a sense of how do you expect the next 12 to 18 months to be like? Because when I look at what you're targeting over the next 2 financial years, it's a very impressive number in terms of growth relative to what has been clocked in the past.
See, if you look at the order position today, which is around 2,800 crores, which had never been in the past. This kind of order book and our ability to deliver this will be the main challenge. We have lined up to increase our capacity not by putting in extra infrastructure, but also by reducing the cycle time, which will give us a mileage and the extra capacity. In the past, we used to take something like, for building a large transformer, we used to take 40 days. Now it is reduced to 30 days, and our target is to reduce it to 23 days. So this also will give us the extra capacity in the plant. Beside, our earlier plan for manufacturing the smaller size of power transformers up to 100 MVA, we are expanding the capacity there by another 12,000 MVA. So this will all, and that is going to happen in next 6 months. Beside that, the challenges, as I can see that, it will be the supply of the raw material, including some of the fabricated tanks and all that as per our design. We have our own capacity to manufacture something like 300 tons per month. We are trying to increase it by putting up a greenfield plant for doing something like more than 2,000 tons, not only for us, but for the other peers as well. Because there are shortage of the transformer tanks. We are also struggling but we have managed for another 6 to 8 months. Beyond that, we'll have to work very hard because everybody is occupied and the prices are going up for such things. So we are absolutely in line with our requirement by putting up extra facilities for manufacturing transformer tanks, for manufacturing radiators. And beside that, we have a plan to manufacture some other components which are very critical in the transformer manufacturing. So that also we want to build our own. So these are the major thing which will give us the mileage. Now, price is not the criteria. It is only the deliverables. If we can deliver the transformers in time, sky is the limit for us. Anything, anybody, who is in the field of manufacturing large transformers, they are fully booked. So price, nobody is talking about the price. People are talking about the deliverables.
Sure.
So, in fact, what has happened is, the Chinese companies are also pressurizing the government to include them for the supply, which they are not eligible today.
Sure.
So they are working hard. We are also working hard that they don't come and increase the competition unnecessarily.
I take your point, sir. I completely take your point. Now, with regard to your order book, you have around 3,000 crore worth of order book, rather 2,500 plus the 300 odd crore you've won right now. And you've given a guidance for 3,000 crore of revenue in FY25.
Yeah.
So that essentially means you're doubling up with regard to your revenue current year versus next year, trailing 12 months versus FY25.
See, when I tell you, I mean, there is a rider there. What has happened is the transformer prices are going up. So, the prices have gone up by at least 15 to 20% in the recent time. So if you talk about it, my turnover last year was 1,300 crores. So 20% if you add, it comes to 1,600 crores, just like that, without doing anything, just on the price corrections. And then, as I said, whatever orders we have today are, like multiple units. It's not one unit, 2 units like that. It is multiple units. So the production cycle also will reduce. The stage inspections will also be reduced. So everything is going to take lesser time than what we used to take. Earlier, we used to talk about 1 transformer, 2 transformers. Now we are going to build 6 transformers at a time of the same capacity so that, my production line efficiency improves and my raw material supplies also becomes very standardized, so the wastage also will reduce, inventory will reduce because we are making identical transformers at a time.
Sir.
So this is going to,
No, I get your point. So you're saying that you are able to reduce the lead time for manufacture of transformers as well, and therefore, is it safe to assume that 3,000 crores should be an easy task to achieve? Because I heard you use the term rider.
I think, there is something which is missing. 3,000 crores we said in the year after, not next year, but year after.
FY26, you mean?
Yeah, that's right.
Okay,
that's right.
we stand corrected. So thank you for putting that out. So it's FY26.
Because we don't want to. We see
Yeah.
the kind of orders which we are seeing.
Yeah.
It can be 3,000, but I'm not saying today 3,000 crores because nothing
Fair
has
call.
and that kind of production line which we want to install.
Got it, sir.
Yeah, so it's
Completely agree. I have one more question, Mr. Mamtora, and which is that this execution of the order book that you do, and I heard you say that pricing may not even be an issue because there is just a lack of quality transformer manufacturers. So I'm trying to understand, do you reckon that your operational metrics and your margins can improve? Because you clocked in 10% in a quarter after a really long time in the December quarter. Can you do a double-digit margin for the next 3-4 quarters, or is that a difficult task?
No. It is, as I said, the prices have gone up. So the margins are going to go up. Nevertheless, the raw material prices are also not going up. I mean, the commodity prices, we don't have any control on the commodity prices. But what has happened is our suppliers have increased their margins also at the same time, right? So it is not difficult to get the margins what we used to have in the past. And whatever the industry standard is there, we are going to get it. There is no, if you just see the Crompton, who was not in the field, now they have entered the field, and their profit before tax is 13-14%. If that is the case, everything will improve. And the margins which you are talking about, EBIT margins, EBIT margins is one thing, and profit before tax is another thing. We are trying to reduce or we have already infused 120 crores of fresh capital in the business by way of issuing fresh shares, preferential shares. So our interest rate is also going to come down. So maybe, EBIT margins will definitely cross double digit. But apart from that, my profit before tax will also increase substantially, because if you see today, our interest cost, if you see all last 4 or 5 years balance sheet, was around 5%. It is hovering around 5%. So 5% will be reduced to 2.5% to 3%. So 2% bottom line will just go up. That's one thing. And beside that, the prices, recent increase in the prices of the transformers, the MSR ratios, material to sales ratio, has improved quite a bit. Quite a bit.
Yes, sir.
Yeah.
So take your point. Just one thing I wanted to quickly understand. So no doubt with regard to the kind of orders flowing in, therefore your margins ought to go up, but you are also suggesting raw material, or rather your vendors are charging a higher or charging a premium. So where should your margins settle? Would it be fair to say you've guided for 18 to 19? Would it be fair to say that will happen in Q2 of FY25? Is there a timing to it?
I don't want to comment on that, but see, the increase in the prices by the vendors is not on the commodity. It is on the process charges which we are talking about. Like, I'll give you an example, like copper. Copper, we are buying it around 800 rupees. So now the fabrication charges for that is 7 to 8 rupees. So they have gone to 12 rupees. So the overall difference will not be that much. Fabrication has, of course, that is the worry, that fabrication has gone from 120 rupees to 150, 160 rupees. So that is a concern. But we are having our own fabrication unit, and we are adding up more capacity, not for ourselves, also for the exports. Beside that, we are putting up a automatic line for manufacturing radiators, not only for us, which will double our capacity. It's a vertical, but that's 51% owned by us. There's a partner there. So we are putting up a automatic line for that. That line is coming and will be commissioned by mid of April. So that will also give us the mileage and also reduce our inventory.
Time, but just very quickly. So you were saying you don't want to comment on it, but you will reach double-digit margins and higher margins in the current calendar, right? Quick 20-second answer. By all means. Got it, sir. Got it. Thank you so much. All the best for the same.
Thank you. Thank you very much.
Right, that's transformers and rectifiers today, in line with all the other stocks also down in trade, but very aggressive guidance. Not FY25, stand corrected. It's FY26 is when they touch 3,000 crores from 1,300, 1,350 crores in FY23, or TTM also, roughly the same numbers. Some flashes on your screen before we take that break. This is from Bloomberg. KKR is set to mull selling stake in JB Chemicals. They're calling JB Pharma, but yeah, that is it. JB Chemicals and Pharmaceuticals, the stock has taken a bit of a nosedive as a result of that. Effectively, large supply coming in should make stocks nervous. Maybe due course of the day, be interesting to see what the stock does. Akshay Bhagwat is still with us. We need to slip into a break though. On the other side of the break, we'll talk about some of these with him, get in Deven Choksi on the fundamental side as well.
completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk.
Welcome back. You're watching India Market Close here on NDTV Profit. I have with me Akshay Bhagwat, who's a Senior VP at JM Financial. Akshay, thanks for staying with us. Now, we spoke with the management of transformers and rectifiers. I want to pick up from where we left off on charts with regard to this one. What's the sense that you're getting? What should one do?
Well, if you look at this chart, broadly the chart structure is still strong in transformers and rectifiers. There is a support base at the level of 335. So it's about the support holding on till then we maintain a bullish view on the stock from trading perspective. The upside can be as good as 375 to 390 on a short term to medium term perspective. So continue to hold longs and keep a stop loss below 332 in case you have any long bets on it.
Stood stop loss below 332 in case of longs. Thanks for that. I also want to welcome on board Deven Choksi, Managing Director, KR Choksi Investment Managers, on to India Market Close. Welcome and good afternoon, Deven. Deven, we were just a short while back speaking to the management of transformers and rectifiers. Now this entire power space seems to be heating up very, very well. He was talking about how pricing has shot up, capacities are at peak level, and both on the vendor side as well as on the client side, people are willing to pay and charging top dollar. Now with regard to the power space itself, how would some of these transformer companies evolve? Every day we are seeing Power Grid make or rather churn out orders. What's your sense in this space? What's the best play?
Yeah, good afternoon. Well, I think we couldn't have agreed more with the words that you have expressed about the potential that we are seeing, particularly in reference the transformer rectifier that you're talking about. The recent announcement suggests that I think they are having the order book for completion of about 2,600 crores and 10,000 crore more orders in pipeline. Now, this kind of situations are exceptional situations for the companies which are relatively smaller companies. The reason very obvious and clear that India is investing big time into the infrastructure, particularly the generation and distribution infrastructure of power. Earlier, if the order was to go for the thermal power, then came the nuclear power, and now today the renewable power. So certainly, I think the requirements are increasing. On the other side, the investment getting into the system through the PLI scheme is also asking for the industrial transformers in particular. As far as the capacity requirement goes, I think they all need, I think, the transformers big time. Railways being the third main sector where probably you are seeing the higher amount of order inflow coming in because of the government's thrust on railways and putting in significant amount of money behind the electrification of tracks and all. So all in all put together, I think this industry is today finding themselves into the one of the best times. The challenge that this industry definitely faces is about the longer cycle of execution of orders. From receiving the order to the execution, I think it normally takes a little longer gap in the execution. So working process inventory and the working capital requirement with every dollar or every rupee of order that they receive significantly goes up. The challenge for the analyst and for the fund manager would be to keep ensuring that I think this particular equation of requirement of working capital do not derail the entire business prospects, which otherwise I think are appearing strong. So on your question of I think which companies I think one should be looking at, I would think that I think the stronger balance sheet would make more sense because I think they would be in a better position to bargain their fund cost as well. So in a way, I think one would like to stay with the stronger companies in this particular space, though mid-size and small-size companies are equally having better prospects, as long as I think they manage the funds for the working capital purpose.
Point taken, sir, but I also want to try and get your view, and maybe in 20 to 30 seconds, we've seen a fantastic run-up from pretty much all counters in this space. Where does one seek value at this point?
You can't chase value at this point of time. I think I am very obvious and clear on this subject. The fact is that I think the markets have started discounting FY26 already now. And that is what is, I think, also a cause for concern. Some of the mid-sized, small-sized companies may not have the consistent performance to report, I think, on a quarter-over-quarter basis. So over a longer period of time, I think they would end up executing their books. But at the same time, on a quarter-over-quarter basis, I think they may disappoint because of the very nature of the business. And at such point of time, if the valuations are lofty, then possibly market would tend to correct at such point of time on the given results. So I would not chase, I think, the market price. I would probably wait for the values to come down to make more appealing sense for investing in the portfolio.
Wait and watch. That's how Deven is going to play this. Okay, I have Agam standing by. Mandatory FNOQs for today as we are in the last half an hour of trade. Agam, what is it that you're making of the trade today?
Right, Harsh, you know, tomorrow's expiry has just become very, very tricky considering the way markets have moved today. And it certainly has seen a spike in volatility. The underlying is down by around 1%. We have lost out at the moment around at the 22,000 mark. And along with that, we are in fact seeing a considerable increase in the March futures towards what looks like at the moment shorts building into the system. When it comes to the bank Nifty as well, that is also where we are seeing a 1.3% drop, and we are well below the mark of 46,000. Remember, that's where we did see a significant amount of support over the previous few sessions, and we are seeing an increase in the March futures. What about your options market? Now, since the Nifty has fallen, it is only obvious that we would continue to see a considerable amount of increase in calls. Now, that also means that a lot of these traders are writing calls around 22,200, 22,100 levels as well. And they're also taking advantage of the fact that the Nifty is now below the mark of 22,000. Moving on to the bank Nifty, and this is again going to be a very interesting one considering of course, this is your overall open interest distribution for the Nifty. And we continue to see your put as the one with the max OI, but it will most likely change in the next 15-20 minutes. Moving on to the bank Nifty, that's where once again we continue to see a little more addition towards the calls and call side of things around 46,500. And finally, coming down to stocks, want to keep an eye on something like a Jindal Steel, along with Coal India, M&M and GAIL, all of them looking at shorts, except for Dabur, which is looking at longs. And in terms of stocks, which is seeing unwinding, and there the list will be a little larger. where we have seen longs unwinding in Syngene, Voltas, as well as Wipro. A lot of slabs in Berger Paints, on the other hand, looking at about short covering. But volatility has come back into the markets, and this also makes tomorrow's trading day along with your monthly expiry a little bit more trickier.
Well, absolutely. Thanks so much for that, Agam. Tricky day tomorrow as well, and volatility is back is the key takeaway there. But let me quickly check on one more stock that we really wanted to cover. That one was Vedanta. All right, while we have Anushi miking up, I want to quickly try and understand from Akshay. Akshay, talk to us about what is your sense tomorrow expiry. Agam calls today as well as tomorrow's expiry a tricky one. What's your advice?
Absolutely, it's a tricky one because 22,000 is the pivotal level for the index. We are kind of oscillating around those levels, but at the closing hours, it is slipping below the 22 mark. So the sense is that there is slum negativity or long unwinding happening in the futures and options segment. There is a good chance that at the lower end, 21,850 can be tested tomorrow. 22,000 is turning out to be a strong resistance, as I see a lot of call writing bets are being positioned at the strike. So if you want to take a directional bet, your stop loss has to be 22050 for tomorrow. The view is negative, and there is a good chance that Nifty can test or go below the 21,900 the way the data reads at the current juncture.
Well, testing 21,900, that's really one more takeaway, at least for us today. But let me quickly switch over. Vedanta was one of the other ones in focus. Slew of brokerage notes on the stock. Mixed views, some positive, some negative. Anushi is here with all of the takeaways before we take what our guests believe on Vedanta or their views on Vedanta.
Right, Harsh, as you correctly mentioned about the mixed set of reviews that we have been seeing for Vedanta, where on one side we have Nuvama rating the stock as buy, seeing about a 49% of an upside. This is on the back of a couple of reasons that the company management has cited. First is the proposed demerger to create potential value for the separate entities going forward. Also, there is the main focus continues to remain on the company's debt reduction plans, especially at the current level of about $3 billion over the course of next 3 years. They've also outlined an EBITDA guidance of about $7.5 billion by FY27. So that is also on the watch out for. Another couple of reasons that we should be focusing on is the monetization of the iron and iron business. So that is on the cards as well. While these are some of the positives, we also have neutral ratings, wherein BofA has given a neutral rating, while Kotak has given it a sell rating, citing that the EBITDA guidance that they have given of $6 billion for FY25 seems too optimistic for the company currently. And Motilal also has a neutral rating and suggests that the debt overhang at the parent level continues to loom over the company until they reduce this forward. So these are some of the highlights that were mentioned.
Right, thanks so much for that, Anushi. Let me quickly take it across to Deven. Deven, Vedanta overall, what's your sense with regard to this one? Is it or does it continue to be a value proposition of sorts in this kind of a market, given the kind of dividend yield that it continues to offer, the kind of free cash flow it has, and the possible value unlocking that is expected from it?
So the entire commodity portfolio of Vedanta, be it ferrous, non-ferrous, that is white metal, I think the underlying tone remains absolutely very bullish because of the stronger demand scenario which is emerging, particularly because of the India being in capex mode. So to a greater extent, I think we remain absolutely convinced about the prospects going forward for the commodity space in general. And we believe that I think we are entering into a very structural bull run as far as the metal commodity space in particular. The oil and gas commodity too, along with, I think, is having a reasonably steadier performance to talk about from Vedanta side. Well, I think the bigger challenge, if at all, I think one wants to call it as, so on one side, the downside is limited in the stock price because the valuations have been moderated and corrected significantly, and they have remained at the level at which I think they're becoming very compelling buy proposition. The challenge out here would be that till the time they complete their entire restructuring of the group, I think till that point of time, I think the buyers will not be comfortable entering into this stock. That is what my understanding is. Having said that, I think as you go closer to the restructuring outcome, probably I think the market would start giving some better valuation de-rating to this particular stock. At this point of time, downside remains limited. For an upside, I think either you wait for a long time or maybe I think buy when I think you have got little more clarity at such point of time to time the market a little bit more predictably than what it is at this point of time.
Point taken. Devin, what about the debt restructuring on this one? Do you feel reasonably confident that they will be able to carry it out? Company of this size, this scale, having such strong promoter ownership?
They are profitable. They are generating cash.
Absolutely.
That is a positive, according to me. And that's where the lender will not shortchange the company or the promoter, particularly in this kind of a situation. Yes, they do need to have the restructuring of the debt, and for which they are doing the restructuring transaction, demerger transaction, which we are talking about. So that particular aspect is not ruled out. In my understanding, since the cash generation ability of the business is remaining absolutely strong and convincing, and which is sustainable in the period of time, I would think that the ability to manage the debt portfolio and getting it restructured or paid, I think will not be a bigger challenge for the group as a whole. So I would remain reasonably more positive on this particular aspect than worry about it. I think at this point of time, they're servicing debt well. That is a good strong point, which I see it in the commodity business.
Okay. Well, some more stocks before we take in the closing strategies. We've spoken a lot about stocks which have corrected a bit today, and it's that kind of a day. What stood out very well today, aside of stocks like Bajaj Healthcare or a Dream Folks, which went up on that Motilal Oswal note, is Havells. It's up another 4% today on very high volumes relative to the few-day averages. And this is after the stock has had a good run in trade yesterday as well on the back of the upgrade from Goldman. So the stock has done really well the last couple of trading sessions. Akshay, any thoughts for somebody who went into a leverage long on Havells this week, has enjoyed 9% returns in a market like this? Good to take profits?
You can hold on to this stock. The reason being today, Havells has given a multi-year breakout, and this breakout has been seen at the levels of 1500, and this has happened after 2021. So a very strong breakout backed by volumes, and it's a positive trade on the technical setup. So I would say that even if someone is not bought, it's a trade worth going for at the current levels. The breakout happened at 1500, so your stop loss should be at 1480. It has stood out in a negative market, so I believe this has more legs to go on the upside. 1575, 1590 can be your positional or short-term targets in Havells. So recommend a positive view and continue to hold your buying bets in Havells.
Devin, what about Havells fundamentally? Because there's somebody who's talking about how seasonally Voltas, for example, in the month of March does very well. Maybe the pre-summer buying, Havells therefore because of Lloyd's come into that fray as well. Do you like these businesses?
Absolutely. I think with the more amount of money available in the hands of individual consumer for spending, higher amount of credit extension happening due to the availability of funds with the NBFCs and the consumer lending financial institutions, I feel that I think the white goods industry in particular will have relatively better thing to talk about, will have more predictable business to talk about. Havells, likes of Havells, Voltas, Blue Star, are some of the companies who have already actually shown two important aspects. One, they have been successful by bringing the products, I think, which are as competitive as some of the MNC brands are. And the second most important aspect is they have expanded the distribution reach far more systematically, so that I think their ability to end up increasing the sales in the business, sales I think would probably remain always more reassuring than otherwise. In my viewpoint, I think given the kind of busy season that we are talking about, that summer season that we are talking about, in which these companies are entering into, the next quarter and thereafter, I think would be relatively stronger quarters for most of these companies, including Havells. So whether the valuations justify that part, I'm not too sure. It would be individual company to company case. Maybe some of the companies are already quoting at FY26 expected earning. So to that extent, I think I may remain a little bit more watchful on buying something at an expensive valuation.
Point taken, Devin. Akshay, before I go on to the next piece that I want to discuss, quickly with regard to your BTST ideas.
It's a negative setup today in the indices. Most of these stocks are on a negative footing here, and BTST really I'm not very keen because the momentum is on the negative side. Really, if you're keen on BTST, the only stock which is standing out is Havells, which we discussed right now, and that's the only name which is coming up on the BTST list in case you are keen on the buy side. So 1529 is the rate. If you're carrying forward the trade for tomorrow, I see levels of 1560 plus. Keep a stop loss of around 1495 on this trade.
What if I give you an invert? Sell today, buy tomorrow.
Well, there's a lot of stocks today which get into this criteria, and you can have any pick as you choose because that's how the markets are going right now, a free fall in the markets. But if I were to name a stock in this, then I would stand with the banking name here because banking is taking a good beating as the way goes. IndusInd Bank trading at around 1446, a very negative setup. Shorts added, possibly I see a breakdown of 1420 happening soon. So an STBT candidate can be IndusInd Bank for a trading perspective. Tomorrow, 1410, 1400 can be tested on the lower end. Keep a stop loss of around 1475 on this trade.
Okay, so those are some of the names for you, but let me quickly take it to the Nifty Energy Index. And I want to point out that that one is also taking a bit of a beating today, 2.5% lower. And if we can have the constituents there, what you'll see is largely all the constituents are in the red except maybe an Aegis Chemicals. Okay, so that one's probably in the red as well. There you go. So HPCL, BPCL, Oil India, those are the three stocks, Indian Oil are the three stocks that I want to focus on because Nuvama came out with a note earlier today, bearish on some of these. Unfavorable risk reward is what they call it. Devin, we've had a good run in some of these stocks. Your views, if any, with regard to this particular pack, what should one do and how are you looking at valuations?
Well, I think, of course, the valuations have been re-rated, and to that extent, I think these companies are no more quoting cheap as they used to be at some point of time. Fortunately, in the last 2 quarters, they have had the advantage of higher refining margins, and that's where probably these companies have been successful in producing the financial performance which we are referring to of the last quarter. At the same time, the crude oil prices have remained relatively more steady here, so that also has helped them. As we talk today, I think the demand scenario continues to remain good for refining products. So that again, I think that again says that the business condition-wise, they are not deprived of, I think, on the business as well as on the margin front. My only point of view here would be that I think this business is linked seriously with the commodity nature of the crude oil. And that is where probably I think one will have to be mindful about, I think, giving extraordinary high valuation to this business. Second point, the point in consideration is about the foray into renewables, which they must and they should, which they are doing, which is absolutely, I think, well taken point. However, I think these businesses do take time to get materialized. And maybe even if they have started now, probably I think before 27-28 financial year, they are unlikely to see light of the day. That is what my take would be on the renewable side. So overall, one will have to be a little bit mindful about, I think, giving the premium valuation to them. Maybe the stocks have already appreciated. So most of the things are in price as I see it at this point of time.
Sure. So not really the most positive with regard to some of these, Devin, rather seeming a little negative there, which is in line with what Nuvama is also believing, and that's what markets are doing to some of those counters. Let me take it to Akshay as well. Akshay, I know bearish at least for tomorrow, but maybe in the slightly longer term, maybe a week from now, how would you advise anyone with regard to some of these on charts? How would you go about? What are the levels?
For the Nifty, well, see, this last couple of months have been more of a range-bound scenario for Nifty. It's been choppy all over the place. But one thing which you look at the price action itself, 22,000 is showing fatigue signs for the prices. Time and again, 4 or 5 attempts have been made. the indices are not able to sustain above these levels. So I believe March month is likely to be a tricky month. There can be some bit of a long liquidation. Obviously, the FNO rollovers will give you a more clear sense as to how the picture is playing out. But just reading the prices, my sense is that the lower end of the band, which is roughly around 21,300, 21,400, from where this entire oscillation of the indices in the last couple of months is playing out, that's the base that can be retested in the month of March. So I would advise caution as you go ahead for the March series, looking at the broader price structure of the markets.
Sure. Akshay, I was rather referring to the Nifty Energy Index, and within that some specific constituents, HPCL, BPCL, IOCL and the like. Any of those names that you prefer on charts at the moment?
Look, today, the broader chart structure is still strong in the energy indices, just that today they have taken a beating, most of the names, if you see HPCL or BPCL. But I would be looking for buying opportunities in these names. BPCL has a very strong support base at around 580, 585. Similarly, this goes for HPCL too, which has a strong base on the lower end, somewhere around 490, 92 odd levels. So once these dips are retested, that's the swing lows from where you had a good bounce back, I will reconsider them from a buy. But here it's more about taking the trading buy, not buying from an investing view. So wait for dips. A slight dips makes it more good from the risk reward perspective. So I will be looking for buy opportunities in the energy pack, but at a slightly dip from the current levels.
Okay, Jamin, we'll leave it at that. Thanks so much for joining us and giving us that perspective. We'll do a quick market wrap as well, just to show you how we've closed. About a minute and a quarter or a minute and a half left. But it's looked wobbly. In fact, it's weakened further as the day has gone by. The intraday of the Nifty would be interesting because we are now probably at the lowest point of the day today. So quite a bit of drubbing that we've taken. And look at this corrective move that's happened in the last maybe 25-30 minutes of trade. The market breadth would have weakened considerably as well. And let's get the heat map up right here. So looking weak, and get the heat map up. Hardly any winners, just 4 winners, but the losers have some very large cuts. I was trying to see which of the heavyweights have corrected. There is Reliance, which is down about a couple of percentage points. So this one is the core culprit. To be honest, Kotak Bank has some losses to itself, but essentially more losers, hardly any gainers. And just the contributors list before we get Harsh here, because there's no point talking about individual names. Almost everything is corrected. But just look at this, the 3 gainers, if you will, and bobbing between the red and the green. But the losers, Reliance, HDFC Bank, ICICI Bank, Power Grid, by extent of the fall that it has had. No surprise that we've had a terrible outing. Is this expiry led? Can we recover a little bit? I think time will tell. Maybe global markets will also play a part here. But the mid caps too, down about a couple of percentage points. Not a great day.
Yeah, closing at the day's low, Neeraj. Is this a buy on dips? Not really sure, but that's a question for maybe tomorrow morning. But let me first start off with a few names. 2% down on both the Nifty mid cap and small cap as we have now closed. Let me quickly pull up a few names. Max Financial probably at the top. Gainer on the Nifty mid cap on a tough day of trade. Insurance again leading the pack. Mind you, this one owns Max Life, so that one's up 3%. PB Fintech is the other one up in trade on a tough day, 1% higher just about. Loris and Mazgon Doc is the other two which have closed in the green within the Nifty mid cap. The small cap, or rather the mid cap, the top losers, let's quickly take it first off to Vodafone Idea. That one has been in focus today, down roughly 14% at close now. Z as well in focus, that one also beaten quite badly. If we can pull up something like a Paytm, see where that one probably at lower circuit, 5% down. And Godrej Properties, if we can pull that one up, that's probably the third largest loser on the Nifty mid cap index today. Among the gainers on the small cap, Aegis Chemicals, KEC, Tejas Networks, the 3 gainers. If we can quickly pull those up, see where they've closed off. There you go, 4% higher on KEC. Tejas 2.5% odd, and Godrej Properties also closing. Aegis Chemicals also closing higher. Among the losers, HFCL, Wellspun, and NLC India. Those are the top 3 losers on the Nifty small cap, at least what basis the data I am getting. There you go. Those are so, but it's a tough day of trade we've had. And if we can pull up the advanced decline just to see where we've closed off at.
I marked it. It's looking very wobbly for sure.
Yeah.
And just before we wrap up the day's thing, if we can just get the NSE 500 or the BSE 500 losers and winners, just gives a great idea of where the pain has been and where stocks have done well. Rainbow Children is up about 13%. That's a very strong up move in the last 1 hour of trade. As also for Jindal Saw, I believe, up about 10%. So quite a good synopsis of what's happening at the broader end of the spectrum.
Yeah, but HFCL down 7 as well. So lots
as
of
is
pain.
Motilal Oswal and Delta Corp too.
Yes.
So pretty interesting moves there. But with that, it's a wrap on this leg of India Market Close from Harsh and me and the team that put this show together. Thanks so much for watching. Up next is Profit Insights, wherein we talk about a preview to what the GDP numbers could look like.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong
India's economic growth is expected to remain broadly on track in the third quarter of FY24, despite growing at a slower pace than what we saw in the previous quarter. GDP for this quarter, for the October-December quarter, is estimated to grow by 6.6%. That's according to economists polled by Bloomberg. That's lower than 7.6% in the previous quarter. GVA is expected to expand to 6.4% compared to 7.4% in the previous quarter. For the full year, GDP is estimated to grow by 7% according to compared to 7.3%. According to the first advanced estimates. GDP grew by 7.2% in FY23. Now, the figures are set to be published on February 29th at 5:30 p.m. And for a quick preview on their expectations from what's going to come up in these figures, I'm joined by Upasana Chachra, India economist at Morgan Stanley, Suvadeep Rakshit, senior economist at Kotak Institutional Equities, and Madhavi Arora, global lead economist at MK. Thank you so very much to all three of you for taking time out for us today.
Thank you.
So I'll start with you, Madhavi. We're looking at a fairly wide range of economist estimates this time around, both for the Q3 figures as well as what is the estimated growth for the full year. For instance, according to the first advance estimates, GDP growth was pegged at about 7.3%, but I'm assuming most economists expect that number to actually come in a tad bit lower. What's your expectation going in and why?
So hi Pallavi. So we are also looking at a relatively lower real GDP growth for the year. Our expectation is close to 7% as against the first estimate of NSO at 7.3%. Just to note that the first estimate which was done, obviously it is susceptible to a lot of revisions because it is largely done by using extrapolation or limited data inputs that we have, and the data point is basically done to essentially gauge the growth outlook in general for the next year's budget. So basically, there is a good chance that you would see a big revision, in the data print, because the second half of the year, if I look at the 7.3% forecast by the estimate of the NSO as a base case, then the second half of the year should grow at close to 7%, which I don't think would be the case. I think we are more towards 6.5% second half growth, with the third quarter probably printing close to 6.7%, which is still higher than what I was expecting, say, early part of this year. So there clearly has been a much better than expected, activity rebound in the economy. And I think second half would be slower than what the first estimate of NSA expects. But that said, it definitely is better than what I was expecting early part of the year.
Okay, all right. So Upasana, quickly coming to you, while like Madhavi to broadly outline, we're expecting the second half to grow a tad slower than the first half, but of course still grow at a faster rate than what was expected at the start of the year, for instance. Could you throw some perspective on what's happening? Is the growth in second half, which is expected to be slower, largely on account of the base effect, and what are the other reasons?
Hi Pallavi, yes sure. So as Madhavi pointed out, and I would concur with her view that the second half of the year in terms of YOY growth rates, we will see a moderation. That's what we are building in as well. Our estimates for fiscal 24 are also lower than the first advanced estimate. So we are expecting full year growth at 6.9% and thereabouts, lower than 7.3 that the first advanced estimates is pegging it at. The key reason for this is that there is this base effect which will catch up. So while the YOY growth numbers will look as if they are moderating, I think the sequential trend is still going to be pretty strong and holding up the momentum. That's what we are seeing when you look at the high frequency data points as well. So I think when you look at the numbers for, say, December quarter, which we'll get day after, or the March quarter data, the YOY numbers will moderate from the first half, but the underlying growth momentum should not be read as something that is depicting a slowdown or a moderation, because sequential trends will still be pretty strong in our view. And it's more about, the growth trend sustaining. So what's the view that we, or what's the trend of growth that we can see going further into calendar year this year of fiscal 25. And I think that's where more important, where we think that growth will be able to sustain around the 6.5 handle. So for fiscal 25 also, we expect growth at 6.5%. So it's more about base effect catching up. There will be some amount of interplay of, the deflator as well, which, or the pass through of the lower input cost prices, as we know, which help the September quarter GDP, that will also start normalizing. So factors like these will be at play, which will throw up a lower YOY reading versus the first half.
Okay, all right. So Subhadeep, coming to you, before we can actually delve deeper into some of the industry-wise trends, I think for a lot of us, the bigger question this time is on private consumption. The figures that we saw in the previous quarter weren't particularly encouraging. What's your expectation from consumption for this quarter? Do you think we can expect a better figure? Are you seeing signs of improvement there?
Not necessarily. I mean, a better figure is subject to a lot of, I think, statistical discrepancies, etc., how they are, kind of factored into the numbers. But I think broadly, if you look at the trend in terms of consumption, if you look at the kind of growth numbers in terms of volume growth numbers that some of the FMCG companies are talking about in the recent earnings season, as well as in terms of the rural as well as the urban split in terms of some of the sales of these companies, doesn't seem to kind of indicate that there is a significant increase in the consumption growth as such in this particular quarter. We know the fundamentals broadly have not changed. If anything, urban consumption possibly is probably the drivers of urban consumption is slowing down. And that could continue to indicate that consumption overall remains on the slower side.
Okay, all right. Coming back to you, Madhvi. So, Subhadeep just touched upon private consumption. No particular reason to expect any strong improvement there. But what's your reading of the rural economy? It's been a point of concern for quite some time now, and it does appear that we're beginning to see some signs of improvement. What's your takeaway? And then, of course, added to that, agriculture. In the previous quarter, agricultural growth was also only at 1.2%. Can we expect a better figure this time around?
So with regard to rural, again, we're getting very mixed trends. And those are, again, cyclical stories, right? On a secular basis, we look at the rural economy since 16-17 has been largely sluggish, partly led by the fact that the real wages in the rural sector have, grown on an average of +2 or -2% year-on-year growth. So that itself sort of explains that, because of the lower rural income in general, there's been a lower rural consumption overall. Within rural as well, I think the composition of employment has changed probably in favor of agriculture, which is now moving at the margin again back to services. But possibly the reason why we saw a much lower rebound in the rural consumption was largely because of the, skewness again towards agriculture as a base for employment versus, say, services, which is a much better paying and a much more productive sector. But I think that is also improving at the margin. But again, as I said, structurally, you still have to see better income growth in the rural economy in general to be able to expect a big rebound in the rural story, which is yet not happened. What was the other question? I'm sorry, I
did want to ask you as well about the growth in agri GVA. So we saw a fairly tepid figure the last time. Agricultural GVA growth came in at about 1.2%. And like you've mentioned, even up until now, we continue to see mixed indicators when it comes to rural. But can we expect a little bit of an uptick in that figure there?
So the government first estimate of Kharif crop was a contraction of, I think, close to around 4.6%, if I'm not mistaken. But, and we need to see, how much the agriculture GDP would actually be impacted by the patchy and uneven monsoons that we've seen through the year. But at that said, I think second estimate could get revised higher, as it has been the case in the past. And also, other subsectors like fisheries and horticulture are also now, sort of gaining more importance in agri and allied activities. So they may also offset a part of the weakness that you would see in the core agriculture sector.
Okay, all right. Coming to you, Pasna, we saw a particularly strong growth, double-digit growth in mining, manufacturing and utilities the last time around. Construction too, of course. So this time, especially, let's start with manufacturing. What's the expectation this time around? And also now, do we expect the benefit that companies saw from lower input costs? How do we see that panning out for them this time around, and in terms of corporate profitability? Can we still expect strong growth in manufacturing this quarter?
So yes, manufacturing I think was the biggest surprise in the last quarter in terms of the upside that came in the overall GDP numbers as well, and growing at a double-digit level on a real basis. I think that number is going to moderate when we look at our estimates for December quarter, but still remain pretty healthy. So you can't expect it to continue growing 13%. I think that will see moderation basis the high frequency data that you can see for the manufacturing related data points for the December quarter, and that is, I think, going to reflect in the GVA numbers as well. So we are expecting that number to moderate to somewhere just probably below double digits, so in the 9 to 10% range. this is being driven, as I mentioned, by the earlier in your earlier question about by the lower pass through or the normalization in the benefit from the input cost pass through as well. So if you look at non-food WPI inflation, that was contracting by about 8% in the September quarter, and that contraction has lessened to, I think, 3 or 4%, if I remember correctly. So, that's like, obviously it is, that continue reducing, and that's, in real terms, that will eat away some of the benefits if you have to think about it. So real value added will get impacted by this trend of normalization in non-food inflation as well, which was a deep negative in the September quarter. This is getting reflected in the corporate profitability trends as well. So if we look at corporate profitability trends, the YOY of that remains very strong still in December quarter, but has moderated from the September quarter levels. So I think at the margin that will impact the YOY numbers that we see for the manufacturing sector, which are probably going to see some moderation versus the September quarter.
Okay, all right. Well, with that, it's time to slip into a very short break, but stay tuned. We have more coming up at the other side.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth Rs 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV.
Hello and welcome back. back. You're watching a special on NDTV Profit ahead of the release of the GDP figures, which is scheduled to be published on February 29th at 5:30. I'm in conversation with Suvadeep Rakshit from Kotak, Madhavi Arora from MK, and Upasna from Morgan Stanley. Thank you so very much once again to all three of you for taking time out for us. But Suvadeep, coming back to you, tell us a little bit about what's the expectation in terms of the industry-wise breakup. So in the previous quarter, we saw manufacturing, utilities and construction do much of the heavy lifting on the industry-wise trends, at least. This time around, what's the expectation? Services is broadly expected to stay strong as well, considering the lift from the festive season. How are you looking at it?
Sure. If you look at the industrial sector, obviously a very large, in fact, it was quite evenly distributed in September with the double-digit growth practically in all of the four industrial segments: mining, manufacturing, electricity, as well as construction. But if you look at the current quarter, I think obviously some of these growth numbers will moderate because of the base effect, etc. But specifically when you're looking at manufacturing, I don't think there is much of a let-up that you might be seeing in terms of the growth rate. Because typically when the government looks at the GDP or the GVA estimates or the GDP estimates, a lot of it comes from the corporate earnings. If you look at the corporate earnings and look at some of the key manufacturing sectors, one of the largest sectors is the oil and associated industry, along with chemicals, autos, etc. If you look at the oil marketing companies and some of the oil companies, they were generating losses in the last couple of quarters, which is in last year, which is basically the September and the December quarter, which is why you would have seen a negative growth or a contraction in both those quarters in manufacturing. In this quarter, obviously, those companies have been registering very high growth, obviously turning profits. And in terms of other sectors also, the profit growth has been pretty high. The volume growth could have been very muted, or revenue growth could have been muted, but the profit growths have been exceedingly well. And that will continue to reflect well in terms of the overall manufacturing sector growth. Construction, on the other hand, there is some amount of weakening, if I may use the term, in terms of at least the year-on-year growth rates in terms of, let's say, IIP cement or IIP steel, etc., which could reflect in a lower or maybe a single-digit growth in terms of the construction sector. So overall, industrial sector should remain in high single-digit. Along with possibly a very low single-digit in terms of the agricultural sector, and the services sector continues to remain strong, obviously buoyed by the sales that we've seen during the festive season, as well as the real estate sector, the financial sector, which has been pretty strong. Just one weakness that you might see on the services is possibly on the government spending part, which had gone slow from September onwards. And that might reflect on the public administration and defense part in the services.
Okay, all right. Madhavi, I know today shows a special on the GDP figures that are scheduled to come up, but you did touch upon the rural space, and it does get me back to some of the findings that we saw from the household consumption expenditure surveys, you had put out your thoughts on that. How does the picture sort of come together for you at this point? You did mention that the findings from the survey were somewhat at odds, as a lot of us thought, about the strength, the health of the rural sector. Any explainers possibly on what's the reason behind the possible dichotomy? Some of the theories, of course, were that more rural households dipped into their savings to be able to finance their consumption. But what are your thoughts?
So again, India does not have an income survey, so you really cannot understand what really happened in that. This is a consumption survey, and various narratives can be made looking at the cross-section or time series data. But that said, as I wrote in my note as well, that India is a growing economy. One should expect anything but a linear behavior in terms of, consumption or income patterns across various deciles of rural and urban economy. That said, there were some positive points definitely with regard to the rural segment as well, where we saw that there was a convergence happening in the rural and urban segment. The aspirational economy is of course improving. The gap between the average urban and rural spending generally has fallen dramatically over the last decade or so, and that is largely happening at the middle and top bracket of the economy. So all of that is definitely positive. But of course, as you mentioned, things that we also wrote in our note is that rural sector generally has a very high, relatively higher marginal propensity to consume than the urban sector. So assuming that we did see rural wages being a little bit stagnant, it is also possible that they dipped into their savings to ensure that their consumption patterns remain healthy and probably increase their marginal propensity to consume even more. But that's again a theory which doesn't really have a substantiated data to back my thought process up. But that said, there were certain positive segments in the economy which basically showed that the urbanization or the aspirational aspect of the rural economy has continued. Of course, there were different stories that you can play out depending on what strata of the economy that you're focusing on.
Right. So, Vadeep, coming back to you as well regarding the survey, you did point out that consumption expenditure, when adjusted for inflation, is not particularly encouraging. Could you elaborate a little on that?
This is with regards to the expenditure survey that you're talking about, right? No, see, the numbers are there as put out by the government. So if you look at the numbers, broadly, rural growth has been on a CAGR basis over the last 11 years have been at the rate of 9.2%. And if you're looking at the urban, that has been at around 8.5%. But if you look at it from the real terms, that has been close to 3%, right? So that's the weakness in terms of the real that you are seeing. While price effect would have led to a high nominal consumption growth, but on a real basis, that number is on the weaker side compared to the historical or the past surveys. I mean, a couple of surveys before this that you would see.
Okay, all right. And with that, we're completely out of time. Thank you so very much to all three of you for taking part in today's discussion. And we hope to hear more from you once we do actually have the figures out. Thank you. Stay tuned to NDTV Profit. GDP figures are scheduled to be published on February 29th at 5:30, and we're going to bring everything around the GDP figures and more regarding what to make of these figures then. Till then, stay tuned.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 20...
Weak day of trade on D Street. Sensex dips over 700 points. Nifty settles below 22,000. Meanwhile, broader markets plunge in tandem. Fall over 1% each, dragged by media and PSU banks. And a bullish roar coming in from Sun Pharma's Dilip Sanghvi, who aspires to increase R&D spend to 9%, making it a $1 billion target for the coming 3 to 5 years. Meanwhile, FMCG companies are flexing their pricing power to boost revenue growth. In a hope of seeing revival in slow demand, companies take price hikes of up to 10%. And it's an NDTV Profit exclusive. John Chambers, Chairman Emeritus at Cisco, said he expects India to surpass both USA and China in the next half a century and may grow over 90% higher than China in 50 years. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host Pallavi Nahata, and as always, the show aims to bring market headlines along with national and international news. But before we move on to the headlines, let's see how D Street has fared today. My colleague Harsh Saita joins in for a quick market wrap. Harsh, over to you.
Well, yes, the benchmark itself was down around 1.3% in trade today. Sharp cuts, nearly no positives in sight at the moment, at least within the Nifty 50 pack. Far and few, less than 5 stocks actually advanced in trade. The breadth is extremely weak in trade today. Of course, tomorrow's expiry is going to be a key day of trade to look out for. But largely, it looks like a tricky day of trade tomorrow as well. But back on to today. Largely, your mid caps and small caps declined much more than the benchmarks, 2% lower on both the Nifty mid cap as well as nearly 2% on the Nifty small cap as well. Sectorally as well, there was pain across sectors, but let me pick out the few key ones. One, the Nifty Bank was down around 1.4%, largely in line with the Nifty 50 itself. The Nifty Auto down 2%, Nifty Media down 3.5% in trade, largely led by Z as well, which has done fairly poorly in trade today. Outside of that, the Nifty PSU Bank as well as the Nifty Realty both declined 2% plus, and so was Nifty Energy. That one also down 2% plus. So it's honestly a carpet of red. No sector really spared. Pretty much pain across sectors. The breadth of the market extremely weak. If we can have the advanced decline there, you will see that the advanced decline firmly in favor of the declines. A few pockets of stocks which gained in trade, but outside of that, a clutch of losers. Of course, one would have to start looking out for which stocks have really lost out in trade, and within the Nifty 50, just pulling some of those stocks out. The ones or the top losers in trade was largely a Power Grid down roughly 4+%. Bajaj Auto last day to buy before the buyback date as well. That one also down 4%. But outside of that, you had Apollo Hospitals and Oyster Motors, both of which were also lower, followed by IndusInd Bank. No real sector which stood out in trade. It was a pretty tough day of trade.
But moving on, India will surpass both the United States and China in the next half a century. That's the word that's come in from John Chambers, who spoke to NDTV Profit exclusively. Here's a slice of that conversation.
I think the mistakes have been too dramatic. Now they've got demographics going against them on population from 1.4 to 800 million. Could they? Yes, but do I think they will? No, because it requires tremendous courage. And you've got to say, what was it that got us on top and miss? Now, remember, 3 years ago, if I'd said that, everybody would look at me like, John, what are you thinking? But I said it 3 and 5 years ago. And it's hard once you lose that entrepreneurial spirit. It's hard once you use the foreign direct investment into a country to get it going again. Trust. Do you have the track record? Do you have the relationships and trust? And China lost most of those. Now, do I think it's in India's and the U.S. best interest in China to recover and get stronger? Absolutely. Because this is one the whole world can benefit from. And do I think over time the U.S. and China will do dramatically better than we are doing today? Yes. But China came with a win-lose attitude. And so I think in that, people forgot about entrepreneurship and the empowerment. And if a government, regardless of its form of government, over-regulates, over-controls innovation, you don't move with the speed of innovation. Could they recover? Possibly, but I think if you look at the math, it's very hard. So how did I see it? Purely math. It was easy to do the math out, the education, the democracies working together, etc. Now, if India misexecutes or the US misexecutes, could China be there? Yes. Fast forward from 3 years ago, everybody said China would be number one. People said US would be number two, India number three. I actually think it's going to be India, US, and China. If I were forecasting out half century, I'd say the US will be probably 30% bigger than China. India will be maybe 90% bigger than China.
Whoa.
So we'll see if that plays out.
Yeah, that's a big
one.
one.
Am I an optimist? Oh, yeah. But I believe in your country. I believe in your citizens. I believe in the relationship with the U.S. You are a country of dreamers, but you have the ability now, because you've seen it work, to take dreams, inspire hope, make a difference, and drive it through.
All right, so let's get a couple of questions from you on the startup side of it. And like you said, 9 unicorns. You know how to spot the winners.
Yes.
What is the best and worst startup pitch you have heard recently? And if it's to do with AI, that's fine, but otherwise also.
Okay, so this time I'm going to reverse. I usually like to lead with the best first and the area to improve on second on it. The thing that is frustrating to me as a VC, but also I sponsor these young companies. The young CEOs, I almost make them part of my extended family. When they get bought, and several of my companies will get bought this year, and several will probably go public, I'm there like a proud father, and saying, how do you go forward? What a number of them make the mistake on is they come in, they pitch you on their company, and after 20 minutes, I still don't know what they do. I don't understand what the differentiation is. Everybody's going to use the word, say I'm in an AI now, but I don't care. You better be an AI now. I want to know how you're going to use it differently, etc. They don't connect with their person they're pitching to. So those are the classic mistakes, and those are the things I like to coach with young people on, and I often in my podcasts get leaders on to talk about how do you present properly, how do you drive it. The best ones have moved from getting all excited about technology and talking about it vertically to talking about the outcomes you can get and how do you build platforms that have architectures which allow your customers to achieve those goals. And they approach it from a customer perspective.
Moving on to the telecom sector, Vodafone Idea Board has approved an equity fundraise of up to 20,000 crore rupees. These funds are expected to be used for 4G and 5G rollout along with capacity expansion. Last evening, Vodafone Idea announced a fundraise. So in total, they're going to raise 45,000 crores, out of which 20,000 crores will be through equity. Now, that's the announcement that happened last night. They're going to complete the fundraising in the first quarter of FY25. That's the timeline that the company has given itself. The funds will be invested towards expansion of 4G and rollout of 5G. In the earnings call, in the third quarter earnings call, they mentioned that they'll take 7 to 8 months to roll out 5G from the fundraise. So probably by the end of FY25, we can see 5G with Vodafone Idea if all goes well. Next, the promoter is going to participate in the fundraise. Now, the promoter has previously committed 2,000 crores that they will put in the company if need be. So they will participate. It is highly likely that Aditya Birla Group will put in that money through this fundraise into the company. But the question is, are they going to go higher? So that's something we'll have to watch out for. Other than that, there's going to be an EGM on 2nd April
where they'll ask shareholders to approve this fundraising that's going to happen. While it's unclear how this fundraising will happen, they haven't mentioned the mode by which they're going to go through with this. Is it going to be a QIP, a preference allotment, or anything else? But there are certain key monitorables that we should watch out for. First is, will there be a big investor coming in and that'll back the company, because they really need it. Out of that 20,000 crore, we know that 20,000 will be pitched by Aditya Birla Group, but what about the rest of it? The next is, will the network get better plus 5G launch help retain subscribers? Will that be the case? Now, that will happen only if they're able to launch 5G. So the timelines are need to be pretty strictly done. If that happens, then only they're going to see 5G subscribers. Let's also talk about what will be the cost of funds. Now, this is the important part. If you look at the debt of the company, it has a gross debt of over 2.14 lakh crores. In FY25, they are due to pay 5,400 crores, and in FY26, they're due to pay 30,000 crores. So in total, that's a 35,000 crore debt that needs to be paid in the next 2 years itself. And if you compare it with the raise, 45,000 crores, out of which 25,000 is debt, are we saying that debt refinancing is what's going to happen with the company? So the cost of funds is likely to be high in this case. The last is, will the government agree to extend timelines in AGR? Now, from FY26, the moratorium on these AGR dues will be lifted, and the company will have to shell out 28,000 crores towards the government. However, will the government step in and extend those timelines is the question that we need to watch out for.
Moving on to more news from the telecom sector. In what comes as a relief for telecom companies, the Supreme Court has set aside Calcutta High Court's order on taxing SIM card sale discounts. My colleague Varun joins us with more details on that. Varun?
So yeah, and what will come as a big relief for these telecom companies, the Supreme Court has held that these telcos are not liable to deduct TDS for selling prepaid SIM cards to its distributors at a rate below the market price. In doing so, the top court has rejected the stance taken by the Delhi High Court and the Calcutta High Court in this matter. Now, the dispute involved telecom giants such as Bharti Airtel and Vodafone Idea, so it is bound to have a huge impact. A quick primer on how the dispute sprang up. As we all know that these telecom companies are engaged in the business of providing SIM card services to its customers. At a time, this was achieved by selling SIM card starter packs to distributors at a rate below the market price, which was in turn sold to the retailers, by whom they were ultimately sold to the customers. Now, at the center of this controversy lay the issue of classifying the relationship between these telcos and the distributors as either a principal to agent one or a principal to principal one. The revenue had been maintaining that the relationship is that of a principal to agent one, and that the lower price at which the distributors get the SIM card starter pack is to be treated as a commission for the purposes of the Income Tax Act. However, to the contrary, the telcos maintained that this relationship is a principal to principal one, and that the lower price offered should be treated as a discount and not a commission. It must be noted that under Section 194H of the Income Tax Act, tax is supposed to be deducted at source if a transaction is categorized as being in the nature of a commission. These cases reached the top court in an appeal against a Calcutta High Court ruling that it held that providing starter packs at a price below the market rate is an indirect payment in the form of a commission, which is therefore leviable to tax. We don't have a detailed order yet, but we'll get you more details as soon as it comes out.
Some good news for Indian pharma companies as well. You've heard of the carrot and stick approach. While the Department of Pharmaceuticals is choosing the carrot, it's looking to announce subsidies to boost quality. My colleague Monal joins us with the exclusive details.
So the Deputy Drug Controller of India, Mr. Chandrasekhar Ranga, at a recent conference, which was exclusive to NDTV Profit, did say that they are planning to subsidize or offer some subsidies to manufacturing companies that want to up their quality system. So an official announcement is pending yet, but this comes after the revised Schedule M, which was implemented in December this year, which would up the quality standards or require manufacturing facilities in India to up their quality manufacturing processes at par with global standards, especially the WHO recommended standards. So the idea is that if a lot of investment will go into upgradation of the existing systems, so any subsidies on that front would be a great help. Of course, this adoption is yet to be seen. He said that around 42% units today are compliant to the WHO standards, while the remaining 3,000 they have no sight of. They're on an ongoing basis conducting risk-based inspections. Now, he said that the risk-based inspections that have already been conducted, 70% of those units have already started an upgradation with regards to their facilities. So, a lot more work on that front. The official recommended timeline was 6 to 12 months for large to medium and small sized enterprises. While there could be some issues in terms of adoption and a clear path needs to be charted out, subsidies I think would be a big boost.
FMCG companies take incremental price hikes of up to 10% to boost revenue growth hit by sustained slowdown in demand. We're joined by my colleague Sesha Sen, who will share more on this. Sesha?
Right. So while the 10% price hikes has been across categories, toothpaste is one of the categories which has seen the steepest price hikes. Now, HUL's Pepsodent brand is now up by 2 to 10%, while Colgate has hiked prices of its brand by again up to 10%. Dabur has also taken a similar price hike for its 200-gram Meswak toothpaste. Now, among other categories, Marico has effected 11% price hike for select SKUs of Parachute hair oil. Nestle has raised prices by 9% in select SKUs of Nescafe Classic and Nescafe Gold. Coffee makers are, battling high inflation even as we speak. Detergent prices are also up by 2 to 4%. Now, three categories, that is soap, edible oil, and biscuits, are the only one reporting negative prices. Overall, the management commentary on demand outlook remains muted, and they are now banking on recovery from a strong summer season followed by better monsoons. So, analysts expect this kind of price hikes to actually boost their revenues at a time when there is negligible or elusive volume growth.
Sesha, are there any segments which have not seen price hikes?
Yes, so there are three categories, like I mentioned. Soaps, edible oil, and biscuits have seen a very less or negligible price hike. So soaps and edible oil for sure has seen no price hikes for now.
Okay, all right, thank you. But moving on, Prime Minister Narendra Modi launched India's first indigenous green hydrogen fuel cell inland waterway vessel under the Haatnauka initiative. The vessel is manufactured by Cochin Shipyard and underscores a pioneering step to embrace clean energy solutions and align with the nation's net zero commitments. With that, it's time to slip into a short break, but stay tuned. We have a lot more lined up for you on the other side.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per custom market insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at
Welcome back. You're watching The Reporter on NDTV Profit. Now let's move on to some more headlines of the day. Moving on to the tech space, Tata has finalized the location for its £4 billion gigafactory in the UK. My colleague Tushar Singh joins us with more details about the new factory. Over to you, Tushar.
Thank you so much, Pallavi. So Tata had announced the UK Gigafactory last year. Now we know where the plant is coming up. It's coming up at Bridgewater in Somerset in the UK. Apart from that, we also have come to know that the battery plant will create 4,000 direct jobs and thousands indirect jobs. The 4,000 direct jobs will be filled by locals itself. So who are the anchor customers for this plant? That is the group companies of Tata Motors as well as Jaguar Land Rover. Those are the primary customers for this plant. The plant can actually supply cells when at full capacity to about 500,000 vehicles per year. So by early 2030, this particular plant, which will be the biggest in the UK, will account for about 50% of the country's gigawatt output. We also remember that this is Tata's second gigafactory that is planned. The second one is coming up in Gujarat, very close to Tata Motors' Sanand plant. Pallavi.
Thanks a lot for that, Tushar. Now, time for some updates on the economy. We're expecting figures for India's GDP in the October-December quarter and advance estimates for the full year to be published tomorrow. Now, India's economy is expected to grow slower in the October-December quarter, but remain on track. GDP is estimated to grow by 6.6% in Q3. That's according to economists polled by Bloomberg. That is lower than 7.6% growth that we saw in the previous quarter. Of course, this is a figure which too will see revision post the publishing of these figures tomorrow. GVA growth is estimated at 6.4%. That's compared to 7.4% in Q2. Now, some of the reasons for the moderation we're seeing in growth that we're likely going to be seeing in growth tomorrow is the base effect, a slowdown in government expenditure, and the impact of uneven monsoons. For the full year, GDP is estimated to grow by 7%. That's again according to a Bloomberg poll of economists. This figure is compared to 7.3% as per the first advance estimates that were published before the budget. Now, last fiscal, just for reference, GDP grew by 7.2%. Now, the industrial sector is likely to see some moderation in growth as well compared to the previous quarter, but it's expected to still see fairly strong growth. Construction is expected to continue to benefit from a steady demand push led by residential housing as well as the government's continuing thrust on capex. Moving on to services. A delayed festive surge is expected to boost hospitality as well as travel, while financial services are likely to see some benefit from continuing and strong credit growth. Some of the pain points that we're going to be closely monitoring in tomorrow's data release is consumption. Of course, it continues to pose risks. We did see a weak consumption growth in the previous quarter. Whether we see some improvement from there on remains to be seen for the quarter as well as for the full year. But moving on, my colleague Maitri spoke to Sagar Daryani, co-founder and CEO of Wow Momo Foods, and begin by asking him the company's outlook for FY25 and the company's expansion plans as well. Listen in.
So last financial year, we grew by almost 75 to 80%. This financial year, we are growing by 25%. Coming financial year, we intend to grow by almost 35 to 40%. Today we had a good 500 crore business, and we want to get to a good 650 crore business in the next coming year. We intend to open some 150 to 200 stores of Wow Momo, Wow China, and Wow Chicken, which are our 3 front-runner brands. Apart from that, we've also entered the FMCG vertical, where we have the packaged momos, and now we're launching the Kappa Thuppa, the Kappa Khawswe, Chinese Bhel. So very, very bullish, very excited on that aspect. So yeah, I think like I mentioned in the morning session, that it's not just e-commerce, it's not just omni-channel, it's multi-channel, and I think e-commerce today is more driven by quick commerce. But you have to be available anywhere and everywhere. So for us, having stores being available in the shelves, doing shop and shop formats with a few larger formats, I think all of that is going to be very, very important.
Moving on to some news from the aviation space. SpiceJet shares have staged a rebound after settling a 250 crore rupee dispute with Celestial Aviation. Both parties reached out to the NCLT last week, and the matter is now officially going to be withdrawn on March 1st, according to the company. Now, without more details, let's jump straight to my colleague Charu Singh. Hi, Charu.
So what has happened is that as per a press release of SpiceJet, they have come to know that the $29.9 million dispute with its aircraft lessor, Celestial Aviation, has been resolved. The payment of all the unpaid dues has been completed. And as per the press release, the plea that was filed by Celestial Aviation will be formally withdrawn on March 1st from the National Company Law Tribunal. In the last hearing that was conducted last week only, SpiceJet as well as Celestial Aviation both submitted before the tribunal bench that they have amicably resolved the dispute and are waiting to formally withdraw their dispute. Before that also, last year, for the first time when the negotiations were disclosed to the tribunal was in October. Then some developments towards the same were made in December, and now finally the dispute has been resolved, but it's not all. Apart from this, 2 other pleas against SpiceJet by different lessors before the NCLT have been withdrawn in the initial days of this year. Apart from this, some litigation against the airline has been pending before the Delhi High Court as well as the apex court of the country. So let's see how it unfolds there.
Thanks, Charu. Now, moving on, according to the CREDAI report, housing prices have surged by 20% in just the past 2 years. Average housing prices in major metropolitan hubs like Bengaluru, Delhi NCR and Kolkata surged by 30% from 2021 to 2023. Now, we're joined by my colleague Saloni Kothari for more on this. Saloni?
Right, Pallavi. So housing prices obviously have increased over 20% in the last 2 years. And if we talk about 2023 specifically, they have increased about 9% annually. This is on the back of new demand that has come from the mid and the luxury segment, and also the new supply that's come. The supply has actually surged about 2 to 2.5 times on the back of the demand as well. And when we talk about the city-specific, categorization of how the supply and how the prices have risen, Bengaluru has witnessed the highest price increase in the last 2 years at about 21% YOY, followed by Kolkata, Hyderabad and Pune at about 11% and 10% each. Now, the average housing price in Q4 2023, which is in rupees per square foot, if you see, MMR of course tops the list of about rupees 20,000. And when we see even Hyderabad and Bangalore, they have also been pretty steep increase of 11,000 and 9,000 for that matter. Now, when we talk about the outlook of how the prices will likely to be in the coming years as well, CREDAI, the report says that the prices are likely to further increase on the back of the major developments that we are seeing in the infra space, especially certain mega projects that are coming in Mumbai and in GIFT City as well. So the surrounding areas might possibly see the prices to increase, and the demand and supply will not just be limited to the top 8 cities, but also from the tier 1, tier 2 cities as well.
Thanks a lot for that, Saloni. Now, that's all we have for you on this edition of The Reporter, but stay tuned to NDTV Profit for fresh news and updates.